Just live now.
Okay, thank you. Hey everybody, I'm Jeff over at MetaStock. It's good to see you. Thanks for coming again today. It's good to have you in here. So I do want to kind of just call out a little bit of a schedule change that we have for today. And so let me kind of pull up the schedule and just kind of talk to you a little bit
about ticker, one trade,
what's going on with it. Okay, going to Saturday, we're going to kick off with Adrian Manz today. After he's done, we're going to do a bit of prize drawing and then go directly into Anne-Marie Baynd's presentation. Unfortunately, Jacqueline has had some personal circumstances come up and she can't make it today. So instead of having her come in, what I'm going to do is I'm moving my slot where I'm going to talk about candlestick patterns and some of Steve Bigelow's candlestick patterns. I'm going to move that to in between Anne-Marie Baiynd and Sunny Harris. So Sunny Harris will then kick off after I'm done. And then after Sunny Harris, we'll finish up the event with Peter Dalal. So we have a great day. It got a little bit shorter just because of Jackie not being able to make it today. Fortunately, that just happens once in a while. And sometimes it happens more than others. So not a big deal. We kind of roll with it. And that's kind of the lineup that we've got for today. So I'm going to go ahead and kind of start. There's a couple of things. If you're watching us on YouTube, hi. Make sure to like and subscribe. It helps a great deal. We appreciate it. And we do. It does help quite a lot. In the pin comment, which if it's not pinned, I'm sure Greg will pin it right away now. But in the pin comment, if you come up and register for the event this week, you'll be eligible to win prizes. You should do that right away because as soon as I get Adrian started, I'm going to pull the prize list and then we're going to start doing random drawings for the rest of the day. So also, if you're watching us on YouTube, I think I said this already, like and subscribe. It helps a great deal. We appreciate it. And make sure to say hi. It's good to see everybody today. So today's demonstration, I'll start with a legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software add-ons. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. If, as we go through today, I have problems enunciating words, it's because I've been talking for 6 days straight. So just bear with me. Want to say thank you to all of our sponsors. AAII, you can find out about this, a great nonprofit at AAII.com. They've been in business since 1978. They do a lot of really good stock analysis, that kind of stuff. We'll talk more about them in between the speakers. AAII.com. Stocks and Commodities Magazine has been a long time sponsor of the traders conferences and trader summits, and you can find out more about them at traders.com. If you haven't yet, you should come check out our community. We're starting to build out a community site. You can go in there and live chat with other traders. There's all kinds of information on technical analysis. It's a community of traders. We're putting it together to help other traders. And you can join for free at thetradersforum.com. I want to also say thank you to the CMT Association, cmtassociation.org. Very, very good organization. We've been working with them for a number of years. And Tyler came in yesterday and he talked about how having a CMT designation after your name can be really helpful if you want to work for a bank or if you already work for a bank or you want to get recruited by a bank, cmtassociation.org. And you also get CMT after our name. Had somebody that finished her accreditation yesterday and she just was like, you know, I've learned so much about trading going through the CMT process. So, and then last but not least, Trade Thirsty, the last of the sponsors that we're going to mention, tradethirsty.com/free. Trade Thirsty has been a partner of mine and they're actually awesome to work with. I love all of them over there. If you want, you can get a free income generator ETF report at tradethirsty.com/free. So we are, of course, MetaStock. We're going to be talking about MetaStock again all day, which is one of my favorite things to talk about. It's been rated #1 31 years in a row by the readers of Stocks and Commodities magazine. We're going to run scans, we're going to run tests, we're going to go through, and we're going to kind of show you a lot of the program today. So if you want to try out MetaStock, we're offering a 3-for-1 where you can buy a month and get a second and third month for free. You can do that at metastock.com/conf promo, metastock.com/sales chat. And if you ever have questions or just want to talk to us, we'd love to talk to you. 800-882-3040. So whew, that's a lot, right? Our first presenter today is Adrian. We got him on here. He's ready to go. Adrian's a good friend of ours. I actually have his book right here. Right here, actually, around the horn. It was a lot of fun to kind of work with him regarding the patterns on these books and get them coded into MetaStock and make them into scans. He was just talking before the break about how 2 of them have been really, really successful this year. And he's going to talk about those 2 today. So without further ado, let's go ahead and get you started, Adrian.
All right.
All right, I can hear you. Let me go ahead. I'm going to make you the presenter. I was going to send you a webcam request, but it just popped up. So we're good there.
All right. Got the screen? Okay.
Yeah, I can see that. I can see you. I can hear you. I'm going to get out of the way. Your turn.
All right. All right, guys. So good morning. It's early morning here. So we are actually on Balboa Island. We're down at our beach house and just sort of have a nice weekend, nice family weekend here. We're here a lot and we trade from here a lot. So I think, that's part of, I just saw CMT's thing and the thing about behavioral finance. And, Julie and I are both, when you're talking behavioral finance, you are, really talking our game. We're both PhDs. We both, we started trading a long time ago. So we started in the 1990s, sort of dating ourselves. And we did it in grad school, right? So we were in graduate school. I was working on an MBA with Peter Drucker and a PhD in organizational behavior, and sort of focused my attention on behavioral finance, which was a really young field in 1997 when we graduated and got started with all this stuff. And we got into trading in school and had this great opportunity. So we went to school out here at Claremont. Got our graduate degrees out here and in California. And we had the opportunity to get a lot of data from the New York Stock Exchange. So as far away as you could possibly go to collect data, we went to collect data just because we were young and difficult and trying to sort of make a name. And it worked out great, right? It was a really great decision. Got to work very closely. Spent a lot of time down on the floor of the exchange, spent a lot of time at the Barclays booth, spent a lot of time just gathering data. And that data became the input then for just about everything that we've done since. And I've written lots of articles about this stuff. For those of you who know us, I hate to keep going through, who we are and what we do, but for those of you who don't, I think it's sort of important to know where we're coming from. I write a lot of just sort of inputs for things. We've got a very rich article archive at traderinsight.com. There's an article just about every day about something very specific to intraday trading. So we're intraday traders. And what we focus on are market cyclicality and cyclical patterns and how they relate to trader psychology, and where all the market cycle stuff is all driven by human psychology. The behavior of the markets all comes from decisions that are made by humans, and even in an era where AI is running the show, it's really the case that AI is still driven by the way that human beings make decisions and all the algorithms, whether I program them or a computer code goes and optimizes things, or wherever they're coming from human ideas, and human ideas are all based on these ideas that come from market cycles. And that's what Around the Horn was about. So Around the Horn, a trader's guide to consistently scoring the markets. Jeff's got a copy of it. lots of people had copies of it. That was a bestseller for a couple of years on Amazon. It was the #1 book in stock trading. And it's out of print right now. So it'll be back in print, I promised George, my publisher, this January or February. I will get the final copy to him, and it'll be good to go. And the difference is going to be this time, it's got a couple more patterns in it that Jeff's going to have to go and code for MetaStock. And then it's got a big section now on trader psychology. So the first time around, it was called a multivariate analysis of covariance in the US equities markets. And the publisher said, your mom's probably not going to buy 10,000 copies of this, so I need you to call it something else. I went and I put together this baseball analogy. Everything's a metaphorical twist on baseball. So the patterns I'm going to talk about today, fastball and infield fly, you'll see why they're called that. They just sort of look like things that happen in baseball. Go Dodgers, we won the World Series again. That's terrific. But the book is really intended to focus your attention on the cycles that the market goes through and sort of how you can predict what the behavior of the market is going to be based on what cycle it's in. And the scans that MetaStock has go through and pretty much perfectly will pull the data that the patterns represent, because the patterns are all visual, right? We took all the statistical stuff out of the book and did it all as a visual sort of pattern recognition kind of a thing, which is great because traders can focus then and find these things pretty easily. But the software does a great job of finding them. If you have the software, if you're buying the software, if you purchase the software, let Jeff know to pass a note to me, and I will make sure that you've also got access to my, I do a subscription version of those trading plans. And then what you can do is take the stuff that the software generates and compare it to what I generated and compare it to what you picked from the software picks and sort of hone what you're doing with the trading platform. You're gonna like it. It's really good stuff. So we also do a show, Trader Nation, was on Scripps, and Scripps has gone and taken their scripted news division and shut it down. So I guess we are looking for a new network and doing some stuff online currently, sort of podcasty or live stream kind of stuff until we find a new home. But you can do a daily live stream with us. Just all you need to do is at the end of this thing, I'll give you a link to sign up at traderinsight.com. Make sure you put a phone number in there that you can get a text message at. And what we do is we just zap out a text every time that I'm going to go live. I talk about a lot of stuff in these things that have to do with trader psychology, but I also focus people's attention on what it is that Julie and I are going to be doing next during the day, because we are full-time traders. We trade the equities markets from opening bell to closing bell every single day. We take about an hour and a half break right after the open. So we've got from the open through the first hour of trading, that's sort of the power hour for us, if you will. We do opening gaps, and we do an Apple arbitrage trade, and we do some stuff that our boot camp guys, here's the boot camp, they work with us every day. You're welcome to join us in our war room online and take a look at how we do this stuff. Just understand most of the guys in there have been through our mastermind training. Everybody in there, this is, so you're looking at a couple of photos here, because what I want to emphasize real quick before we get into the patterns is look around those rooms, look around those tables. Every one of those guys comes from some other background, comes from some other thing that they did before they traded. And the biggest, I can teach anybody how to trade. I've taught a lot of people how to trade. I teach 20 people. We do these boot camps yearly. So every spring we do a boot camp. It's just 20 to 25 people are going to be there, 20 new at most. Most of the time there's 5 or 10 alumni who are there. The alumni keep coming for free. If you look around the room, they've all learned how to trade. What they all have to overcome is what they bring to the table, right? Their personal psychology. So if you're risk averse, if you have too much risk tolerance, if you are, a procrastinator, if we go through all that stuff and try to sort of weed out what it is that prevents people from succeeding, because we know that our patterns work. We know that our trades work, right? We've got on our website, we've got blotters that go all the way back to 1997 to show you, how these things have played out over time. There's a fresh update every single day. The trick is taking the guy, the guy in the red shirt there, he's a food photographer. The guy next to him in the black shirt, that's a police officer. The guy in front of him is a guy who owns a limousine company. I can go right around this room. There's an attorney, there's a physician, there's a guy who owned a chemical company. There's a guy who was an Air Force pilot. You go around these tables, and as you can imagine, everybody has sort of a different psychology in terms of where they came from. And what they know is they were successful at what they did, and they expect to have sort of instant success when they're in the markets. The way we usually wind up with them is once they start trading, they find out, oh, well, wait a minute, right? I know what I'm doing, and I've got a strategy that seems to make money, but I'm not making money consistently. So what's going on here? That's when they come to us, right? They want consistency. They want to figure out how to put something together that's just gonna, get them in front of the opportunity and get them, consistently profiting every day of the week, as much as you can profit every day of the week. And that's our job. So that's what we do. We love teaching, right? We're both PhDs. We thought by this time in our careers we would be teaching at a university, and we got wrapped up in trading and just love it and love the freedom, right? We travel all the time, and our kid is homeschooled most of the time. He goes to school twice a week, and he's doing great, but he's traveled all over the world. He's had this fantastic life, and it's all because of trading. So to get you there, right, what you need is a strategy. You need tactics, and you need discipline. So I can show you the strategies, I can show you the tactics, and the discipline is all about what's going on in your head. I tell people all the time, we call our trading room the war room, but really the war room it's between your ears. You have to be able to take what's in front of you and make it part of you if you're going to be able to be successful at this. Because I can show people how to get in front of a really good opportunity for a trade, and then I put them in front of it, and the first time they're looking at it, what we see is, well, I didn't take it because I thought the market was going to go the other way. I didn't take it because I was waiting for a double confirmation. I didn't take it because there's always a reason. Or I got into it early because boom. Following the strategy is hard for a lot of people. I'll just tell you this. It's just a difficult thing to do. And that's where you're going to have to put in most of the work. Most of the work is on you, is on figuring out how to make your personality jive with trading, because trading is unlike anything you've ever done in your life. So in our world, everything's about workflow. So for Julie and me, the market is not after 30 years as professional traders. So people always tell us, you got to tell people you got 60 years of combined experience. And no, we don't want to tell people 60 years because we don't feel that old, but we've been at it for 30 years. And our success has been, largely facilitated by the fact that we take a workflow approach to trading. What we're going to talk about today is the first chunk of our workflow. So I'm not going to talk about the pre-market trades. I'm going to talk about the pre-market program trades. And those program trades that we're going to focus on are these around the horn NYSE trades. So we also do a bunch of NASDAQ trades. That's a different animal, different kind of a trade. We do an arbitrage trade in Apple on the open almost every day of the week. Just depends on what it's doing in the pre-market. If you join us in the trading room, you'll see live, what I'm talking about. That's sort of a whole different discussion. And then we do this volatility band trading that I think I did last time I was here speaking for MetaStock. The volatility bands, those are sort of the last part of the day. Right at the 5-minute mark, we do opening gap trades. So 5 minutes into the session, we're trading opening gaps, and we do that until 7 a.m. Pacific time, 10 a.m. Eastern time. What you should get from this line here is we're very, very organized about what's going to happen at different times of the day. And that's super important because if you know exactly what you're supposed to be doing, it takes just an enormous burden off of your shoulders. You don't feel like I've got a couple of guys who really try to be in front of an opportunity every second of the day. And I just tell them, you know what, it's not likely that there's going to be an opportunity every second of the day. The important thing is to know what part of the clock you're working on. We've actually got a trader clock hanging on our wall that you'll see when you look at our live streams. Those are from our trading office, actually, at home up in Pacific Palisades, up in Malibu ways there. And the trader clock goes through and breaks down the day and says, here is the time of the day that we're at. Here's what you're supposed to be doing. So with that said, the part of the day that we're going to focus on today revolves around sort of what's going on in this spreadsheet. This is a blotter of this year. And this breaks it down. This is the summary sheet of what's happened this year. And you can see here in the way that these go around, and you can find this on the site. You can go to just results, and you can see these results all the way back. I think we keep 10 years worth of results on the site. It's month by month. It's trade by trade. Goes through every single thing that we did. The weekly trades you can see here. On 11.5, 11.6, 11.7. These are the trades that are generated. They're infield fly, switch hitter, fastball, right? That's what FB stands for. Double header is DH. I'm going to look today at infield fly and fastball, because if you look at the pattern profitability, the pattern distribution, first off, in the top left corner up there, see the blue wedge of the pie and the red wedge of the pie. Blue wedge is infield fly, red wedge is infield fly, sorry, and the blue wedge is fastball. Those two presented a lot this year. And you can see they also triggered a lot, which is good. They were mostly shorts, and the shorts generated most of the profits for the year. And if you go down and look at the overall profitability, $100,000 account allocated 4-to-1, right? Not that you're going to allocate everything to just this strategy, but if you do, $109,000 return on a $100,000 account, you're working it, right? This is not a passive investment strategy. This is not I'm going to go to work and let my investment advisor do it. This is you're sitting in front of your machine and you're making these trades. But you can also see just sort of the unleveraged result is $50.62 per share traded for the patterns, and almost $37 of that per share comes right from fastball and infield fly. So depending on how you break these down, depending on how you allocate your money, it's very, very lucrative. You can see that it is the patterns are great. You can scan for them with MetaStock. It just you run the scan, go get a cup of coffee. It takes a little while to go through and really grind the data and find things for you. I scan just the NYSE. I scan just stocks that are trading over $30 per share. I only scan stocks that trade 350,000 or more shares per day, and I only scan things that have a travel range of about $1 per day or more, right? So I try to narrow it down. You're looking at about 1,000 stocks. It takes it about 10-15 minutes to go and run the scan and find all the patterns for the day. We're going to focus on just this past couple weeks today, and I'm going to grab all the infield flies that triggered, all the fastballs that triggered, and show them to you and show you how you set these up once the scanner gives them to you. I might have put too much in this presentation for the time that I have. I should have asked Jeff if I could have had that other speaker's time, but it's okay. We're going to go through them. If I have to skip a couple, we'll skip a couple, but you're going to get the idea. You're going to see, what it is that we do and how it is that we do it. So here we have one. This is going to be a fastball expansion of range and volume. I'm going to show you the pattern. I'm going to talk about the strategy, right? Effectively, what you're looking for is you want to break out from a pullback or a consolidation. It needs to be the widest range of the past 10 sessions. So you want a big, wide bar, 2 weeks worth of data, and it's just, showing a really significant expansion of what's been happening. We want to see, generally speaking, greater than average volume. I don't have MetaStock filter that for me. I like to look at that myself and just sort of go back and, when I'm sort of vetting the scanner output, I like to go back and just look at the volume independently of a scanner and just see, okay, well, what's the curve look like? What's it look like over the last few days? What I'm going to do is I'm scanning daily bars, and I'm going to enter tomorrow beyond the extreme of today's bar. So for a long, we're going above the high. For a short, we're going below the low. This is the pullback variant of it. You've got a daily chart trending up. It pulls back. Then we get a big wide range bar. It's the biggest move of the past 10 sessions. And we're just going to look to get long 10 cents above the high of that in the next day's bar. And we trade these from intraday 5-minute charts then. So we find them on daily bars. We trade them from intraday bars. Here's the pullback on the short side. Same thing. You're just looking for a downtrending market, pulls back. Had somebody the other day who said, you know, she just doesn't like to go short because she can't wrap her head around it. And you know, what I'll tell you is just wrap your head around, you're making a market, right? My trading is order flow trading. And all you have to do is imagine I'm a buyer here, I'm a seller here, and it doesn't matter if you have the stock to begin with. So you're just going short just means you're selling something that you don't have and you're buying it back later. It's limited risk because you're trading intraday versus daily. You're not going to get a big gap overnight or something. You're just trading the order flow. You're making a market. The consolidation version of this is pretty much same idea, right? Except that it can go either way. So in this case, if you've got a trending market, it's going up. Then it gets into a sideways consolidation and it breaks out to the long side. We're going to get long 10 cents above the high of that breakout bar that pops out of the consolidation. So again, these are daily bars we're looking at here. Short side, going to be the same thing, except see, it could be in an uptrend, go sideways, and now you break out lower. That breakout to the downside, you're going to go short 10 cents below the low of that bar. If it's a trending market down, it goes sideways and it breaks down, go short 10 cents below, trending market down, consolidate sideways, winds up being an accumulation range. You've got to pop to the upside and you're going to get long above the high of that bar. So 10 cents above the high, you're going to get long, 10 cents below the low for a short, you're going to get short. It's a really easy concept to understand, but as you saw in the results, this thing generates a lot of profitable trades over the course of a year. So here's an example from that sheet that I showed you. Oh, that should be Toll Brothers. I don't know why that says GIS. I probably duplicated a slide and used it later. So Toll Brothers has on a, no, it's General Mills. I'm sorry. So this should be General Mills, GIS. So GIS, this is the consolidation version of the setup. And so GIS goes, it's trending lower. And you know, you can see here, let me just get a pen for a second. You can see here, right, it's coming down. Yeah, right. So you get a downtrend, and then you get your consolidation, and then you get this bar here, right? That is the widest bar of the past 10 sessions. It goes and it is, you know, just making this expansion move. And then once you have the expansion move, you're ready to set it up. So what happens is you get from MetaStock a list of all the things that set up this way. And what you need to do then is focus your attention on, well, you know, which ones are the best setups. And the way you set them up to figure out if they're going to be on your trading plan for the next day is like this. You go and you break down to the time frame that you're going to trade them in. So you're looking at this on a daily chart and it says, bam, there's the pattern. Next thing you have to do is figure out, well, how am I going to trade the pattern? So you knock it down. You go, you know, MetaStock, you click on the time compression thing at the bottom and you say, now I want to look at 5-minute bars. Where do I see intraday support and resistance? And, you know, I'm going to tell you, when I'm looking at these, I'm going to add volume, and I also add volume by price. There's other things that you can add here that are going to make the data clear. But for today, let's just look at price. Where do you see support or resistance that makes sense in terms of, if it breaks through there, I think something's going to happen that I don't want to be part of. So you see these guys right here, the highs, right? You know, you got this range right here. And what that's telling me is, all right, if I go and I break up above those, I'm gonna let it test them. But if I break up above them and I get into here, into this range here, this thing's gonna take off and it's gonna get up into this range up here. And I don't wanna be part of that. So what I'm identifying here is that's gonna be where I put my stop loss. Confirm it with volume. Go through and see, you know, how much volume was there here, how much volume by price is there here. But for now, just look at price. If it gets up above there, I'm assuming it's going to go higher, and that's where I'm going to pull the plug. Because what I'm looking at here is on this fastball setup, This is institutional selling pressure on this day. There's been a persistent trend over the day. It's going into the end of the day very weak. There's persistent selling into the end of the day. They're selling right at the lows. That tells me tomorrow morning, if the market opens and they did not get done today what they needed to get done, tomorrow morning they're going to come in and do it again. And as soon as this thing ticks against this bottom and starts moving lower, they're going to try to start liquidating whatever they have to liquidate yet pretty quickly. And where is it going to go to? Well, now we bump back out to the daily chart. On a daily chart, you want to do the same thing. Just draw a support and resistance line, and you can see that what I've done here is I've gone and isolated. This is not exact science. You want to go through and you want to isolate, where do I think, oh, that's a terrible drawing. Where do I think that price is likely to consolidate again if it gets there from above? And you can see here, highs, lows, opens, closes, all sorts of things are aggregating right there. And that tells me that this is going to be a first stopping ground if price gets down to it. There's a very likely place that price is going to inflect, and intraday, we're in the business of predicting inflections. So I put together my trading plan, and I want to figure out, are the ratios on that trade right? I know where my profit objective is. I know where my stop loss is. So on General Mills, I know it's a fastball setup that tells me it's an expansion of range of mine. This is my actual trading plan for the day, right? I put these out every single night. These are on the desk. We've got gouge sheets that tell us this is what you're going to do when the trade happens. It's an expansion of range and volume. It's on the short side of the market. So I know I'm getting in 10 cents below the prior day's low. My entry is going to be $65.76. So I'm going to go short 65.76. My stop loss was 66.17. So $66.17 is my stop. $65.16 was my target. And that gives me a ratio on the trade of $1.46 earned for every potential $1 lost. So that means that I've got a good ratio. I'm right side up on it. 50% to the target. That number's there because at 50% to the target, we move our stop to risk-free, move our stop to break even. And at 10 cents to the target, we move the stop to 50%. At the target, we take our money. So some of these extend. You will never see us report an extension. Our sheets on the site, our performance is strictly based on entry, stop, and target. What happened? Did it hit the entry? If yes, did it hit the stop? Did it hit the target? That's how these things are reported. We've got the floor trader pivot lines in there because I use pivots as part of what I'm doing. I look for the relationship to the central pivot over the course of the session, try to figure out, can I get early entries on some of these things? Those are sort of advanced strategies. But we use pivots in our trading, and so they're on the plans every day. So now let's look the next day, right? How does it play out? So the market opens, and we don't get a trigger until a little bit later here in the session, right? We get a trigger here. We've got our stop up here. It tested the stop earlier in the session, and actually this is the next pattern that I'm going to talk about, this infield fly pattern. So if you were watching, you had an eye on this and you weren't trading a bunch of other stuff right at that time, then you had the opportunity for an early entry on this infield fly. Would have got you in, for about an extra 50 cents per share before you ever got to the entry price, actually about 80 cents, 90 cents per share. But the goal here is just to automate these. So we trade these with full automation. We've got these just running on their own. And if it gets you in, it gets you out down here at the profit objective. So you can see in this case, the parameters that we put on the trade, very precisely controlled or managed to hang on to what the market was going to do. It didn't go far beyond where we anticipated price was going to go. And so we're happy that we got out. We're happy that we stuck to our plan. And that's part of the behavioral psychology, right? You want to have this, the behavioral finance of the thing is you don't want to second guess yourself all the time, because sometimes they extend. And when they extend, what I always get is, even our guys who have been with us for 10 or 15 years, they say, oh my God, that thing went another $1, went another $2, that I could have had a part of that. And whoa, not so fast. Because most of the time, that target that we set on the trading plan winds up being dead on, because it's not because we've got a crystal ball or we're oracles or something, right? It's because it's coming into an area that there was heavy pressure once before. And if there was order flow sitting there, back on the chart, if there was order flow sitting here and there's order flow sitting here, then it's very likely that when you get here again, that you're going to meet that same order flow, and that's going to be as far as the excursion on that setup is, because at that point, what happens is that selling pressure meets some buying pressure, and that buying pressure satisfies what needed to get done, so they're finished. Okay, sometimes it's not the case. Sometimes they keep going. Like I think ResMed here, RMD, this one did just that. This one went further on us, but we don't care, right? Because it's plan the trade, trade the plan. That's the measure of success that we're looking for, because that's how you can stay in the game. Here it is. This one is the pullback variation of this. So I told you there's two versions, right? And this one is exactly that. So this one was trending higher. So we have a big uptrend. It never wants to draw. And then we have this pullback. Let's move back up into the trend, and then we have this pop down. So when we get the move, now we know we've got a wide range bar. It's on heavy volume. It's back down through significant support below. 10 cents below the low of that bar is where we're going to want to place our short sale order. So now we go through and we start picking the trade apart. Now let's break it down to a 5-minute chart. We get into a 5-minute chart, and we see that we've got very heavy selling all day long. And then when we get into the tail end of the day here, we have a couple levels that represent pretty significant resistance. And it's really that part of the day where we're going out, right? The part of the day where it's selling off into the close that I'm most interested in, because really, if it violates this like 236 level here, or just about, whatever this really winds up being, if it gets up above here, it's going to wind up all the way into, the high 237 range, almost 238. And if it gets above there, it's really going to take off to the upside. So I'm focusing on what happened at the very, very tail end of the day. And I'm going to put my stop loss right there. So now I'm setting this up, and I say, all right, if ResMed gets above that line tomorrow, I don't want to be in the trade. That's where I'm saying they've probably gone and exhausted their whatever they're trying to sell. It's come into some sort of support. There's buying pressure there. It's sort of undoing the reason for being in the trade. Now I go out to the daily chart, and I've got support, pretty close by recently. So there's other places that I could say I'm going to target, but I could target sort of right in here. I could target even lower than that. I could say, do I think that maybe price is going to wind up down in there? But the reality is I'm going to focus on what's closest. I'm going to focus on where is it that price is going to inflect after I get into the trade. Is that far enough away that I've got the potential for some decent profitability? So on RMD, again, right, I've got it identified. So on my trading plans, you guys have access to all this stuff, for the next 2 weeks. So I would take advantage of it. It's going to be free to you. Go through and look at this, and then you can make a decision. Do you want to join us in the room? Do you want to, do the scanner and work with the scanner to find these things one way or another? We're doing the heavy lifting for you. We can turn this into. This is a 10-hour-a-day job for Julie and me sometimes, because we're trading 6.5 hours and then doing the research and putting the plans together and everything for the next day. It can be as much of the day as you want it to be. It can be as little of the day as you want it to be. You just have to make a decision on how it fits into your life. But you see here, the plan is it's very precise. It's put together in a way that says, here are the entry points, here are the exit points. 235.26 is going to get us short. Then we've got the stop that we set was 236.20. The initial target on the trade was 233.96. Got a ratio on the trade again that's acceptable. Anything over 1-to-1 is acceptable, and for me that's because the ratio of winners to losers is very high. So as long as it's a better than 1-to-1 ratio on my profit, but potential profit to potential loss, I'm willing to put the trade. And then, we see that the 50% to target level, again, that's just a money management stop. If it gets 50% to target, we're going to move our stop to break even. 10 cents to the target, we're going to move our stop to 50%. At the target, we're going to take the target. Got to be conscious of those resistance lines, those pivot lines. 239.51. That's pretty far above that entry price. So it's doubtful that it's going to move $4, against the position before it would trigger. But if it did, I'd be looking at 239.51 as a potential place to take an early trade and get short ahead of the entry. But in this case, like I said, $4 is pretty far out there for me. So how did it set up? How did it do? Here it is. It opened. It ticked higher. It got down into our trading trigger. It triggered. It immediately went to the profit. And then, right? So it goes and it puts in an extension. And, this stuff will make a lot of you crazy, because you're looking at all of this and you're saying, oh my God, I could have had so much more on that trade. What am I doing here? The reality is you don't care. So for us especially, we're putting these trades and we're automating this, right? My whole goal is to be able to put this stuff out there and have it take care of itself. You can't tell the computer, hey, go get me every penny that you can possibly get me on every trade that I'm in. So on the daily chart, where did it wind up? Right, it wound up making it down to that next level of support and resistance. So I guess one of the things I want to show you here, and the reason I didn't put other indications of any kind on the chart today, is just drawing these lines is pretty powerful stuff. Going through and looking for support and resistance, going through and trying to figure out the behavioral finance of why support and resistance is there to begin with. Because it's not just lines on a chart, it's human decisions that were made at each one of those points on the chart. And what they tell you is, you can anticipate. Bernard Baruch said, 150 years ago, said, successful speculation is the art of anticipating the anticipators. And that's what this is. You're trying to figure out, where is that order flow going to be sitting? What are people waiting for? What are computers waiting for? What's going to happen when price gets to a level that it's been at before? And you can see it stopped dead on at that next level of support. Could you have had it? Yes. Is it unlikely that it's going to make that big of an extension based on all that support that was right at the place that we, set our target? Probably. It was probably most likely that it was not going to chew through all of that. It did. Are we wrong? No. Because what we did was we planned the trade and we traded the plan. This is not about being right and wrong every day. This is something that we see over and again with the people who come to the boot camp. We have got a fundamentally screwed up idea in this country of what it is. Everybody's talking about, you got to get the ball across the goal line. You got to knock the cover off the ball. You have to knock it out of the park. Everything's a sports metaphor where if you didn't do everything to the maximum that it could be done, you are somehow a failure. Or if you lost money on a trade, you failed. If you made money, you won. And what that winds up doing is people start taking lots of little gains because it feels good to win. And then they don't take their losses because it feels bad to lose, and they wind up with bigger and bigger losses, smaller and smaller gains. I'm pretty sure that's a recipe for disaster, and you are out of business pretty darn quick. So we've been doing this for 30 years, and I'm going to say that's how we've managed to keep doing it for 30 years. No good days, no bad days, just days. And when we end the day, our measure is, were we successful, yes or no? The success is based on, did we do what we were supposed to do? Nothing is more frustrating to me than a trade gets to the entry and I didn't take the trade because I thought I saw something. That's where, whether it winds up being profitable or not, that's the frustration for me, is I need to work like a machine. I need to work like a robot when I'm doing this, because once your emotions get into it, you're already done. Here's the next one. Here's that infield fly setup. So again, MetaStock going to do a great job. So you run the around the horn scanner in MetaStock, it's going to do a fantastic job of finding these patterns. They're pretty straightforward in terms of what you're looking for. So infield fly, if you are, I know we've always got overseas people at these things. If you are in Europe, or if you're in The English version worldwide that Harriman publishes of my book, this is called an extension reversal. If you are in Italy, it's going to be written on a soccer metaphor, right? So you've got like bicycle kicks and all that kind of stuff, but it's all the same pattern. And what this one says is you've got to move higher on a daily chart. And then you have, ideally you have a gap move higher, and ideally you leave sort of a long tail on that day. So you get a move up, it pops, it opens low, it travels high, and then it closes down low again. That's really the gist of the pattern. So I know the candlestick guys call them, dojis or stars or something. I don't do candlesticks. Julie does candles, right? Julie likes to trade from candles. I like to trade from bar charts. It's all a matter of personal preference, right? So whatever fits your psychology is what you need to do. I used to tell people, I think best in bars, which probably says something about me. But bars are the thing that work for me on a chart. So again, you're looking at, in this case, a short only pattern. So we've got something that's making a big move up, makes a high, puts in that bar that I'm talking about, right? Opens low, travels high, closes low, and then we're going to go short the next day, 10 cents below the low, and that's where we're going to trigger the entry. So this is what this one looks like on a daily chart. So again, I've drawn it, but the drawings are just horrible for some. It's you're traveling up, and then you get that bar that I would prefer on an intraday chart. If you're looking for all these patterns, work intraday as well. MetaStock will scan for them intraday, so you can go and run an infill fly set up on a 5-minute time compression, and MetaStock's going to find you all the stocks that are putting that pattern in intraday. It works great intraday. Intraday, they're better if they open low, close low, and that thing is like almost a flat line at the bottom. On a daily chart, it can gap up, and the most important thing is that it winds up from the opening gap, it winds up closing down in the bottom of the bar. So this one's been hugely profitable again this year. Fastball and infill fly are generally two of the most profitable patterns. One signals the beginning of a big wave, higher or lower. That's the fastball. That's usually the start of a trend. Infield fly is going to be a pause in a trend. It can be the beginning of a counter trend, but it tends to be pretty darn profitable when I get in front of it. There's rarely an infield fly that I'm not putting on the trading plan if it sets up, because I really like to be in front of this opportunity. So here he is, Toll Brothers. You see it here. It gapped up, last bar on the chart there. It gapped up, closed low, and I see that, especially when it's up against a prior high. So now you've got this double top in place there. You've got the stock open high, closed low. It says it's probably weak again. We've got the intraday chart we pull up. So right away, drill down to that 5-minute chart. There's before you do too much thinking even about what's going on the daily chart, you want to get into that 5-minute chart and say, where am I going to put my stop? Because it's important to know what the risk is going to be. And, in my eye, this is like a good place to say, if price gets above here, I'm violating a bunch of stuff that has happened over the course of the day. I'm violating where we went out of the trading day, and I'm getting back up into the travel range in a spot that I don't want to be. So if all these things are lined up on a chart like this, and you go out into the end of the day and it's coming in, sort of flat into the end of the session, and then you see, oh, well, my selling is going right into that closing bell, then if it gets above that last wave of selling there, that's, the last hour of the trading day, goes by. If you see that you're going out weak, then you're going to put the stop up above there. So we've got our stop, we've got our target on a daily chart here. You can see again, the target comes from, back in March, beginning of March, middle of March. You've got, a lot of stuff going on right in there. And I'm going to set my profit objective there. I've got a close of a big bar higher that happened right there as well. All right, that tells me there's going to be some sort of an inflection here, because a close there, then it tried to go a little bit lower, it inflected, came back up again. So that spot on the chart to the eye is the first place. You don't want to overanalyze this stuff. I've seen guys sit down and they're drawing support and resistance lines, and I'll say, by the time you've drawn these lines, they're not going to be a market anymore. I don't know what's going to be traded, but you can't take 100 years to draw these. Your eye just has to go to the chart and say, here's where the levels are, here's where I think the inflection is going to be, this is how I think the market is going to react. Is a big part of what we do at boot camp, is just drill this stuff. So right before those guys even come to boot camp, they've been through 40 hours of online training. It's a very developed, it's a university quality course. They've gone through a 650-page workbook on all this stuff. This is about learning how to think and learning how to think quickly about what's going on in the market. Because once you can do that, you can vet these things very fast at the end of the day. It takes me about an hour a day to go through and put together 3 trading plans for the next day. So you see here, Toll Brothers, again, we know it's an infield fly. That means it's an extension reversal. We know our position is short. We're going to get in 10 cents below the prior low, 156.89. Our stop going to be 157.73. Target's going to be 155.34. That's from the daily chart, right? The stops from the intraday chart and the targets from the daily chart. Ratio on this one is 1.85 to 1. And we know that if we get down to 156.12, after we get into the trade, we're going to move our stop to break even. And then if we get 10 cents to the target, we're going to move our stop to 156.12. Got our support and resistance lines. And real quick, what I do, right, is I'll just go and look at my entry, 6.89, my pivot line, 8.03. Okay, well, if it opens, if they gap it up and try to keep it up there, if it gets up to 158.03, I've just got an opportunity for it over the entry. So if you wind up working with these and you're trying to wrap your head around what to do with the pivots, shoot me an email and I can go through that with you. But here it is. So stop triggers an entry after the market opens again. So we get this. We get this move. There's rules about what has to happen in order to get an entry trigger if there's a gap. In this case, we had the gap. It went and it met the qualification rule. Whoops. And after the order or after the price action qualified, then we had the entry, and you can see went straight down to the profit target and kept right on going. Right. So I'm out at the target. Am I upset that it kept going? Not at all. Because what I want to do is make sure that I've got a plan on my desk that I can follow exactly, that the machine can follow exactly, that I can get into and out of in a way that makes sense. So if you look at the daily chart again, you can see, the extension, was down to where that orange line is. Again, that orange line would have been the next place that we would have probably said this is another support and resistance level. That's why I've got it drawn where I do, not down at the absolute low of the bar. It's all right. Again, you're not gonna catch every penny of every trade. You have to get that idea out of your head. You have to be in a spot where it's okay to have a plan and work the plan over the course of the session and reward yourself for doing things the way you were supposed to do them. And here's another one. So here is, I've done everything now. These are going to be all the fastball patterns that triggered and all the infield fly patterns that triggered so far in November. And, for the 4 of them, you can see why this is going to be representative of 2 of my favorite strategies. This is block, right? So this is SQ. And you see it's got that long tail sort of variant of the infield fly. So this one didn't gap, but it sure put in a long bar above that prior bar. So you get this big extension, and that extension, you can see those last 3 bars on the chart, they really just plow higher, right? Boom, boom, boom. And then you get you're just waiting already. You're waiting for that reversal bar to put in place. And once it is, you look at this chart, and now you say, all right, I'm interested. Let's drill down. Let's go down the 5-minute chart and look at what's going on. And now this should, even if you're brand new to the way that I do things, this should just really pop out at you. That's my stop, right? My stop is going to be above that closing range there. That's where we had just a big push into the close. stayed down in the lows, didn't participate in the rally that everything else had going on the closing bell that day, didn't participate in anything. This just closed out right down at the lows they were selling. It was persistent selling pressure into the close, even after what looked like a meeting with supply, right? That dip that it has there, that reversal pattern is actually called a double header. That's another thing MetaStock will scan for. That's another thing that's in around the horn and on all our trading plans and in our intraday room that we do. That's a pattern that we love, but it didn't make a big reversal from there. It just got up to that prior resistance line and then started selling off again. So I'm comfortable with this as a stop out. That's going to be where the stop loss is going to be. And then I look at my daily chart and I say, that's a great place to put a target. Right at this support, that's where I think price is going to go. I've got lots of stuff that's happening on the chart there that says, man, you know, most likely this is going to be where price winds up. And then if I go and I look at my trading plan, everything's set up again perfectly, right? So I can put these things in. I can load these into my trading software. I can load these into my platform for execution. It just takes some if-thens. So if last price is higher than 85.15, then sell short stop limit, right? It's an infield fly. I'm short. If it's higher than 85.15 at the open, sell it short, stop limit, 85.15 stop, maybe 85.05 limit. And then I'm going to have a stop loss on the bracket order that I put in at $86.40. I'm going to have an initial target on this, $83.38. Ratio on the trade again, 1.42 to 1 in this case. I know that I'm right side up. And if I get down to 84.27, I'll move my stop to break even. 10 cents to the target, I'm going to move my stop to 84.27. At the target, I'm going to take my money off the table here. And here again, in this case, I'm getting in 85.15. The pivot's up at 87.02. If the stock opens a little bit higher, if it's close to 87.02, I might put the trade on early at the pivot line, looking for a push back down into that range. And then over the course of the day, here's what happens. You know, so this one triggers, and this is one of those cases where by not putting that profit objective way out somewhere, by not saying, oh my gosh, you know, I'm gonna try to get $2, $3 out of this, I'm gonna try to get back all the way down into that range, we went to the logical profit objective, and the logical profit objective was exactly where this thing wound up. The trading plans you were looking at were developed the night before for the next day. So we didn't have the benefit of hindsight when we put those plans together. Those plans are published and time-stamped on Trader Insight every single day. Back to 2006 is where the archives of the plans go. So you can always see what did they have planned the night before for the next trading day, and then how did that play out. There's no smoke and mirrors. It's just reality. It's exactly, here's what we think is going to happen. Here's what did happen. Okay, so I'm going to take some questions. If you have any, I've got a few minutes left. If you want to give it a shot, if you want to come in and join us, you know, you're more than welcome. Anybody who's here, you can join us for 2 weeks. It's traderinsight.com/trade, and that'll give you a 2-week trial. If you fill that out and you want to do the morning live stream, I mean, I'm really on there. Just, you know, you can go and look at some of the archives of that stuff. The morning live streams, you know, I'm coming on and I'm just saying, look, here's what we're focused on. Here's what we're doing. It tends to be about 11:30 Eastern time. Anywhere from 11:30 to 12 a.m. Eastern time, you'll get a text. The text is going to say, Adrian's going live. It's about a 10-minute thing. I go through, I look at what's sort of a forward-looking thing for the rest of the day. We're not talking about we made this much money in the morning. What we're talking about is here's the opportunity for the rest of the trading day. So sign up, and you got nothing to lose. We're not going to pester you or anything. You just, you know, if you sign up, what I would say is show up. Right, show up every day. This is about actively trading the markets. It's about you know, participating in the markets and being part of what's going on, and you know, being able to capitalize on the opportunities. So, does anybody have questions? I think you can type them in the chat.
Yes. Yeah. Let's see. William says, is it possible to get an autographed copy of your book?
It is. It is. So William, shoot me an email, adrian@traderinsight.com. So it's just ADRIAN @traderinsight.com. Anything else? I hope I didn't go too fast. I really just I wanted to cover a couple examples and get everybody on board. You can always watch the recording, right? You can go back through and slow me down.
He also said go Rogers, so there was that. He wanted to know if you have a squeeze play strategy. Thanks for the question, William.
We do. We have we do things on. We'll go through and focus on open short interest. We'll focus on really the biggest squeeze type thing that we do would be intraday. So if you join us in the room or if you watch the live streams, you'll see where what we'll do is focus on the order flow. And when you're looking at the way that things get into, I've got this thing that I do it's too on the fly, it's too discretionary to really have a program like MetaStock go through and set it up for me. So what I'm doing is I go through during the day and I analyze the order flow in the market. I look for where the market makers are, participating as buyers and sellers, and then we'll go and it's sort of like a Bollinger Band, but what I set up instead. So these are all just 2 standard deviations, whether it's Bollinger or mine, or let's call them Manz bands. That sounds horrible, but you set it up. I set up 2 standard deviations of volatility. And then what we're looking for is the market tracking sideways in an order flow channel? Is it getting into 2 standard deviations outside on each side in terms of volatility? Can we identify support and resistance clearly? Can we identify an anchored VWAP? And then, there's a squeeze play there of just understanding when it gets to each one of the levels, what the likely pressure point is going to be. And that's also, so if you go to the trading recap on traderinsight.com, top right corner of the page is where you're going to find the menu items. Look at the trading recap, and then you can see, I think yesterday we had 5 of those setups. 4 of them were, I think, Tesla, one of them was Microsoft, and I think over the course of the day we put up $8 per share traded on that setup. So that's that type of a thing.
Mustafa wants to know, will this work on a higher time frame, or are small time frames better? He mentioned a weekly.
So I trade them the way that they are around the horn. If you want to, there's another book that I called Trade Secrets, and Trade Secrets is all about bumping them out to other time frames, because I got that question a lot, and I was managing a hedge fund, and the hedge fund was doing exactly what you're talking about. So what you want to do in MetaStock is if you're scanning for the setups, scan for both. The daily charts are still great because you can look for sort of stocks that have wider range of potential profitability, but also scan on a weekly time frame. So you can go out, daily, weekly, even monthly on the chart. The difference is going to be you're going to have sort of wider targets, but you're going to have wider stops. And on the larger time compressions, what we've found is that's where it's really suitable for guys who are doing like options trading. So this is very profitable on options trading setups as well. But the problem is on the shorter time frames, what happens with options as volatility increases? Options become very expensive, right? Volatility becomes expensive as volatility is increasing. So if you're looking at the daily charts for, say, the fastball setup, the options get expensive, and it's sort of easy to wind up with a trade that's marginally profitable on the options side, where the equity side would be a big profit. But if you do it on the longer time compression, what you can do is what happens is that volatility is sort of diffused, and you wind up with a lot better options pricing, and then you wind up being able to capture a much larger profit with the options. I know a lot of guys are options traders. I'm not really an options trader, but I trade futures, I trade stocks. But yes, it is. You can set that scanner up any way you'd like. It's very flexible.
Joseph says, I love your approach. Have 2 questions. What is the duration of your trades, and are your stocks too narrow?
Duration of the trades is, generally speaking, the around the horn trades, those program trades, they tend to run their course over probably half hour to an hour of being triggered, they'll wind up hitting the target or the stop. The stops are not, so if you go through, you've got, as part of that 2-week thing that you can do, the 2-week trial, you've got access to all the spreadsheets. And if you look at them, I know if you're new to the style of trading, then the stops look just super tight, and wow, you're just going to get stopped out of these things. If you look at the spreadsheets, if you look at the results back to 2006, and you take all the ones that stopped, right? Because Julie and I love crunching numbers and doing statistics. Look at all the ones that hit stop losses. Look at where they went after the stop. It was generally a big excursion. So if you stopped out with the smaller stop, with the order flow stop, or order flow traders, we are all about trading the order flow. If you stopped out at the order flow level, which is where I'm placing those stops, the chances are very, very high that it wound up way back into the range, because all these things, all the patterns in around the horn, market cycles, and they're all based on the anticipation that what you're getting in front of is institutional order flow. And if that institutional order flow stops and this thing winds up back at that order flow threshold that we identified as a stop loss, chances are extremely high that there's going to be a very, very just violent move against your position. So we get out right at that stop.
Those are the questions. Mustafa says, thank you for the good presentation. So, and
shoot me questions. If you have questions, I'm happy to answer them. You can send me an email, like I said, or even send me a text. It's just 310-804-2248. Send me a text and just say, hey, I'd like to talk. I actually prefer to talk on the phone.
Text is a pain. I agree. All right, Adrian, thanks for coming in today. It's good to have you. All right, cool.
All right, have a great
and thanks for all the questions. All right, I'm going to talk a little bit about the add-on, how to get it. I appreciate all the work you do. Thanks.
All right, thanks, Jeff.
Okay. All right, I can make a presenter. Okay, show my screen. Okay. Hello, Anne-Marie. I'm not quite ready for you yet, but just a minute. Okay. All right, very cool. Go ahead. Oh, there we go. All right. Very cool. So as Adrian had kind of talked about, those two of those patterns has been very, very successful for him today, or this year, not just today, but this year. And I want to tell you how to get the add-on. It's very, very affordable, very inexpensive, has the fastball, line drive, backdoor slider, the double hitter, the infield fly, the 3-2 pitch, the switch hitter. Those are the patterns that are kind of in there. It's only, this add-on itself only costs $299. It's $249 here as a conference special, and we give you a 30-day money-back guarantee. If you haven't tried out MetaStock, we've talked about it all week. We've talked about how easy it is to scan and identify those setups and test ideas, and how it can kind of give you that commentary. We'll throw in a free trial as well and give you a money-back guarantee. So very, very low investment, $250. Includes all that other stuff. 800-882-3040, metastock.com/sales-chat, or metastock.com/conf-promo. So big thank you to Adrian. Oops. Uh-oh. Let's go back into here. Pushing the wrong buttons here. Okay, let's get back to where I was. It's going to be right about here. Yeah. So go ahead and give it a go. As we get into our next presentation, I want to say thank you to AAII, the American Association of Individual Investors. They've been a great sponsor of ours for a number of years now. They started as a nonprofit in 1978, hugely well-respected, well-reputed organization. They do the AAII Investor Sentiment Survey, if you've heard of that. They grade stocks. They have a watch list. They have a whole technical team. Huge company, huge organization. Company is, I guess, the wrong word if it's a nonprofit. AAII.com if you're interested in checking it out. So there you go. Alan, I just saw your question about foul balls. I'm sorry we didn't get to it, but if you want to message us in chat, or we can, or actually message Adrian directly. He'll get back to you on that. I didn't see that question. Hey, Anne-Marie, we can have you come in right now. I'm going to have you help me with something. Anne-Marie, I'm going to give you a little bit of an introduction too. Anne-Marie is a great, I consider a good friend. We love having Anne-Marie in. I always try and have a notepad around, and I'd recommend you do that when Anne-Marie comes in and talks, because I've gotten some really good, the thing that really impresses me about Anne-Marie is somebody will say, well, what about this stock? And it's a stock I've never even heard of, never traded, don't have any idea what it is. And she's like, oh yeah, well, they just had earnings and they were good. And you're just like, where are you, Paul? Are you a robot?
I wish I were. I do. I want to be a robot.
So I told you I was going to ask you for some help. Are you ready to help?
I am.
All right. We give away prizes. Did you know that?
Yes, I do.
Okay. So I showed this, you can have my copy, but I showed this book a little bit earlier, The Around the Horn by Adrian Manz. It's a $95 book. It's out of print right now. He's working on another version, but I've got one that I'll send you. It won't have Adrian Manz's autograph on there, but I could autograph it for you.
Rock star.
So what I need, Adrian, or from you, Anne-Marie, is to help me just pick a winner. What I need is just a number between 1 and, let's see, 10,803.
Whoa. How about 8,312?
That will match up to somebody. Let's see who it is. That's William Anderson with a Yahoo account in the US. So
congratulations, William. I'd love to have that book.
I could make that a reality. Very cool.
Serious.
We can hear you great. Let's get the presentation over to you. What I'm going to do is I'll just send you an email. It might be today, actually, depending on kind of how busy I am today. If not, it'll be early next week just to make sure I have a good address for you. We'll get that sent out. So I'll go to the post office, but usually it's towards the end of the week. I want to get everybody. I don't want to go more than once. Nobody likes the post office that much.
Oh my gosh, no.
Let me make you the presenter right now. I'll let you know when we can see your screen.
All right, oops, which screen? It just disappeared. Never mind. Yes, I'll do it. Ta-da!
First try. Perfect. I can see a chart. It's beautiful.
Thank you. Thank you.
It's all your turn. I'll get out of the way. I know we're starting you a little bit late. I'm next, so don't worry if you go a little bit long. I'm not too worried.
All right. I will zoom through a lot of stuff. What I wanted to do, everybody, is say welcome. Thank you for spending part of your Saturday with me. You know, Saturdays are those days where we're like, oh my gosh, the list. But you made time to be here, and thank you so much. I hope to give you a lot of good info that you can take with yourself, for yourself. And at the end of the presentation, I have a little prize myself. So as we are staring at the charts, for those of us that maybe don't know me very well, I've been trading for about a little bit over 2 decades. I consider Jeff Gibby a dear friend of mine, and I am very excited to be part of any time MetaStock offers me an invitation. I clear my schedule and I go, when can I be there? Because I think it's a fantastic platform and there are a lot of really wonderful things we could do with it. So right into that, let's jump right into what we're seeing here on the SPY. I always like to give an overall look at the market and just give us a couple of tips on, no matter what systems you use, there are some really great things to watch. Okay, and so the first thing I want to look at is SPY, and this has got my strategy sitting on top of it. I've also added for today's session a Bollinger Band, and so I'm going to highlight it so you can see what that is. If you decide you want to add it to any of your charts, that's the one. And then I have a hull moving average that I really love the hull. This hull is, let's see what this hull is. This hull is a 9, and so it's pretty tight. And this is looking at a weekly chart. Now, we've seen the market run up really high, and a lot of times we say to ourselves, oh my gosh, I don't want to miss out. And so we've got these things that we can look at in the charts that tell us really what we're staring down. And we had a pretty savage pullback on Friday, and I did learn this statistic. Out of the last 8 times that the market has run up post-election cycle, the following week, it gave it all back. And so, or gave part of it back. And so what we are seeing is sort of that half back at the end of this week. And it's got a lot of folks saying, oh my goodness, what's happening? Not to fret, not to worry. Here's something else that I want to share with you. I love the fact that our last guest said, hey, you've got to look for institutional flow, and you've got to look at all these things that bring money into the market. And there's also something called exit liquidity. And what that means is if you have a portfolio of, let's say you've got 1 billion shares of something sitting at your desk, you can't just go out and say, hey, I'm going to sell 10% of that in one day. What happens is the market gets wind of that, and the prices that you're able to get are not nearly as good. So what they do is, as volume and prices rise, big institutions say, this is where I'm going to lighten my load. And so you can see that from weekly charts. They tell you that. But something else that they do is they do things in these very simple measured moves, and they pay attention to big, fat, round numbers. I call them BFNs, right? BFRNs. And the big, fat, round numbers are the 50s and the 100s. And we'll see that no matter what you're trading, you're going to see that show up when there's big money, and the psychological element of where do I take profit? Where do I move into the trade? How do I trade around a position? And so one of the first things when we're looking at a strategy like this, it tells us very simply, don't overcomplicate the market. When you're thinking to yourself, what the heck is this chart doing? You want to zoom out. It's going to give you better clarity. So if you're looking at a very messy weekly chart and you're saying, wow, that was a big move, what does that mean? It might mean a little bit of exit liquidity. It might mean a little bit of entrance liquidity. If a chart really falls off a cliff, notice this. Do you see how we have these very strong moves, and then almost right at this 21 exponential, it pulls back. Here for the week of, what is that, August the 9th, it comes down and then immediately recovers. Literally at the open of the week, it was the low. So here's something else that I want to share with you. It's not a hard and fast rule, but it is a very good rule to watch, and this is it. If you're looking at a chart and you're saying, wow, did a lot of buyers come in here? One of the things you want to look at is, how does this candle look? And if you see a shadow that's long, it tells you lots of sellers were interested in leaving at that time. But if you see the shadow being short, it tells you no sellers were interested at that time. And that is a key piece of information that you can add to understanding what the market is doing. So last week, if some of you follow me on Twitter, I hope that you do, because I do put out all kinds of information on there. But if you follow me on Twitter, at the very beginning of the week, or it might even have been the beginning of last week, I said, hey, listen, watch out for the big fat round number at 600 being a place that people are going to say, you know what, that's a nice number, I'm taking some profit. And if it loses that edge, you've got yourself something to watch. And no doubt about it, it came in. Look at the open of the week. Again, shallow right here with the wicks tells us people are buying. Up at the top, nothing here on this upside candlestick. So literally the high of this candle was the first day of the week, and it began to fade the entire time, or maybe it was the second day of the week. Whichever the case, it tells us, hang on, they're going to retrace the following candlestick. I know you think this is simplistic, but I gotta promise you, this works. You just gotta peek at it. If you go 50% of the range of that candle and you look to the left, if there is a resistance line there, it's going to tell you that there's going to be a bottoming process. So when we come into the markets on Monday, the big thing is going to be, are they going to bottom and breach that 601 again? Or are they going to try to bounce, which they very likely will, and then fail and go to the bottom of the candlestick? That's what we're waiting for. Right now, everything tells us, listen, we're still in a buy the dip. The ideal buy spot is really down here, and that price is, let me find my price tool. That price here at the breakout area is 569. So we could have ourselves a little bit of a move from there. But we are seeing buy the dip, and the number one thing, if you look at folks who've been making a living in the market or trading a lot in the market, you'll notice that there's one skill that they really have honed, and it's the skill of patience. It's very hard to watch price move up and up and up and not go, you know what? That's not my buy zone. That's not where my risk is. I'm going to wait. And many times when we've got this nice kind of lazy river and it's not moving exponentially up, you're going to have it come right back into your buy zones. Right now, luckily, our target system here for target rich trades does a really nice job of telling us where those old areas of support and resistance are, as well as what relative risk might look like. It might come into your area, but again, you want to buy on the way up off of a support edge rather than buying on the way down at the support edge. So if you're coming into support, you want to make sure that you wait for it to hold that edge. Now, some folks who are trading on an intraday fashion, they'll say, you know what, I'm getting in right now, and that's perfectly fine. What it means is you've got to manage your risk. So if you buy on the way down and it hits your stop, you've got to be mentally prepared to turn around and buy it back up when it gets over the real zone of support. All right, and so these dots remind you of where those ledges actually sit. Okay, now we've taken a look at the SPY. We know what that looks like. Let's take a look at the Qs. All right, so for this drawing, I have us on a 3-day chart because it moves a little bit more erratically. But here's the thing. If you want to draw a box, it's very, very helpful. It tells you, okay, where did they buy the low, sell the high, buy the low, break out of the high, and then come back in to test that high again. That is a range that says, all right, we've all agreed that this is a good price. Let's try to take it higher. And when it comes higher, wait for the pullback, and it comes right into our zone right there, it shows it up. And when your moving averages are up, you're in great shape. You're in absolutely great shape. So I've actually added another hull on here that's a little bit faster. And this might be for the person that says, hey, well, that is the fast one, sorry. That's a person that says, hey, listen, I see that fast one moving, but sometimes it shakes me out of trades. And when I see the buy setup and I go long, it's already in the top of the range base formation. So there are two things to do, right? When you figure out those boxes that have said, that have said, hey, listen, where did that go? Here we go. When I see those boxes that tell me where old support and resistance lie, I can move it absolutely up. And when it goes up into the edge of that box, you want to start thinking to yourself, okay, it's time for me to trim some gains because this is what normally happens out of a range. When a chart moves out of a range, it expands and then retests the edge, because the volume profiles that we see, and that's how much volume moves in a day, they're going to move through these cycles that go from agreeing to expanding new motion to coming back to the old place that we agreed to expanding new motion. And so that's what we're looking at. The cues, I don't know that they look fantastic right now, because we came into the resistance zone, blew out of it, and then pulled back. What we want to do, this is telling us it's a buy zone. And so you can say to yourself, all right, I bought it at the end of the day. It's come back more than 50% of the last big bullish candlestick. So I know it's still by the dip. Moving averages are up, volatility bands are up, the stochastic is up. Everything says buy the dip at this zone. But these little places right here will tell you what price action is doing as it moves up the chain. And you'll notice this one not quite to the top of the box, so that might be the next target, but it's also fairly close to the edge of the box, so new risk is going to be established right there at the edge of this price zone. And that price zone is going to be, let's see what that number is, 491. And that's going to be where you want to manage your risk. Now, I believe the market's going to get a little bit more volatile, so I am being very cautious about where I buy these dips. All right, next. No. Here is biotech. Now, biotech, why am I talking about biotech? There are a couple of ETFs that are really telling us we've got some stabilizing to do. And so here is our zone. It's right here. Now, we can look at it and we can say, all right, I'm going to take that whole wave and I'm going to divide it in half. And it's going to tell me, this is the box, it's going to tell me if my box is right, I should see resistance to the left, resistance to the right, and then a breach of that resistance and a pullback and test. And here we are underneath this area. So this buy on the weekly was at the top of the box, and it will help you go, wait a second, if I have a buy setting up in the same place that I have old sell zones, it could break out, but it might not. So it's better to wait for the dip. If we look at a daily chart, now biotech and healthcare in general are going to see some pretty sticky moves, simply because the incoming administration is trying to do a lot from keeping us beholden to pharma and you know, I think that's a good thing. So, but that's just me. Inside of this big box, we can see another ledge that's been created called 80. It's about 89 or 90, 90, big fat round number. Okay, big fat round number. You got to watch for those. Buyers, look at how many of them sat here in this patch. They're going to wait for it to come down into this edge, and they're going to want to pick it up. This might be one of the cheaper stocks or ETFs that we can look to trade coming into a buy zone, but currently in the middle of a very big sell-off. And take a look. Remember what I said about these candle formations? This one has no shadow. Super bearish, super, super bearish. And it's come down, and there's a little bit of a shadow here, but the last edges have been around this 90 to 91 area. That's a really nice, sweet spot to watch for this hold. And remember what I said, you don't buy it on the downside. If you're looking for a long, you buy it when it recovers up over the edge. And so your risk becomes very small. And really staying in the market for a long time is all about managing your risk. You can't continue to run a portfolio if you continually lose what's in the portfolio. So this, another very good ETF to look at. Here's the XLF. This one's been going like a house of fire. Why is it important to stare down the XLF? Because it's been running so hard. So let's look at this box again. Have we recovered? We never retested this breakout area. So it's been running really hot. And so the best box might be this one right here. Right? Remember, what you want to do is see a range where everybody is agreeing that I don't want to sell below here, and everyone is agreeing I don't want to buy above here, and then all of a sudden it changes. Notice it comes back down. Look at where that is. Honestly, not making it up, halfway through the box. Comes in, notice it breaks it, but comes up and moves right back up. You get all your buy zones in here, and it sends you up into the space. Notice if you see something that gives you a sell zone after a breakout of a box, you know that it's limited for where you're going to be able to take profit, because that box tells us the last short zone to look at. And again, we're looking at this on a weekly, but a daily chart will give us that information just as well. When it comes in a zone, it's just a little bit noisier because there's so much going on in the chart in general. I'm going to remove this guy so we can see what we're staring down. Now, take a look at where this chart is and what it's been doing for the last 1, 2, 3, 4, 5 days. Do we see buyers excited about being above? We do not. So what does that mean? That means there's no interest for higher price, and wouldn't you know it, look at the big fat round number. Big fat round number right at 50, gapped up dramatically. So what are we likely to see? We're likely to see a retest of the formations. It's very interesting. How did this happen? Hang on. Sorry. My anal retentiveness has just discovered that that's not sitting properly. All right, so here we are. Bounced right off this edge. Look, old resistance, new support. So your brain should be telling you at the same time, listen, if you've got an old breakout area where it was a selling zone and your short setup comes right on the edge of that selling zone, you know it's got to be a quick strike trade, a very quick strike trade, because it's coming into old resistance and new support. My thought is, if you've been trading in the XLF, this is a watch zone, and it's going to likely turn into something that gives you an opportunity to pull back and get involved. Where might that pullback be? This is a very big gap. I'd like to see it filled, so I'm looking at the bottom of that gap to hold, right around our support zone at around 46. All right, so that's what we're looking at there in XLF. Here's the communications sector. This has got, you know, Google and the like, all of them sitting around in that zone. And so what we're staring down is, you know, here's my question. Is this notion that advertising from Big Pharma is going to drift? How much are advertising companies going to be sitting in here, right? That's pretty important. That's pretty important. Here is a topping formation. Yes, buyers are up there. But on the weekly chart, we've begun the retrace. So how do we know the strongest place that buying might occur? It's the last place everybody agreed. Listen, buyers and sellers both agree that, what do you know, big fat round number is going to be a place where we can argue. Pullbacks, going to be a nice buy zone. Here's the thing you want to watch. When a chart starts pulling back, the first thing you have to do is when it pulls back into your support zone, it's got to get up over the last sell zone that you saw. If it can't, it's headed lower. And so the sell zone to watch will be here. And very interestingly, our strategy puts that in play for us. And we're able to come down right into that zone, gives us the opportunity to buy. If it holds it, what we want to do is get back up over this 90 to 92 area so it can continue forward. Everything that I'm looking at right now is in a little bit of a wait state. If you're the type of trader that says, hey, I have another job, I trade, but I look at my charts every couple of days or at the end of every evening, I just flash through. And this is the person that I'm talking to primarily. I'm an intraday trader, so I spend a lot of time in the charts. All the setups become exactly the same. I'm always looking for, where did it tell me to buy last? And I look to the left to tell me where my key areas of resistance. You're going to see these as diamond patterns. They'll show up as resistance and support. And notice, up over the edge begins to collapse. This is also a place that is sitting in a pullback formation. This one's a little bit sloppy, but as consumer discretionary, we have to really see, wait a second, what does this say about us? And really, this is where the consumer is going to spend the most of their money. If it pulls back to the last zone that everybody got noisy at, oh, look, it's a big fat round number. Who knew? Always the same, folks. It is a clockwork mechanism of running through whatever the market formations are telling us. Old resistance is always a place for me to go, hey, listen, I need to take some profit and I need to raise my stop. If you are a trader that is basically a buy and hold trader, you want to wait for much stronger dips. So you want to look at your monthly charts for these kinds of formations. But this is one to watch. It could lose easily from its high. What was that? 220. Also, what are those round numbers? It could lose 10% to come down off of this high here to pull back. And a lot of us don't like losing 10% on a position. As a matter of fact, if you're a portfolio manager, you're going to get asked to clean out your desk. Okay, so here's a nice one. Consumer staples, holding a bit of strength. You know, we could read whatever we want to read into that. But for me, look at what happened. Last sell zone, just a bit before, but look at the big fat round number they're trying to hold. They're trying to hold 80. Now, here's the thing. This has not finished falling. How do I know? Because it's still testing lower lows and lower highs. I look to the left, I go, oh, that's the last place it told me to sell, but all my moving averages are now. And so instead, I'm going to say old resistance, new support. I might take a long there. What's the risk? It's going to be your last buy zone. And those are these tickers right here. So something could be happening here. Could be a nice buy. Watch for it. Let it go all the way down and then come back up. Or get in with some very small size. Look at the energy complex. Now, this began to run in 22, but have a gander at literally what's been going on for a couple of years in this chart. If we take the whole box, we can see that it's fairly wide, and honestly, eyeballing the 50% of that box puts it just a little bit above this price, last year's close. Okay, so what's it getting ready to do here? Sell zone, sell zone, sell zone, and then all of a sudden it hits those moving averages and breaks up. What is it telling us? It's telling us that traders have been arguing around this price for a fair bit of time. Let's see how big this box is compared to this box right here, where we have a short setup. Everybody agrees. I don't want to buy anymore. It breaks straight out. Look at that. So my thought is the energy sector is going to continue to break to the north, but not without dips. Look at this formation. Maybe we can get to a monthly chart and see if it looks any better, but it probably doesn't. Look, it's even more of a mosh pit. Absolute mess. So when you see a chart that has these massive wicks down, say to yourself, listen, I know it feels bad to go, I need to wait until my risk is defined, but I promise you, as someone who spent over 2 decades making a living grading in the market, waiting for ideal zones are going to be very, very sweet. You just have to work on managing patience, okay? But we are getting ready. Let's go to a daily chart. We're getting ready to see a pretty nice break on any fades that this price action holds, right? It called a long right here at the base. Man, William did such a remarkable job helping me code this, coding this. I just talked. He did the hard work. And here we are at the top of the box, weak sell zone that turned into a strong sell zone. And here we are again. How do you know what your chart's going to do? Look to the left. But Anne-Marie, some of them are making new highs. Yes, that's a great thing. we can look at one of those in just a hair. But in general, when you go off to the left and you've had this kind of noise, you know it's a place to take profit. But if it breaks, it'll have a pullback zone. I think this thing's going to hit 100. I really do. I think we're going to have a lot more energy focus that is a combination of different kinds of energies that are going to give our society just what they need. All right? Did I talked about the XLF already, didn't I? Can't remember. Okay, super fast. XLF has been running off the stinking rails, this thing. So my thought is also time to take a breath. So let's go to the monthlies and see what we've got here. Are these all-time highs? Looking like it. Okay, so take a look. Even the biggest box. Here it is, last sell zone. Last buy zone. Take a look. Comes right to it. Listen, humans, we have terrible memories. Markets, not so much, because they're mechanically driven. So let's just duplicate this one. And move it up. And see where we are. Look at that. 1 to 1. So here's my thought. XLF, we're likely to have ourselves a pullback. And that pullback is going to bring us into our last area of heavy congestion. Notice how it matters, folks. It really matters. These traders, they come in and they go, all right, big money. Let's see if we agree on this. Okay, let's break, but watch. It pulls back, breaks the halfway spot of this rectangle, but once it recovers that halfway spot, off to the races. This chart looks really good, but it's a little long in the tooth. So I would say chill the kettle on this one, and we'll see where it takes us. Okay, so don't want to do industrials. We're getting low on time. Or materials, but you can see, take a look. It's now inside of that box. So look to the last box and just be patient. I know it is hard to watch things go bananas, particularly if we were around in 2020 and 2021, where the market just absolutely went bananas. That wasn't normal, and this is more normal. And so if we copy and paste, it breaks out of the box. Remember, when you break out of the box and you're long, it tells you trim your stop, trim up your stop, and take a little profit. Absolutely beautiful. And the system tells you that as well. But if you're thinking about how the system is working, it's going to make you understand those positions much better. All right. So we're going to talk about Palantir because this one is a house of fire. All right. Look at the base of this chart. 2021. Sideways, 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 rocket ship to the moon. Absolute rocket ship to the moon. And so let's take a look at the box. Now, the last time the box came in and retested anything for a breakaway, here is the high of that box area. And look at how long and wide this box is. It begins in February of 21. And breaks out and comes back to retest in 1 week. It gives us that 1 week space where it says, hey, If I'm holding 40, everybody that was holding here that's going to stay is going to be long, and it's been savage. You'll notice it's so savage that the signals are slower on that weekly formation, right? So the sharper a move is, the more likely it is that the tighter time frames are going to tell you which way is up. So notice also what happens to this box. This box goes from, wow, what's this low? I can't tell. That number is, for heaven's sakes, I can't read it. Wow, less than $6. 6 to 40, that's 34 bucks. And so if this does what it was going to do to a 1x, it's going to take us all the way to 75, right? Maybe even 80, because that's the big fat round number, okay? But traders are really pushing this price action up. Notice easy dip zones. If you're saying to yourself, you know, I want to get involved because I don't think this is going to stop. I'm not of that mind at all, but here's what you can see. 4 days, sold at the top, bought at the bottom. Sold at the top, bought at the bottom. Breakaway, guess what? It's going to come back and it's going to try and kiss the big fat round number of 60 and hold it. Now, it could fade. So you want to get that on the way up, because if you don't get it on the way up, there's literally nothing holding it. Now, what do I mean by that? When traders agree on price for a long time, that's a really good thing. It is a really good thing. When a market begins to accelerate, the volume underneath becomes much more shallow, and that shallowness allows more price to drop through. So we have to be fairly careful there. Below that, it's the next buy zone, and that is the big fat round number of 50. Okay, so I've talked a lot about how I trade, how I use the system to trade, what you might want to do with Palantir or any of the other ETFs. But what I really want to do is get traders more entrenched into this absolutely beautiful strategy that MetaStock took the words and thoughts out of my head and turned it into pretty pictures that say, consider a long here, consider a short here, and setting our profits and targets. And so what I want to do for the folks who own this strategy, or for the folks who buy this strategy today, I want to give my time to you. And what we're going to have is 4 weekly Zoom calls where we can exchange ideas with each other, but I will show you definitively how I use this strategy, how I've been using it for well over a dozen years, and how the system and the strategy that you've bought can keep you in between the lines, as well as some of those mental aspects that we need in trading. What do I get out of it? One, I get to spend time with you guys, which is always great. And 2, I also get you to get the feel for how good the strategy is, how well it's been built, how robust it is, and what to look for, as well as how do you work with sizing? What do you look at if you're saying, hey, I bought some of these, but I'm concerned about it coming back. What are the choices there? We can talk about covered calls. We can talk about short puts if you're saying, hey, I want to buy it, but it's too high. I just don't want to sit and wait for it to come back. I want to get involved. There are a lot of different ways that we can get ourselves really using the mechanical power that this system has. And I want to give my time to you because you deserve it if you are investing in the strategy, and I just want it to work well for you. So with that said, I'd love to have you back in, Jeff. If we have some questions, we'll go through it. Otherwise, I'll knock out a couple of more charts, but you know, let's do it. I want to be courteous for you. Even though you go, hey, I'm just the next guy. Well, you're a special next guy, so.
Well, let's see. Bill was hoping you could. Bill's having some hard time seeing all the text on the chart, and I thought it might be a good idea to actually just talk about what text is actually being placed on the chart. It's all automatic.
Of course.
But just to kind of go through this, maybe zoom in so you can kind of just talk about why symbols are getting placed on the chart.
Okay. So how do I zoom in?
Let's see. Well, you were like you did go in quite a bit, but if you just there's a splitter bar at the very bottom of the chart that you can kind of you see that little splitter bar if you just
yeah. Okay.
There you go.
So here we're looking at hymns, and this one's been in the news a lot. We'll talk about news cycles also when we get together for the folks that are going to take advantage of the time. What we talk about also are how much we see certain names in social media streams. And so hymns started getting a lot of noisy airwave charts about May. And so you really started seeing a little bit of volume tick up, a little bit of price tick up. But here's what this says. All right. This one over here, the diamond pattern, it shows us resistance. As we look at resistance, it gives us a short setup and then a sell zone. So here's the thing. If you're aggressive, you look at the short setup and you go, you know what? As soon as I get a bounce there, I'm taking that short. And then the short setup sends us into the support ledge, which is why I like having this Bollinger Band on here. And again, I like using a 21 exponential. That helps us a little bit with rhythm and flow. And so remember, how we look at the charts is always saying to ourselves, okay, what happened before? Where was my last breakaway? Remember, that's where everybody comes in and says, no, we agree, this is a good price. If I come close to that edge and I start rising, that's going to tell me, okay, this thing is going to stop out, or I better take some profit. Now, let's go to a daily, a weekly chart. Because this has moved so savagely, a weekly chart is not ideal in the space, but let's stare it down. I'll go backwards here. This is where we were. Here is the short setup, the sell zone. It also gets us out of a long, and then we're able to sell all the way down. It gives us another shot to short if we didn't get the first one, and we walk it all the way back down. Where does it go to? If something happens and we start breaking above the last buy zone, it tells us it's a place to take profit. So we don't quite only look at what it's telling us now, we're looking at what it told us in the past. And so if we see a new short sell where we just took profit from an old short, but it closes above the buy zone, it says we're to get out immediately. And so these say buy setup, buy zones. It tells us when to take profit. It tells us when to take profit. Also, remember this, the past that these things tell us also give us keys to the future. If we break out and end the day super high, right? A lot of sellers came in here and pushed price back down. If we can't get up over the close of that prior day, it's time to trim those gains until it comes back into support. When it breaks out of an old sell, it's that box zone I'm telling you about. It's, hey, listen, we spent some time in a range. We broke out of the range and we've come back. We didn't hit the middle of the box. And that tells us, wow, buyers are pretty sure about this. And so it's a space where we can go, you know what? I want to take another long out of this break. And you get to duplicate the box. And wouldn't you know, takes you into the next target. And that next target says, all right, when I get out of that box, I need to be thinking about raising my stop and trimming my gains. And right after that, we get a resistance zone. We get it testing almost the top of the Bollinger Band. And look at where it pulled back to. Right? It comes right back in here and then finally hits the middle of the last box. Okay, so where do I think this one's going? I think it's probably going to the bottom of this box back here because this is a very erratic space. But this is what it tells us. Buy zone, sell zone, take profit, buy setup, resistance, all of those sorts of things.
Perfect. We do have Mustafa asking if you could look at VMC, Victor, Mary, Charlie.
Of course.
And then Greg says, fascinating analysis. And then Joseph says, thanks for a great presentation. So.
Oh, thank you. Thank you. Thank you. I certainly want it to be worth, oh, Vulcan. Yes, I haven't looked at Vulcan in a long time. All right. Let's take a look at Vulcan. Okay. Let's see how this has behaved. I forget where Vulcan is out of, but it's looked really pretty, right? I mean, it's got some nasty pullbacks, but again, you know, not to be a simpleton, folks, but I have to confess, I am a simpleton. I think a bit slowly. I can think deeply. I'm not trying to throw shade on myself. I just know, I know where my skill sets lie. And I can think very deeply, but it's also got to be slow. And so these sorts of things really help me understand what's going on in the market. And the way you do it, you look at a place where everybody said, hey, I'm going to buy down here, I'm going to sell up here. And you watch the pattern change. When the pattern changes, they will pull back to those spaces and then they'll continue up. And so if we do it again, we'll see another move up. And then it looks like one more move up. Let's do it. This looks like it's getting to the close of the, let's take a breath. I do not know what their numbers are in terms of, hey, what are their earnings per share and what's their price to book? But this has come right into the halfway point of the box. Look at that. Halfway point. It's telling us, all right, definitely on the monthly formation, everybody has said, look, it's okay. I'm going to buy at the bottom. It's actually this whole space. I'm going to buy at the bottom. I'm going to sell at the top. Pattern just changed for the opening of the month. And so what do we expect it to do? We expect it to either confirm or invalidate the fact that this area down here will hold. So what's it doing? It's coming to the top of the box. Look at where it stopped, right? Few pennies short of the big fat round number, okay? So top of this box, old sell zone, potential new buy zone. I'd be watching for a buy spot around this area, right? If it holds, gonna look great. Let it come down, shake around. We know everybody has been sell, 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 and then boom, all the way up. Let it come back and let it break. Don't be afraid to let it break and come back out in this kind of formation. I like Vulcan. I'm going to keep my eyes on it again. It's been a while since I've traded it. Thanks for the reminder.
I've been talking, but my mic was off. We have a question from Alan. He wants to know if you listen to Kramer at all.
You know, how do I want to say this? Yes, I have listened to Kramer. I think Kramer is wonderful entertainment. I don't follow much of what he says. I think that's the best way to say it. Yeah.
Very good. That's very diplomatic.
Thank you.
That's a good answer.
You've taught me a lot.
Now, we had kind of chatted a little bit back and forth, and then I sent a message to the whole. Mustafa says, "I love your analysis." My pleasure.
Thank you. I try to make it simple. I need simple for myself.
Do you you had kind of mentioned some a little bit of an idea about doing some Zoom classes. Do you want to kind of talk about that?
Yes, I actually spoke about them in the beginning, and I'll talk about them again. And so,
might have been when I snuck off to get my coffee.
What's that? Oh, okay. Oh, good, nice. What I'd like to share with folks is I have a deep desire to let everyone see up close and personal how fantastic this strategy is. And so what I want to do is give my time as a bonus for anyone who buys the strategy to have 4 Zoom meetings weekly, 4 of them. And what we'll do each time, they'll be an hour to 90 minutes long. So it's not going to be quick. You can come in. If you do it and you're on the list, you'll be registered for it. I'll record it, get it up there to you in a private session so you'll be able to see it. But we're going to talk through individually how we look at the charts. We're going to look at all the big tickers that have come through the week, how we study them, how to break them down, how the system says where to buy, where to sell, and how to reinforce the actual mechanics of using a strategy, as well as just adding a little common sense to your mind that goes, all right, I see what's happening here. Let's wait. It'll actually help you with your patience. If you go, oh my gosh, there was the long setup just a minute ago or 4 or 5 days ago, and I got to chase in. No, it's coming. You just want to give it a little time, set it out. And what I want to do is just get you really comfortable with the strategy, see how it works, ask questions, bring charts to me, and we'll just have a great time learning about the markets and each other.
And Mustafa wants to know, it's one-on-one training. It's group sessions, right?
Yeah, it's group session for whomever buys the strategy. Now, I do have a prize that we put out there.
Ooh.
That
do you want to pick another number,
so,
or do you?
Yes. Yeah. No, you pick the number. And
okay,
so this is for a private one-on-one Zoom coaching event for folks who have come into the webinar and are still around.
Oh, you want somebody that's actually in attendance right now? I can do that too. I was looking for the prizes, but that's cool. I like that too.
Yeah, Reward the ones that stuck around.
All right, so I've got quite a few people here. What I've gone to the attendance list, and what I'm going to do, I'm at the very top of it.
Okay.
I'm gonna scroll down, and I'm gonna let you tell me when to stop. Oh, yeah, okay, I'm scrolling.
Have you started?
Wait,
did you start?
I'll start over.
Okay.
Yeah, I'm going.
Stop.
Okay, Bill H.
Woohoo!
Let's see, got that. Okay, let me go
All
ahead
right.
and
Send the details. Yeah, absolutely. And we'll get that set up.
And Bill H, we know you're there, so there's only one Bill H. Let's see, this is and a bonus prize. I like that. Okay.
Yeah, you know, I love being part of these MetaStock conferences. They're great. When I listen in, I'm like, holy smokes, I gotta write that down. So there's a lot of amazing talent, a lot of wisdom, literally hundreds of years of combined wisdom for the folks that come in and give us their best. And I love being here, and I want to give back to the folks that really invest their hearts and minds in MetaStock. I want to be able to give you my time and show you why I am invested in MetaStock and why I love it so much.
Such a good value too, especially, you know, the add-on itself is like very inexpensive.
Yeah.
And to get 4 Zoom sessions with that.
Yeah.
The last question I'll have for you, and then we should probably move on, is did Anne-Marie mention using a particular type of Bollinger Bands? So they're using the default settings?
Yeah, just the, let me see. They're not default.
Double click on it. Yeah.
Yeah.
Go to properties.
I have the 21. I know. I use a 21 time period. I like to use 2.5 standard deviations, so it doesn't wig me out so much. And yeah, that's the one I like. Right.
All right, very cool. I'm going to talk a little bit about how to get this. Anne-Marie, I want to say thank you for joining us on a Saturday.
Yes.
It's good to have you. We love you.
Thanks so much.
You as well.
Love you guys too. Thanks so much. See you all, everybody. Take care.
We'll do this. Okay. All right. We'll just kind of go ahead. Very good. Greg, please tell me if my screen is not the right screen. We've only done that twice. So anyway.
Your screen says real-time signals.
Yeah, that's right. Okay.
All right.
Emory does a really good job of kind of showing how the annotations show up on the chart. That 4 Zoom sessions, I'm going to tell you how much this thing costs in a second, and you're going to be like, wow, I get 4 Zoom sessions with that. So anyway, love the add-on. It has real-time signals, setups, triggers, exits, full detailed commentary, market scanning for the setups. Of course, we're going to have scanning. It's MetaStock. Why would we not? System testing, a comprehensive user manual, all that kind of stuff is all just kind of built into it. And in addition to that, you're going to get 4 Zoom setups. So has an expert advisor that's going to do the automatic detection of support and resistance, give you bullish or bearish warnings, setup, triggers, all that kind of stuff, all those annotations that were there on the chart for you, and the commentary. And I think, you know, it's kind of interesting when we kind of create these, I usually kind of I send out kind of some samples. I'm like, here's kind of like what we're looking for, and just kind of give some advice. And Emory definitely understood the assignment when I kind of talked to her about what we were looking for. Here you can kind of see just a little bit about the commentary goes into, tells you about the trade. Down here a little bit lower, it actually has a full checklist that she uses for trading. Great job with it. Here's the explorations that are included. You can find long entries, new bulls, new bears, long setups, inflection points, lots of different scanning you can do depending on what you're looking for. You can find it. So, and in addition, it's got a full system tester so you can see how it works. So the webinar, the conference, the price on this is normally $4.99. As part of the conference special that we're doing for the next week, you can get it for $2.49. This will include a free trial to MetaStock, those Zoom sessions, a 30-day money-back guarantee, and we'll even sit down with you if you're brand new to MetaStock and you need help. You always can call us. We have a really, really great support team that'll walk you through everything. But in addition to that, If you're brand new to MetaStock, we'll actually help make sure everything's installed. We'll do what we call a white glove installation appointment, where we'll sit down with you, show you everything, kind of walk you through everything. So some great support there. You can do that at metastock.com/conf promo. You can call us at 800-882-3040, and you can go to metastock.com/saleschat. That's $250. And you also get 4 small group classes. Well, maybe they're small group, they might be large group classes, but 4 classes. And she just told me about that. I think that's a great offer. So metastock.com/conf promo, metastock.com/saleschat, 800-882-3040. So did want to mention the Traders Forum, and kind of it's a good time to do that actually. Notice I'm a little bit anyway. Let me talk about the Traders Forum and kind of how it came to be, what it's kind of designed to do, and that kind of stuff. I've been talking about how it's a free community of traders. Basically, it's a lot of the stuff that's up there right now are people that use Steve Bigelow, and so I think it's a good time to talk about that right now, because I'm going to talk about some of Steve's methodologies here in just a second. But a lot of the people that are there were students of Steve Bigelow's. And they've come over to the Traders Forum, and we have a lot of materials up there from Steve, like his ebooks and stuff like that. It's a growing collection. Like I said, it's a new adventure for us. And it's a partner. It's not the same company as MetaStock, but it's a partner company. And so far, it's all free. So the tradersforum.com will get you in there. You can just be a member, and all of the resources that are there, the market chat, all that kind of stuff is going to be free. And just to kind of give you an idea of what it looks like, I've got it right here. And so this is, when you come up here, you'll come up here and actually kind of put up, just register is all you need to do. You can come in here, you can chat with other traders. I've gotten some really good ideas. There's some really good traders that are up here that chat. You can come into the Tea Lounge, and it's got a lot of resources, some ebooks. We do live sessions like on Tuesdays. I'll come in and I'll actually kind of do a market scan, and we'll talk about stocks, and that's really fun. One time, sometimes we'll talk about an indicator. A couple of weeks ago, I did the whole moving average. We've done stochastic, CCI. We talk a lot about different patterns that Steve used to use. Really, really cool. Another thing that we do that's really cool is we'll bring in, like we'll bring in a guest. Like one of our first, actually our very first guest was Anne-Marie. And we do a long form kind of just talk to her, get to know her, talk about how she got into trading. And we'll do that usually just about once a week. And so that works really good. Again, it's totally free. thetradersforum.com, good resource, and getting better as it grows. So wanted to kind of show you that. If you haven't yet, join it. I'm up there kind of posting kind of the stocks that I'm looking at every day. It's never a recommendation that you buy them, but it's a really, it's been a lot of fun for me. I'd like you to join, because it's always funner with more people, as long as it's the right people. So in any case, I failed to kind of reorganize my slides, which I was gonna do. So let me get right here. And then we'll be at the right place. Greg, I think we should do a prize though before I start.
Oh, I think that is a capital idea.
Are you a member of the tradersforum.com?
Of course
Greg?
I am. I think I was one of the founding first so people.
Yes. All right. So we're going to give away. I talked a lot about Steve Bigelow. I'm going to talk about his patterns now. I cannot understate how big of an influence Steve had on MetaStock as a business. He's got our most popular video up there, well over 1 million views at this point. We built a great product that I'm super proud of. I'm going to show it to you right now. We coded all of his patterns, but from a perspective of people that have had a huge impact on me, from personal as well as professional, as well as just any way you can measure it. Just Steve was such a great guy. And so what we're going to do is we're going to give away a Steve Bigelow Candlestick Forum set. So I've got two of his books, The High
right.
Profit Candlestick Patterns, Eliminating Emotions. These are both really good books. And then I've got a mouse pad as well that I'm going to throw in as well. And this just identifies the major candlestick patterns. So those are going to be what's going to be on the prize that we're going to give away. And Greg is going to help me pick out a prize. We're doing 2 prizes in this break too, Greg.
Wow.
So,
Well, not to mention, or even is that in addition to Anne Marie's?
yeah. Well, no.
Prize?
Just one more. That's fine.
All right, just trying to work it out.
Let's see. What I need you to do is just give me a number between 1 and 10,803.
All right, according to Google Random Generator, that is 1925, 1925. Oh, the year I was born.
Okay, that's for a Brian O. And I want you to point out that I did not mention his last name all the way. Brian O is in the USO. Yay.
I'd also like to point out you didn't balk when I told you I was born in 1925.
I believe you. Like, would you lie?
I guess I shouldn't.
I actually was trying to just make sure I got the prize. I wasn't really
I hear
too big of the prize.
By the way, you should probably mention that if people were expecting to see Jacqueline Monroe right now, she had to cancel at the last minute, and so now you'll be presenting.
Unforeseen circumstances, yeah.
And the rest of the day, if you want to see what the rest of the day's schedule is, you can just go to metastock.com. There's a banner right at the top. Press that, and you can see who's speaking for the rest of the day.
Real quickly, it's next after me is Sunny Harris, and right after that is Peter Dalal. So there you go.
Oh, that's right. I guess it's not that hard to remember, just 2.
Let's see. Do you want to introduce me?
Yes, I do. Oh, yes, I do. Now, the challenge is I've introduced Jeff so many times, I don't know where.
Yeah, we're on time number 3.
I can tell you my favorite memory about Jeff Gibby. We were at a hotel in Milan, Italy. He said, "Hey, let's walk down to the laundromat just around the corner." So smash cut to 5 miles later, we're dragging our laundry to the city of Milan, and we finally found the laundromat. But those were good times.
That was a fun trip, man.
That was a great trip.
I haven't been out of the. Well, I've been out of the country. I haven't been over to Europe again since Corona. Maybe I need to arrange a business trip or something.
Sounds good to me.
All right, very cool. Alan asked what happened to Steve. He passed about a year ago, October 3rd. So, yeah, that's one of the things. So, anyway, Greg, thank you for the assist. Appreciate it.
You're welcome.
On that note,
break a leg.
we talk about Steve's patterns. All right, very good. Okay. All right, before I do that, just taking a look at the time. We'll go a little bit fast here. I think probably just based on the time. I do want to reiterate, if you go to thetradersforum.com, we're putting up guides for all of his patterns. And these are the scan I'm going to run today is going to be a scan I run every day, sometimes twice, depending on if. A lot of times I get busy at work and I realize the market closed. I'm like, shucks. So I guess that's one of the dangers. But the patterns, I just love the analysis that Steve did. It's just kind of, we're going to catch up on time a little bit. And so I'll kind of go through some of his main patterns and talk a little bit about how to use them, how to scan for them, and all that kind of stuff. If you go to the tradersforum.com, there's a detailed guide on all of the patterns. We run scan sessions all the time. We talk about them. There's definitely some value there. So in any case, the demonstration today is designed to instruct you on using MetaStock and the accompanying software plugins and is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators of features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Also, I noticed this is an old legal disclaimer, but I'm not going to recommend that you buy any securities today. I'm not paid to endorse any securities. None of what I talk about should be construed as investment advice. I like to get really, really clear too, because when I start to talk about the stocks that I'm looking at and kind of why I'm looking at them, is, from my perspective, there are a lot of different ways you can make money. And that's kind of the beauty of this conference, is you can kind of get a lot of different ideas. If you're interested in day trading, like Sunny Harris is coming right up, and I see her, she's already logged in. She'll do a really good job of that. But generally speaking, my goal here, the only really advice that I have for you with your trading is, there's a statement that Robert Deal used to say, and he'd always say, bulls will make money, bears will get money, pigs will get slaughters. There's another one, and I'm not sure if it was him that said it, but there's always the adage that there's old traders and bull traders. The big thing that I'd recommend, and the big thing that I love about MetaStock, is I'd recommend that always you go into a stock. When you buy a stock, you understand why you're buying it. But more importantly, you understand kind of the exit conditions that you're going to have. Use solid money management. I personally like to trade a very small amount of my available capital on each trade. For me, it's a way to limit, how much money. If I have a small position size, I can hold it for as long as I want to, and I'm not too worried about, the stock dropping down and kind of that kind of stuff, because it's a very, very small position relative to my overall account. But I'd also recommend that you have stop losses and that you use solid money management. Those are both things that I'd recommend. Yeah, Alan, I definitely agree with you. Steve was such a great technician, very generous with his ideas. He did a great job. One of our best partners ever, for sure, by far. So in any case, what I kind of wanted to do is talk about some of his patterns. Like, one of the things that I think with his add-on is we created something that's pretty cool there. Over the course of many, many years of working with Steve, probably 2 decades of working with Steve, we put all of his, like, I think it's I've got it in the slide, but dozens, like probably 70 patterns in there. And these are patterns that he would use in his trading. And one of the things that we did, I'm just kind of trying to decide on where I'm going to trim a little bit here, on them is one of the things that we did on the last version. So I think one of the things we did on the last version is I actually sat down with Steve and we said, Steve, we're getting a lot of patterns here. What I'd like to do is kind of highlight be able to highlight on a chart the best patterns, but what are your favorite patterns? And so from that, we came up with a small list of patterns, and I'm going to highlight a few of those, kind of how you read them on a chart and that kind of stuff. So before I do that, what I want to do is I want to kind of go through the indicators that Steve would look at in a chart and kind of give you an idea of how he'd use them. So let's go ahead and jump in here to, I've got MetaStock open. Let's just take a look here, and I'm going to drag it up here. Okay. All right. You should be able to see that. Greg, let me know if there's I don't anticipate a problem, but you should be able to see the United Airlines chart. This is the chart. If you apply the Bigelow template, this is the chart that has all of the moving averages. And you can see the patterns. You've got a kicker here, you've got a fry pan, you've got a doji sandwich, and you've got a bunch of moving averages and some stochastics. So I'm going to start at the top. I'm going to go through the indicators that he uses on the chart and how I'd kind of use them. This top one is the 3-period exponential moving average. It's what he would call the 3T line. And basically, he'd really use this primarily if a stock starts to go parabolic and he wanted to exit, he'd use the 3T line, and he'd use a close below the 3T line as an exit. That's one of the exit conditions. The next line right here, this is the 8 exponential moving average. The 8 exponential moving average is what Steve would refer to as the T line. Okay, the T line actually was developed by one of his students, Rick Sadler, who runs hit and run candlesticks. The T line generally is just the T line. It is pretty much an 8-period exponential moving average. There's a couple things that I use it for. I generally do not trade a stock long if it's below that T line or below that exponential moving average. I want it to be up above it. Okay. 2, one of the things Steve always talked about is using the T line as a stop. So if we're in a long position, let's say we bought because of this doji sandwich pattern and the stock is going up, if we ever close down below this 8 exponential moving average, which we might have right here, that would be a signal to go ahead and get out of the trade. Okay. One of the things that Steve always kind of talked about, and that I kind of remember to this day, is you can always get out of a trade. You can always buy back in again. Like if you get a stop, you should take it, because if you're wrong and the stock keeps going up and you want to get back into the trade, they're going to let you buy it again. But you can't really go back if you're correct and you should have gotten out. You can't really go back and sell it 4 days ago, right? After it tanked. So he uses quite a number of different stops. Some are based on the patterns, but a very, very simple stop that I personally use, and a lot of the people that are in the traders forum use, is if it ever closes below the 8 exponential moving average, that would be a signal to get out. So the 8 exponential moving average, if we always talk about it as the T line. Again, that's the terminology. It's just a moving average. Okay. The rest of the moving averages are simple. You've got the 20, the 50, and the 200. Okay. For the most part, when Steve would talk about why he liked to use the 20, the 50, and the 200, he'd say very simply, that's what every other broker and institutional and market maker, they all have it on their chart. I want to know what it is. Okay. Now, he'd also use it when he, in a lot of the pattern descriptions, as you kind of go through and learn about the patterns, a lot of them will reference if this happens near support or resistance or a key technical level and that kind of stuff. A lot of his patterns, or a lot of the work that he did, was he would look at the 20, the 50, and the 200, particularly the 50 and the 200 as key technical areas. In other words, if I'm looking to go long into a stock and it's just coming up on the 50, I probably want to wait until it gets above that, because I'm not going to buy it right before it gets to that 50, because there's a good chance it's going to reverse. Same thing with the 200, same thing with the 20. They're just an area of the chart where it should be aware of, because that's what a lot of big money looks at. It's on everybody's charts. The other thing that he looks at are down here, they're the stochastics, and the stochastics is 1233. Okay. Generally speaking, a lot of the work that he does had to do with, okay, is this pattern happening in an overbought or oversold area? Is a gap happening in an overbought, oversold area? Those are always kind of things that he generally took a look at. Okay. So those are the indicators. You've got again the 3 exponential moving average, the T line, which is an 8 exponential moving average. You've got the 20 period simple moving average, the 50 and the 200. And then the stochastics. Actually, in the training, I've been going through a lot of his training as we kind of get more and more stuff on the traders forum of his. But a lot of the training, he does have some different recommendations for stochastics, depending on your time frame. If you're a longer term or a shorter term time frame trader, you can adjust those. I don't remember exactly what the recommendations were, but you'd lengthen them out if you're longer term and shorten them down if you're a day trader. So let's talk about some of the patterns that he has. And I keep looking at my clock just to make sure we're going to end this on time. But let's go ahead and talk about some of the patterns. And I love kind of the way Steve kind of looked at things. So we're going to kind of highlight a couple of his patterns. I'm going to show you how to scan for them, kind of show you how to get descriptions of all of them. And there are a lot. So I'm just going to kind of pick out a few of them that we're going to talk about. And the first one is a doji best friend. Okay. The doji best friend, everybody knows what a doji, well, I shouldn't assume everybody knows what a doji is. But if you look at a doji, it's a very narrow body. You've got the open and the close. They're very, very similar. Okay, the wicks don't matter; they can be very big. But what it indicates, what a doji on a chart indicates, is a sign of indecision. Okay, there's an epic battle between the buyers and the sellers. Nobody's really in charge. The bulls are not in charge. The bears are not in charge. It's an indecisive marketplace. One of the things Steve always talked about was you don't want to trade in a period of indecision. We don't want to trade when there's a lack of decision. What we want to trade is when the decision is made. Okay, so when you have a doji, that's a sign that there's not a decision. When you have a series of decision, that's a lot of indecision. What a doji best friend is it's a doji followed by a gap up above the wick. Okay, if it's a bullish doji best friend, you're just looking for a doji followed by a gap up above the wick. If you look for the same thing, except for a gap down below the bottom of the wick, here are specifically kind of like the criteria that Steve put together for these. So you've got, for the doji best friend, you have a doji or a spinning top that'll form. The next bar, prices gap up above the trading range of the doji. Okay. I think that's a duplicate of the slide. All right. Again, like I said, he'd always talk about wanting to look for decisions. We don't want to trade when the market's indecisive because no decision is made. We want to wait for the decision. We don't want to trade the indecision. Okay. Other things that he'd have you look at for the doji best friend, because you can run scans for these, you can find these patterns. It's one of my favorite add-ons. We've put so many years into it, but one of the enhancements that you'd look for is the further away the doji is from the 8E exponential moving average, the higher the probability of a reversal, or if it gaps up and closes above the T line. So I have a couple of examples. I'm not sure if they have those enhancements, but that's kind of things that you would look for if you're looking to trade the doji best friend. One time I remember we were traveling with Steve, and he was so much fun to travel with, but somebody raised their hand and they said, hey, what is your favorite pattern? Now he's only said this once, and he got that question a lot. So, but he definitely said the doji best friend in that particular session was his best pattern. So anyway, let's take a kind of look at this as a chart of Hess Corp. I pulled this. It's obviously not as pretty as our most current MetaStock 19, but I pulled this as I was kind of pulling some slides to kind of talk about that. This came up on a scan. You'll notice right here you have a bit of a doji. It's not a perfect doji, but you had a nice big gap up. And what happened is it came back and it traded up above that T line. Okay, so it met that enhancement rule. Okay, a couple of other patterns actually kind of showed up here. We've got the trend kicker, the fry pan, had another trend kicker at the top. If you're just kind of looking at this to trade it based on just kind of the little information that I've told you so far, if we would have bought this because it kind of came up and closed above the 8 and we like kind of the way the pattern looked and it's above the moving averages, if we kind of just held it until it closed down below that exponential moving average, you would have gotten out right here. Okay. And we won't go through all of the patterns, but when Steve saw multiple bullish patterns in a row, like you've got the doji best friend, followed by the kicker with trend, followed by the fry pan, he'd call that 2+2 analysis. The more bullish signals he could have in a row, the better he would feel that the stock was continuing to go up. So that's the doji best friend. Okay. Here's another. This is just Kraft Heinz. Here you've got your doji. I'd call this a series of indecisive moves. The bears are in charge here. The bulls are in charge here. There's a lot of indecision. You have a gap up above that T line, trades positive, and just continues to go up. And again, if you just kind of follow those rules and manage your stops, you would have probably gotten out maybe right here because it closed below the T line. That's relatively close, but you would have definitely gotten out of here because it closed below the T line. Again, one of the things that I really liked about Steve is he's like, a lot of people are kind of worried that they're going to get out of a stock when it doesn't trade. You can always buy it again if it kind of starts to go up. A lot of times having a good, nice stop in the place. He would always say it this way. He'd be like, a lot of traders like to eat like a butterfly and poop like an elephant. It's not the way to do it. Always have those stops in. You can always buy it again if you're wrong. So much common sense in Steve. So here's the doji bear friend. You've got the same thing, except for it's a gap to the bottom. Okay. So the doji or the spinning top forms. The next bar, prices gap down below the trading range of the doji. Again, we don't want to trade the indecisiveness. What we want to do is we want to trade when the decision comes in. Okay. And the the enhancements are the same as well for it, except for we'd want it to gap or close below the T line, or we want it to be further away. So here we had an example of one reversal signal. We didn't actually have that enhancement. It was pretty close to the T line, I would say, but it did initially. That was definitely a sign. Here you've got a bullish move. The bulls are in charge. The bulls are in charge. Here you have that indecisiveness almost at the top. Stochastics are in that overbought area. I always confuse overbought and oversold. The bears came in here. They gave you a perfect sign that it was going to kind of send it down. So I wouldn't have taken this trade in fairness because, well, one, I like to, you're above the T line. I already told you I wouldn't trade above the, I don't, if I'm going long, I want it to be above the T line. If I'm going short, I want it to be below the T line. And so I wouldn't have traded that. Might have waited for it to pull back, use this T line as support, and taken this pattern. That may have been something. All right. Here's another example. Here you have the doji. It's enhanced. Again, the sellers definitely started to take charge right there. Okay. If we're looking at kind of where that exit comes in on this one, this is Freeport McMoran. Okay. We might have gotten out the very next day. That close looks like it's very close to the T line. If we didn't, though, we could have ridden that down. So let's do a couple more, just because of time. I do want to show you how easy it is to kind of analyze. Actually, we'll talk about some of the kickers. The bullish flutter kicker. Here, let's just talk about the pattern requirements real quick. So the requirements for this is you have a moderate to large form candle that forms at the end of a downtrend. The second day prices gap to open at or above the previous day's open. The third day opens above the body of the doji. So you want kind of a bearish day. You want to gap up. You want a bit of an indecisive day. And then you want the bulls to be in charge. Again, what you're kind of looking for when you look at these patterns is you're looking for a new decision to be made. So on this one, that's the decision that you're kind of looking to make. And here you've got an example of that flutter kicker. Here you've got a bearish day. The more bearish, the better when it comes to all kicker signals. And the less wick, the better as well. So here you have a bit of a bearish day. You gap up into a doji. The next day it opens positive, trades positive. That's your signal that the bulls have taken charge. Okay. Bearish flutter kicker is exactly the opposite. And I think that's where we're kind of, here you have a bearish flutter kicker here. I kind of just want to show you the add-on with the time I've got left, just because we just have a little bit of time left. Again, if you go to the tradersforum.com, we've got a lot of these patterns kind of documented up there. They're in the manual. And I'm the reason I kind of wanted to come in here, if Steve was still here, he'd probably be headlining the event because the analysis that he did was so good. But what I want to do is just show you kind of the add-on and how it looks. So let me go back into kind of a live chart. And I'll just kind of give you an idea. This is a chart of UAL. There's a couple of different patterns here. Here you've got a little bit of a fry pan that's signaled out. Okay, that fry pan happened just above all the moving averages. Sometimes I like it when those moving averages punch up. But here you got kind of the fry pan came up. Here you had a bit of a doji sandwich. Now I want to point out something. When we kind of sat down, and this would have been last May, not last May, but the May before the last May. And I said, hey, let's take the patterns, because in the platform, in the product, there are a number of different patterns that we put together. In fact, let's get that number. Let's see. Okay, here's the patterns that we identify. So you'll notice like right here that says all the top rank patterns. You've got some doji dynamites, you've got scoops, J hooks. These are all stuff that we put together with Steve. They're all of the patterns. You've got power patterns, you've got his major patterns, which are most of these actually on the mouse pad. So when any of those happen on a chart, they're going to kind of show up. They're going to automatically be annotated. But with these ones over here, the ones that Steve decided to be the top ranked, we wanted you to pay more attention to those when they got annotated on the chart. So what we did in that particular case is we made them a lot more obvious. So for example, right here, this doji sandwich, it says doji sandwich is fully lit out. It's larger than this doji and this J hook and this matching line because it was one of the patterns that Steve wanted you to pay more attention to. So right here, you've got the fry pan, it's larger. This is a T-line crunch. If you highlight over it, it says T-line crunch, so you can kind of identify the pattern. But since these fry pan and the doji sandwich are more important, those are the ones that are going to kind of be annotated more. This is an engulfing bullish pattern. This is a meeting lines pattern. And if you hover over any of these patterns, it'll tell you this is a live fry bearish combo, but any of the ones that are more important are going to be kind of annotated a little bit stronger on the chart. Alan, if you click on in the form, these are all listed in the form, yes. In fact, I took a lot of the documentation that Steve created for his patterns, and I put those up in guides on the form that you can absolutely get to. So in any case, so the other thing is with this add-on, so it's identifying all these patterns. If I want to ever get in any more detail on any of Steve's patterns, all I have to do is go to View, Expert Commentary. And if I come back to this meeting lines pattern, it'll tell you kind of what the rare bullish pattern. Now, we ran out of space in the commentary in terms of what we could put in there, but we also have all of the information that Steve provided in the manual too. So there is a few products. Here's the doji sandwich. It kind of tells you what the doji sandwich is. I won't kind of go into that pattern, but it's a good little pattern. So all of those will be identified. If you kind of just open up the commentary and highlight it, it'll tell you what the pattern is, and that way you can kind of learn a little bit more about it. But I said earlier, I said all week long, I love to scan. I love to go in and find actually these patterns. And so typically I want to show you how easy that process is and kind of how it puts all together. And I'm going to hurry at this point. So I'm just going to go ahead. This is the scan I run. Would I come in here and do it? I'm not going to do all the optional stocks just because we'll get through it a little bit quicker. The scan I usually run is the top ranked bullish pattern. Okay, that's just if we go back to the list of patterns, it's all of these top ranked patterns, the ones that are bullish. Okay, there wasn't a lot yesterday. I can tell you that because I've already run it. I ran it yesterday. But let's go ahead and I'll just kind of go into the index constituents here. And it was a down day. You wouldn't expect a lot of bullish patterns during a down day. I'm going to run against the Dow Jones Industrials, the NASDAQ 100, and the S&P 500. Okay, I'm going to go ahead and start that as an exploration. It's going to run over here. I want to reiterate as it's running. You can run this on any stocks you want. I did have it set to do all the optional stocks, which you can do. I had it set to do the ETFs. You could scan Australia. You can scan India. You can scan any of the 300 markets or futures, forex, stocks, whatever you want. All of the data that's included with Refinitiv. London Stock Exchange Group is actually the new name. So in any case, it's going through here. It's got through about 519 of those stocks, and it's rejecting 99% of them. Again, for me, what I want to be able to do, and this is one of the most, because it's different for me because they expect me to work when I'm at work. And so I do have the ability to go in and trade, but I'm looking at the stock market a couple of times a day, and I try and limit it to that so I can kind of stay focused on what I need to do my job well, right? And so right now, if I'm looking at this is the doji best friend. There's 0 on both of those columns, so it wasn't a doji best friend. It wasn't a flutter kicker. There was a kicker with trend on this one. Okay, now kicker and a kicker with trend are the same pattern. It's just if it happens with trend or not. That's why it's called kicker and kicker with trend. Here you had a fry pan in an uptrend, and so out of those 500 and something stocks that we're looking at, there's Dexcom and Morgan Stanley. Now, I didn't like either of these for different reasons, but for me, I just had to look at 2 stocks and say, am I going to trade or I'm not going to trade. What are we going to do now? And for me, the ability to go and do that is actually very, very helpful. So there you go. Dub, dub, dub. Okay. All right. Let's kind of just start to wrap it up because I want to do some more prizes and stuff like that. I would recommend there's a bunch of videos on youtube.com/metastock. There's a bunch of resources. I loved I would say out of all the people we've worked with, Steve has had a big impact just because of the fact we worked together for decades. And his patterns and the patterns that he taught me, and kind of even the mentality behind them, like don't be afraid to get out of a stock. You know, it's liberating to get out of a stock that's losing because it gets off your balance sheet, right? So know what your stops are, have a strategy around it, stay disciplined, and remember, like, it's easy to kind of get over cocky when the market's going up because like all of your things are good, they're enthusiastic, but that's when you need to stay disciplined because you might come in with a day that just kind of knocks all of your stops and you gain cash. So stay disciplined. These patterns are awesome though. So here's a list of all the patterns that are included. Again, you saw them, and all of the ones that are highlighted we added for version 3. Now there's a lot of people that use CPS 1, CPS 2. This is the 3rd version, and we added quite a few new patterns that Steve wanted to, but we also kind of went in and actually kind of made a lot of changes to make the chart look clean, as well as kind of highlight the patterns that Steve wanted to highlight in it. So in terms of scanning, it does of course have scanning. You can scan for any of the patterns. I particularly like to look for the top ranked bullish patterns. Those are the ones that I like to start with. So in total, just the stuff we did last year with Steve, 20 new patterns, 7 top ranked. You've got we formatted those to stand out on the chart. We made explorations to find them. I went in, did a cleaned up the chart. I thought CPS 2 was starting to get a little cluttered. And so what I tried to do is kind of make it so, the patterns that were more important stood out. And the patterns that were less important were still annotated, but they were abbreviated so that it just seemed cleaner. So, and I think we did a good job with that. All right. In total, CPS 3 has 11 different explorations, 2 expert advisors, 4 different layouts. There's one that'll just display only the top ranked patterns, but I just recommend to use the one that shows all of them. It's clean enough. I was a little bit worried that it would be too cluttered still because there's 58 different patterns. One of the things that Steve did that was really cool with this is he created a 70-page manual. And so every time I'm not kind of sure about the pattern, I'll go in and look at it, and it's got those system requirements, that kind of stuff too. So it does also come with a getting started training video. So one of the products I'm probably really, really proud of. So normally this is $697 for the retail price. What we're going to do as part of the conference promo is $547. We'll give you a free trial to MetaStock again, a 30-day money-back guarantee on this. Absolutely a great. Oh, wait. I did think that was a little bit different. Here, hold on. It's actually $397 at the conference. Let me make sure.
Yeah, Jeff, you the advertised price for that, would you like me to tell you?
Yes, please.
I guess.
Go.
The advertised price for that for this conference is now I'm looking for it, darn it. $397.
That's why, yeah. I thought I had an old site. And what was the boot camp too? Actually, I don't
have. We don't
have.
Okay.
Yeah, that's fine. That actually works well. So $397 will get that to you. It'll also include the boot camp and that kind of stuff. The other thing that I'm going to do, if you get in touch with us and you get this, we recorded a couple of Decembers ago. We sat down and recorded a Candlestick boot camp training class. The price on that was about $699. I'm going to throw it in. $397. You'll get the add-on. You'll get the money back guarantee. You'll get the trial to MetaStock if you need it. I'll remind you, MetaStock's really good at scanning. It's been rated #1 in its price category for 31 years straight. You can do that by going to metastock.com/conf-promo, metastock.com/sales chat, or you can call us at 800-882-3040. Okay, all right, give it a go. You can go through it. If it's not helpful for you, you can return it. Also join the forum, the www.thetradersforum.com. So there you go. All right, Mr. Lewis, let's do a prize.
Okay, way to catch your marketing guy off guard. I was just setting up the email with today's offers, and that came up. And I'm like, that doesn't sound right. And then I'll add that.
We do a prize at the top of every hour.
So I mean, recording Steve's offer. I should tell the kind audience that was not part of the plan. The boot camp. So you just threw that in there because out of the goodness of your heart. So it's a good thing I caught it before I sent the email out.
Yeah. Ali says, great presentation. Thank you. I always love it when somebody says I did a good job. It makes the rest of my day. Michael says, can we buy version 3? Was it the last version? Yes, version 3 was the last version. And I'm very proud of kind of because what we were getting to with all of the patterns is like, how can I make sure that somebody that's brand new understands which patterns are most important? And so I think we did a really good job with that. Steve really kind of understood as well. We worked really kind of tirelessly to make sure that chart was clean and that it was presentable. And definitely you can get the version 3, and it was the last version we made. Michael says, excellent presentation. Now I'll feel good all day tomorrow too. Thank you, Michael. I appreciate that. I really do. Al says, I've been here all 6 days despite the time difference in Australia and enjoyed it. Thanks, guys.
Oh, by the way,
jeez.
Okay. We did do a poll today on YouTube, and it says, how many days this week did you review the Traders Conference? 37% said all 6.
Okay.
22% said 4 to 5, 11% said 3 to 4, and 30% said 1 to 2 days.
Yeah. That's amazing to me, because if I was in Australia, I'd watch the recording. But welcome. I'm glad you. We'd prefer to have you live for sure. It feels like this camera's weirdly centered, but I don't know. Anyway,
you're beautiful to me, Jeff.
The next prize that we're going to give away. Let's see. We've been doing books all day. This one is not going to be an exception to that. We're going to give away the Volume Factor book by Buff Dormeyer, and he's going to sign it. So Buff Dormeyer, he spoke, was it Thursday? Do you remember? It doesn't matter that much. Was it yesterday? There's been so many good lessons that I've kind of. So anyway,
it becomes a blur. Days of fantastic lessons. Where do you?
So this is the Volume Factor. It's his book. If you remember, Buff, he runs 2 ETFs. Does a lot of volume analysis. Obviously, that's why he's called it the Volume Factor. Won a Dow Award, which is, and then also a CMT, a Chartered Market Technician. So Greg, if you don't mind, just a number between 1 and 10,803.
Okay, I don't mind. According to the Google Random Number Generator, it is 3388. 3,388. Don't say the last.
So this one, the winner of this prize, I'm going to give away his full name.
Just for winning.
Just for winning, yeah. I'm sure it's his accurate name. His name is Trader.
Oh. All right. Congratulations.
So if your mom gave you the name of Trader and your last name was Trader, or if you just decided to register under Trader, it doesn't matter. We're glad you registered. We'll give you.
Anybody with that much commitment to trading deserves a prize.
For sure. All right. Greg.
Yes.
We've had a lot of questions about how to make sure somebody can register for a prize. So right. I'm going to let you help me out with that one.
All right. Well, if you go to metastock.com/traders-conference, trader-conference, I should say, or just go to metastock.com, and there's a large banner right at the top. You go there, you register, you're good to go. However, we should mention there's only one or two more drawings today. So if you're going to do it while the getting's good.
Oh, there is one more drawing. but it's
Okay.
it's the
And it's the
price
big
of the day. Yeah,
Yeah, it's the prize of the day. So there's still time to get in under the wire. You know, your chances are 1 in 10,000 some odd at this point. Now, those aren't terrible odds.
Now, if you're in GoToWebinar, you've already registered. Do you need to register for every day, or just are you already registered?
You don't. Once you register, you're good to go for this conference. However, for future conferences, you do need to register again to be eligible.
Right. Greg, thank you very much. Appreciate it.
Thank you, sir.
All right.
Great presentation, by the way.
Oh, thank you. I wish I would have had a little bit more time actually to do it, but you know, there's tons of resources, definitely. Again, we are MetaStock. I might actually, how did this old slide get in here? Oh, I know how it got in there. We're on MetaStock 19 now, and it's 31 years now. So, but we can help you test trading ideas, scan markets, identify the right trades at the right time, all that kind of stuff. 31 years in a row, it's been rated 1. We've talked about kind of how valuable of a tool it can be all week long. You can get an extended trial at metastock.com/conf promo, metastock.com/sales chat, and you can give us a call at 800-882-3040. There you go. Okay, now I need to go back into my presentation and get back to where we were supposed to be. As we get on to the next presenter, though, I do want to say thank you again. Oops, that's not what the button I wanted to do. Slideshow. That's the button I wanted to do. I want to say thank you to CMT Association for sponsoring the events this week, being one of our sponsors. Hugely well-respected, well-reputed organization. CMT, Tyler came in and talked about how beneficial it could be to have a CMT. And we actually had somebody that commented yesterday, I just got my CMT, and I have learned so much more about trading. So having a CMT designation can help you if you want to work for a bank, or if you do work for a bank and you want to have more assets under management, or maybe you just want CMT at the end of your name. You can do all of those things at cmtassociation.org. So there you go. Our next presenter is awesome. Sunny Harris, I remember meeting Sunny way back, probably my first trade show in Las Vegas. And I remember she had a handbag that had a dog in there. We're gonna only get better about being able to enunciate as we've been talking for 6 days straight. But one of the things that struck out to me, Sunny trades real time. She trades minis. That's what she does. And she does such a good job with it. I've always wanted to get her indicators put into MetaStock, and we finally did it. And so we're really, really happy that they are there. Sunny, I can hear you. How you doing?
I'm doing great, thanks. How are you doing?
I'm doing good. Let me go ahead and make you the
early on a Saturday morning out here, I tell you.
Yeah, well, let's see. It's 10 a.m., right? For you?
Yeah, I'm used to sleeping in till 10 a.m. on Saturdays. I get up at 4 every morning to trade.
And then you take a nap?
No, I don't take a nap, but I sleep late on Saturday and Sundays.
Oh, I got you. You do the catch-up time. Well, I appreciate you getting up for us.
Thank you.
All right, let's see. I think I just sent you is it asking you if you want to share your screen?
Yeah, and I did it.
Okay. I can hear you. I can see you. Well, I can see your screen. I'm going to go ahead and let you take over. Thanks for.
Let's see. Where's the thing where I share my camera?
I can send you a request if you want to share your camera.
Yeah. There you go. Thank you.
There you go.
You see, I even have my little dog's picture on my shirt today.
Yeah. Before it came into full focus, I thought it was actually your dog right there.
Yeah, she's on the floor.
All right. Now we can really see you. Craig says, I'm excited. I trade micro E-minis. So there you go.
Yeah.
I
trade E-mini. I used to trade the big mini, you know, what they called the big boy. So the S&P itself. And then when they had started doing the E-mini, I transferred over to doing that one. But I've been trading now it'll be 44 years in January. And I love every minute of it. So today we're going to talk about SunnyBands on MetaStock. What I love to do is help beginners. I love to help people learn to trade. And of course, I also work with intermediate and advanced traders. So this is for anyone who has not yet become wildly successful. I'd like to help you become wildly successful. And it's also for people who've not traded much and want to learn. And for people who want to improve their trading results. I get a lot of calls from people who say, I've dug a big hole, can you help me get out of it? And yes, of course I can. I love to teach and mentor and consult. I love to help people. So here's my phone number. I don't know anybody else that puts their cell phone number out like I do. Give me a call. Not during this presentation, but give me a call. I love to talk. And here are the disclaimers, just like Jeff read. Basically, I'm not going to read this entire thing, but it's on my website, moneymentor.com. And the thing to really know about it is that all investing and trading involves risk of loss, and individual investments may vary. The examples provided may not be representative of typical results. When you trade or invest, your capital is at risk, and you can lose some or all of your money. So never risk more than you can afford to lose. That's the main rule. And I'll be posting this, the PDF of the slides on my website, moneymentor.com. And you can also see the full disclosures and the details. I'm going to tell you exactly how I trade every day. I don't hold anything back. And first, I'm going to tell you a little bit about me and why I'm qualified to give this talk. I trade with my indicators that I've programmed myself, and they are SunnyBands, the dynamic moving average histogram, and slope. These are what's available on MetaStock right now, and we're working on some more. So like I said, I don't hold anything back. So here we go. I'm a professional trader and have been for 43 years. I trade futures, stocks, and crypto, and gold. I don't trade options, though. The only thing I know how to do with options is lose money, so I don't do that. I'm going to tell you a little bit about myself and how I trade. I've been a professional trader since 1981, and I've been through all the crashes since then. And they're always lots of fun. You want to be short, of course, during crashes. And the next one. Who knows when the next one will be, but there will be another one day. There always are. So I trade the S&P 500 futures contract on 1 and 5 minute charts. I have a live trading room that meets every morning at 9 a.m. California time. And we trade live for an hour. If you want to come to it for free on a Wednesday, you can do that. Just text me. This number again is down here at the bottom. So just text me TAWS, T-A-W-S, which stands for Trade Along with Sunny. I've heard that the S&P is the most difficult market to trade, but I've been doing it for over 43 years now. And to me, it's, I'm an expert in it. This is what I've been doing for all this time. So I see the patterns, I see the movements, and to me, it's easy. I do have long-term stock holdings, and now long-term to me means a week or more, because when I'm trading 1 and 5 minute charts, a week is a long time. And I do trade cryptos. So I'm going to show you how I trade with SunnyBands and my dynamic moving averages in fast markets. And I'm also, if I have time, I'm going to show you my compounding spreadsheet that I call Ultimate F, which is the ultimate fraction at which to compound your returns. And I do a free Sunny Side of the Street technical newsletter every Sunday night. So if you text me SSS, I'll know you want the Sunny Side of the Street. And I explained what my indicators are telling me about 12 different markets. I analyze them every weekend. You can always email me, sunny@moneymentor.com, if you can't find it. Or when you get the link on my website, you can just click on that and sign up. And as I said, I will post a PDF of this talk. And membership is free, and you get access to the free members area, members only area. I also do a free podcast, Sunny Harris Show, where I interview all the legendary traders. So I've interviewed Jake Bernstein and Larry Williams and Perry Kaufman and over, the Linda Bradford Raschke. There's just lots of people on there if you'd like to get to know them as people. And Sam Tennis usually shows up with me on the podcast. And he's the guy that originally programmed Easy Language for TradeStation. So if you go to moneymentor.com/podcast.html, you'll be able to see that, all the people I've interviewed. So, people like Larry Williams, Jake Bernstein, Steve Nissen, Linda Raschke, Dr. Alexander Elder, Cynthia Case, Sherman McClellan Oscillator, Carolyn Borodin, Greg Morris, John Bollinger was on it. And we've got 50 people on there so far. So it's a lot of fun to listen to. It's nice to listen to podcasts while you trade. It keeps you a little bit occupied, as if trading doesn't. And this is what Sunny Side of the Street looks like. Well, not so much anymore. I've updated it, so it's prettier now. And just real quickly, I was rated #1 trader twice with 365 and 178% profit 2 years in a row. My live trading room, which, as I said, meets every morning at 9 a.m., now has 528% profit in it. And to do it, I just use my SunnyBands and my dynamic moving average. And there you can see #1 right at the top. And here's the equity, 528% on the live trading room. And let's see, for an hour, yeah, we got that. So I grew up in a less than ideal situation in Appalachia. I don't like it when people say Appalachia. That's not the way we say it, those of us who are from there. So grew up with dirt floors and an outhouse. And now I have 3 degrees in mathematics and another degree in telecommunications and photography, which I got after I retired. And I've taken business and programming classes from Stanford, Wharton, and UCLA. I like to go to school. I've been programming for 56 years and 33 years trading. I was originally, right out of college, was a systems programmer for Lockheed up in Sunnyvale, California, Northern California. And I left there to go work with 3 guys who had a graphics software program they were working on, machine and device independent computer graphics, which became Harvard Graphics. And they had a little software they were working on, and they wanted me to lead the business, so I did. And I retired when I was 30 years old with 105 employees by then. And I gave my money to many managers, and they lost $75,000 in the first 3 weeks. And I thought, well, I can do that poorly on my own. So I started reading and learning everything that I could possibly learn about trading and investing. And now I've read 747 books. You can't see them behind me. Normally I'm facing the other way, and you can see my bookshelves. And they're all trading books. And I didn't enter a single trade for the first year of watching the market. I just learned the rhythm, just watched every day to learn the rhythm. And, I also published Trader's Catalog and Resource Guide, a monthly magazine, for 8 years before the internet. So that's back when we printed on paper, back in the olden days. I've written 8 best-selling trading books, it's not 6 anymore. Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, TradeStation Made Easy, and then I wrote Going Vegan with Linda Blair, and using Easy Language 9.x with Murray Ruggiero. And now the 2-volume Definitive Guide to TradeStation's Easy Language and OEL Programming with Sam Tennis. And of course, I've written articles for all the major magazines. And there they are. And more. I am an author and a programmer, and here are the book covers so you can see what I've written. And there's the magazine and Linda Blair's book, and then these two are the latest ones. It's 1,300 pages. So it was 2.5 years in the making of just every night. Sam and I worked together over Zoom. He's in Florida and I'm in California. So we were working over Zoom over and over and over again, writing these books. And this is my website. This is the quips and quotes page. You can see the people who subscribe to my daily trading room. I took them all to lunch in Los Angeles, and we had a wonderful time. And we had seen each other over Zoom for almost a whole year, and we went up there and just had a delightful time. I like this one. The longer I work with you, the more I recognize the depths of your knowledge. 3 trades, all green. I'm beginning to see the consistency of SunnyBands. So I've got pages and pages of emails that unsolicited emails that people have sent to me. And here's one that I particularly like. It's a little long, but this guy said, well, I just want to say I love them, your bands. I've torn apart Bollinger Bands, Kellner, et cetera, and nothing comes close to what you've created. I've talked to CMTs who have said, oh yeah, they're just bullies, and I almost spit out my coffee. I watched your videos where you're walking a new customer through the use, and I got it, understood it. The terms are right there. Bullies are too general, and Kellner, which Rasky says she likes, are only a hair better than bullies. Yours blows them both away, and of course you already know that, Marius. I have a Facebook page, and from time to time I post predictions on there where I think the market's going. And right now, I think it's still going down for a little further. We've got about 200 points left to go before it hits my line of attraction. These lines that I call attractors are, well, I'll explain that in a little while. So if you go to Facebook and just look up Sunny Harris, you'll find them. Or you can subscribe to the Sunny Side of the Street newsletter. And I do have customers all over the world, so don't be afraid to call me if you're in Saudi Arabia or Australia or whatever. I do have customers spread out all over. This next slide is probably the most important slide in the whole deck. And I want you to see if you can do this for yourself with your own goals. So let's say you want to make a 6-figure income. Let's call it 120 grand a year. I don't know anybody that wouldn't be happy with that. So if you divide that by 12 months, you get $10,000 a month. And that still seems like an impossible goal when you're learning and working out how to do this. But if you divide that by the 20 trading days a month, that gives you $500 a day. And now it seems more possible. So you just have to break it down. And $500 a day, let's break it down a little farther. It's just 5 trades at $100 each. And now you see it looks possible. So in the S&P, there's generally between $1,000 and $3,500 potential going both long and short, just one contract. So it's definitely possible to do. So I'm going to break down how I trade and show you exactly how I do it. And the next few images may look complex, but they're really not. And I use color coding to key me into action. So I know what a yellow chart means and what a green chart means because I just immediately key into those things without thinking about it. So here's a SPY daily chart. And you can see it goes up and then it goes down and it goes up and then it goes down. And how do you know where it's going to go next? You don't. Here it is on a 15-minute chart. And you can see it just chops all over the place, but there are ways to catch that. And here's the same thing on a 5-minute chart. You see, it's just choppy, but there's money to be made from here to here, and from here to here, here to here, there to there. You can make money over and over again on a 5-minute chart. So now let's look at the Dow on a 1-minute chart. So if you're looking at this chart, where's it going to go next? Does anybody know where it's going to go next? How about that? So it went up and then it went straight down. But you don't know that coming in looking at this part of the chart. There's no such thing as prescience when it comes to trading. You look at the hard right edge of the forming chart, and that's all you have to go on. We don't have future data. We only have past data to analyze. So we don't know where the market's going. So we have to ask, my favorite question is, what is true? So I'll look at a chart, and let's say I've got indicators on the chart. I want to ask, what is true of the price action with regard to that indicator? So what is true over and over again? With every new bar, I'm asking, what is true on this bar? And my mantra that I say while I'm trading is trust the analysis. So a lot of analysis goes into my charts, and then I just have to trust it and take the signals. So how do you trade that? Obviously, it's easier to see in hindsight. And we can all look back and say, well, if I had taken that trade an hour ago, I would have such and such. So that chart really doesn't tell you much. In fact, it just looks scary. We want to know, is it going down further? Is it at a bottom? Is it going to turn around? We've got all these questions to ask on the hard right edge of the chart. And they always tell you buy low and sell high. Most traders buy high and sell low. And what is high and what is low? It's all relative. So the question really is, when do you enter your trade? I also add Fibonacci lines to my charts. So you can see here I've got Fibonacci drawn on this decline. And you can see it hits it over again here, it hits the top over again here, and then it falls out a bit. And I mentioned attractors. So I'm going to show you what an attractor is on this chart. You see the orange line? I drew it back here on this low. And it comes across and it attracts price to it. So it hits it again, hits it again, hits it a couple more times, and then drops. So that's what I call attractors. Fibonacci lines are also attractors. They attract price to them. Moving averages are also moving averages. They attract price to them as well. So trend lines is attractors. Here you can see it hits it, hits it, hits it again, over and over again. And the line that's drawn from here to here, that gap hit it perfectly. And then I had SunnyBands and my dynamic moving average histogram and slope. These are the 3 indicators that are available currently on MetaStock. We're also going to add my PHW, potential hourly wage indicator, which helps me analyze a stock to see what the potential is, stock or futures, whatever the chart is. So here's what SunnyBands looks like. Now I'm looking at this same chart over and over again, you see. SunnyBands, the gold and purple lines in the center are my dynamic moving average. And I created that because I found out early on that standard moving averages, even exponential moving averages, whipsaw. And it's the whipsaw that kills you. So you can be catching a trend and do really well, and then give away all your profits in the whipsaw. So I didn't like that so much. So I thought, well, I've got several degrees in mathematics and I can program, so I think I'll figure out how to eliminate whipsaw. So that's what I did. The bands are average true ranges away from my dynamic moving average. Now the beauty of it is that it calculates its own inputs. So it's constantly changing with every tick of the market on the right edge it's constantly recalculating the lengths of the moving averages. And that's why I call it dynamic, because it's dynamically changing with every bar. So standard moving average, where you'd have 9 and 18 as the inputs, simple moving average, those change. Those change every bar. So 9 and 18 might become 8 and 15, and that might become 20 and 40. You never know. And I don't even know what the inputs are. It calculates them and doesn't give me an output as to what they currently are. And then I have the histogram, which is this colorful thing at the bottom. And it shows me not only where at the zero crossover, that's where the dynamic moving averages cross over. If it's under the zero line, purple is on top. Oh, and these are the wrong color. I've got gold and red. Okay, red is on top of it. So when purple's on top, they're below the zero line. And when gold is on top, they're above the zero line. And when it's gold, it tells me that it's strongly up. When it changes to red, it tells me it's losing momentum. And likewise on the bottom, when it's purple, purple's on top. And when it changes to green, it tells me the market's losing momentum. And the slope ribbon shows me bearish, bullish, and congestion. And the congestion is where we don't want to trade. So whenever I'm in a congestion period, I'm very, very careful, because I don't want to be trading in a sideways market. So now I can see something. I added attractors. They're not just support and resistance. Trend lines are also attractors. Moving averages are attractors. Fibonacci retracements are attractors. And Elliott waves are attractors. I use Elliott waves every day. I count them on my charts to see. And that's how I knew that we were coming down. 1, 2, 3, 4, 5, and then the ABC comes down. And so let's go farther. Now, my PHW indicator, potential hourly wage, is a series of yellow dots at the ideal highs and lows. And what I wanted to know and why I created that initially was to answer the question, can I make more by trading than working at McDonald's? So if I could make $30 or $100 an hour, then trading was worth it. And if I couldn't, it wasn't. So the dots are the ideal turning points. And of course, we can't be perfect. I don't get them all exactly, but we do really well. Then I look at the ideal, which is if you look at the yellow dots, it's ideal highs and ideal lows, and you add up the longs and subtract the shorts, and you get a number, which is the maximum amount of money you could make trading that. And then I take 60% of the ideal as my goal. And I do that because I figure I can lose 20% on the entry and 20% on the exit and still get 60% of the trade. On this one, I have a zigzag because we don't have the PHW yet, but you can see the zigzag. So right through there is a really nice trend, and then it turns. So then we would add up a short position here, long position here, another short, etc. And it prints out at the end, it prints out the ideal profit and loss, the PHW profit and loss, the number of trades, and the dates that this chart covers. So 60% of the ideal on the same chart is $327,000. And that's quite a difference. In my trade along with Sunny, that's my live trading room every morning. It facilitates the learning of my indicators because you can see me using them. And if you want a free trial, let me know. We can set up a 7-day free trial so you can use SunnyBands and the DMA and the slope indicators. And when you get a free trial, I do 2 Zoom calls with you for free as well. And we get together and go over the rules and look at where the trades are, and I show you exactly how I would trade them. So every morning, live trading room, trade along with Sunny. 1 hour every day, 9 a.m. to 10 a.m. And sometimes I win, sometimes I lose. I had 4 winning days this week, and Friday was a loss because I kept thinking we weren't going down. And here's a real quick little video I want to show you, which is it's a condensation, but it shows us how I'm actually trading in the live trading. You see my screens, they're the screens I use every day. I trade from the same thing every day. You just start out with the disclaimer and the theme song. And with the flat DMA with gold on top, I don't really expect it to go much lower than the DMA. If it goes down and closes under the DMA, then I'm short. Next 1 minute NASDAQ just going straight up. But there's it's trying. Let's see what this one's doing. Come on. And I talk to it all the time. Okay. What I'm watching right now to see if that's going to go above this interband. And if it does, it seems to me like it's going to move a little further. Let me show you something. And so you can see me picking off the profit there.
Good job.
Thank you. That was a perfect exit on that trade, wasn't it? Sure was.
Yeah. Yeah, it was. I've taken 2 of them, Sonny.
Have you? Did you make any money?
Yeah.
Excellent.
Yeah, absolutely.
And there's my contact information. Okay, let's look at NVIDIA for a minute. This is one of my favorite stocks to trade. I love NVIDIA. And you can see the SunnyBands and the dynamic moving average histogram and the slope ribbon. You can tell when it's bullish and congested. And these are, Jeff understands these better than I do. These arrows, these are showing potential trades. They're not an actual trade yet at that point, but it shows the potential trades all along. And let's look a little bit at buy and hold versus trading and see. You know, your stockbroker will tell you just buy and hold for the long term. But I like to trade. So with buy and hold on that chart, you could have made $923 versus $4,400 on trading it. So you're buying and selling hopefully at the right points. So you're catching the longs and the shorts and you make more money. And that's on a daily chart. Just trading one share. So let's look at Tesla. So Tesla, in my idea, is not a tradable, not an investable stock. It's a tradable because it goes up and down and up and down. It's quite volatile, but that makes it a good trading candidate. So you can see we're long through here and then short through here. And with Tesla, buy and hold was $237 per share. Trading was $2,000 per share. On the SPY, same idea. We've got lots of signals along here telling me beware, beware, beware. And then there's the sell signal. Here's the buy signal, another sell, another buy. And on this one, on a daily chart, buy and hold was $418. Trading was $4,800 per share. So if you take 60% of that, that's the PHW, we get $2,900 possible. Well, yeah, over 20 years. So you want to have a whole lot of shares of this if you're going to be buying and holding for 20 years. On a 15-minute chart, we have more signals because it's a faster chart. And buy and hold on that one was $75. Trading was $1,500 per share. And 60% of the ideal would be $910 versus the $75 you could have made with buy and hold. This one's over 9 months. I didn't have as much data on that chart. If you look at the SPY on a yearly basis, this is an investor's chart. This is the buy and hold stuff. You just buy back here and hold on for the long term. And if you've got 20 years, I don't have 20 years left, but if you've got 20 years, you know, then if you're young, that's a good thing to do in addition to trading. But the trader's chart looks more like this. So this is the daily chart on the SPY. And you can see trade, 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 long trade, short, long. And you add all those up, add the profits up, and you get the ideal again. In fast markets, this is a 15-minute chart. Now keep in mind, I use a 5-minute chart. So 15 to me is still pretty long term. And the trader's view on a daily chart, same idea. And you can see the signals. And there's where you take the trades. So my indicators, the nice thing about them is that they work on any symbol, on any time frame. I listened to somebody on a podcast this week who said the question in the chat was, well, what are the settings for your moving average? And he said, and I totally disagree with this, the settings differ depending on what you're trading. So if you're trading Tesla, it would have one kind of setting, and if you're trading NVIDIA, it would have a different setting. And if you're trading the E-mini, that would be at a different setting, and you have to determine those for yourself. Mine doesn't have different settings. It has the exact same settings for every symbol and every time frame. Because remember, it's calculating its own inputs. So how do you know? How did you know in 1982 to buy Apple at, I think it was actually 32 cents then, and hold it for 40 years? You know, how did you know that? Well, SunnyBands and the histogram and my PHW indicators show me. That's how I know when to buy and sell. The SunnyBands is an offshoot of my dynamic moving average because I was looking for favorable and adverse excursions from the dynamic moving average. The bands are average true ranges away from the DMA. And then because the DMA is dynamic and I'm calculating from the DMA, then the average true ranges are also dynamic. So they're constantly recalculated. They're not Bollinger Bands. He uses standard deviations away from a simple moving average. And standard deviations tell you statistically where it should go. Simple moving average is the one with the most whipsaw. So it's not like Bollinger Bands. My DMA is smooth and it dances seamlessly with the market. And I use ATRs, which ask the market where it has been and is going, not statistically where it should go. Here we have simple moving averages on a 15-minute chart. And you can see typically people will trade these with the crossovers. So here's a sell signal, here's a buy signal, here's another sell and another buy and another sell and another buy. And that's what I mean by whipsaw. This whole period right through here, you get chopped up, going long and short and losing money on every one of them. Here's simple moving averages on the daily SPY. You can see again, whipsaw, 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 over and over. And then when you catch the trend, you do really well. But you gave away all of it back here in the whipsaw. Here are simple moving averages on Apple. Now this one is kind of like Tesla in a way that it trades up and down and up and down. It's pretty choppy most of the time. And you can see again the whipsaw here, 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 here. That one doesn't go, but you can see it's dangerous. This must be a different time frame. Sorry about that. Same Apple. Oh no, this one shows you the entries. So you can see the whipsaw. A lot of trades and you're getting nowhere. Moving averages give you late signals as well as whipsaws. So whipsaw is when a price or indicator is moving back and forth with no trend, and you lose money on both sides of a price swing. And that last chart was full of whipsaw. So let's examine these crossover signals. In my experience, whipsaw eats up all the profits you made from the trends, and the crossovers are late. So you're getting into the trade just about the time that it's over. It's very lagging. And many years ago, I set out to cure whipsaw. I wanted to figure out how to do it with the averages coming closer when they needed to and farther apart when they needed to stay out of the way of the trend. So I wanted the lengths of the moving averages to change with the market automatically. And I started out by using tables and matrices, arrays, to set values, so I'd say when the market's doing this, then I'm going to use 9 and 18, and when the market's doing this, I'll use 15 and 20, and I set up tables, but I found that they weren't general enough. So I developed mathematics, and it took me a solid 18 months, working 18 hours a day to get this figured out, and I did it. I created my dynamic moving average, which calculates its own lengths. And we talked about 9 and 18, and mine changes with every tick of the market. It dances with the market. So here's the DMA and standard simple moving average on the same chart. It's kind of messy, but you can see the gold and purple lines and how they don't follow price exactly like the simple moving average does, but their crossovers are much more accurate. So here's the DMA, these two averages, and you can see how sometimes it's further apart and sometimes it's closer together, and that's the variance of the inputs happening. So it's unique. Two things about it are unique. It's not like anybody else's moving average. Now, I've seen recently in Technical Analysis of Stocks and Commodities magazine, two different people trying to come up with this same kind of thing. And I have found that I've put them in my program and found that they don't really work like my DMA does. So it calculates its lengths dynamically, and it uses average true ranges because the market moves about as much as it usually moves. So it'll keep going up until it's over, and then it'll keep going down until that's over. So I like to measure how much it usually moves. And here, this is a little presentation that I have on my website, and it shows you the basic SunnyBands rules. So when the market's going up, I use blue candles because the SunnyBands have green in them. I don't like to get confused with those colors, so I use blue candles for up. So when the market's going up and gets above the upper outer band and turns red and dips below the upper outer band, then I go short. When the market's going down on red candles and gets below the lower outer band and turns blue and pops above the lower outer band, I go long. That's the first set of rules, level 1, and that's pretty simple. There are some more complex rules, and I'll go into them in a second. So the investor in this thing made $168 per share, trader made $299 per share, and the day trader made $610 per share. If you'd started with 100 shares, the investor would have made 16 grand, trader almost 30,000, and the day trader made 61,000. Now that's a big difference. 16,000 to 61,000. Hypothetically, of course, no guarantees. So if you started at a value of 47 cents in 1981 with the current price of 156, the investor would have made 399%, which is really good. The trader, though, made 635% profit, and the day trader made 1,200%, well, almost 1,300%. So that's why I'm both a trader and an investor. I trade 5-minute charts every day, and I invest, as I said, long-term to me is about a week. Is it possible? Well, yes and no. You can't catch all the moves. It's not going to happen. You'll never get all the highs and all the lows. That's like getting a hole-in-one playing golf. It's yes, it happens, but it's very difficult to do. So here we go back to the 60% to get the PHW, because you can leave 20% on the table, getting in and getting out, and still get 60% of the move. The investor, however, has to sit through long periods of scary negative markets like right now, while the trader can go short. This is a little 4-page summary of the SunnyBands rules, and these are for educational purposes only. So level 1, as I said before, red candles moving downward touch the lower outer band and turn blue and move back inside the lower outer band. And then I always say if price confirms, and by that I mean if they turn blue and you're expecting the price to go up, then the next price move ought to be up. If the next price move is down, it doesn't confirm. So that's what that looks like. Blue candles going up. We hit the DMA and pause for a few minutes. This is congestion. Whenever the DMA is flat, that's a period of congestion. And then it moves on up. Now we've got one red candle at the upper outer band. Does that make a signal yet? No, because you see the next candle is blue. That doesn't confirm. And I go short when blue candles have been moving up and touch the upper outer band and turn red and move back inside the upper outer band, again, if price confirms. And this is what this looks like. So we've got red candles. So we've got blue candles going up. Here's a red candle coming down from the upper outer band. And it went below the upper inner band, so that's a short. And we write it down to there. Now, again, we've got one blue candle at the lower inner band. We have to wait to see what happens next for the confirmation. Level 2 on the basic rules, and I mentioned this just a second ago, if the DMA midline is flat, that is, it's visually sideways, then I don't expect price to move very far beyond the midline. It usually congests right around that flat DMA. And you can see it here. It comes up to it, churn, 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 goes back down, comes back up to it again before it finds the direction. When purple's on top, I like, oh, that's the next line. Never mind. So the DMA often acts as a barrier to further movement. And here's level 3. If gold is on top and we have a positive slope, then I like to stay long until the DMA is penetrated. So we're long at this point. Well, we're long back here. Comes to the flat DMA and we get the congestion, and then it comes on out and hits it again, and we've got this nice uptrend. Then we've got a red candle from the outer band to the inner band and a red candle on the DMA. That's confirmation, and we go short. Likewise, level 3, if purple is on top and we have a negative slope, then I like to stay short until the purple DMA is penetrated. So you can see here, we're down, 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 purple's on top, we keep going down, and now price retraces and we come back up to a flat DMA. I'm going to take profits and get right out of there. So with that foundation, we can look at the fast-moving markets, which we like to look at as traders. So we're going to look at the ES, S&P 500 futures, gold, and crude oil. Now, I like to trade this S&P 500 because you can see, in, let's see if I do, Stocks and Commodities magazine. In the back, every month in the back of the magazine, they have a futures liquidity table. The top entry is always the E-mini. It's always the S&P 500. It has much more volume and much more liquidity than anything else. And gold and the NASDAQ are considerably far down on that chart. So I like to say, you know, don't buy something you can't sell. I used to go to the CME and visit my traders on the floor, and I would go over and look at the lumber pit. S&P pit had at least 100 people yelling and screaming and waving their hands at each other, and the lumber pit had 3 people. So they weren't making very many trades. You don't want to buy and sell lumber, for instance. So here's the SPY on a 15-minute chart. Here it is on a 5-minute chart. They look very much the same, and you can see SunnyBands works just the same on this one. They don't look any different. There's just SunnyBands still working. And there's the 5-minute. Gold. Now, there's a lot less liquidity on gold, but I like to trade gold on a daily chart and hold it for longer term. In fact, I'm about to buy some more gold this week because it's come down and hit a previous attractor. And I'm looking at the gold chart now. It looks like it's finding a bottom. I'm not sure of that yet, so I'm waiting for proof. And here it is on a 15-minute chart. Here's crude, and crude is way down on the liquidity table. And you can see right here, this is where the contract changes. That's expiration and inspiration. Here's where the new contract opens. And here it is on a 15-minute chart. You see how thinly this is traded? That's why I don't like to trade that one. It's hard to get in, it's hard to get out, and you get split fills and slippage. And there, oh, well, there's the liquidity table. Here you can see the S&P 500 is right at the top, and then we've got a bunch of notes and bonds. And then we come down here to the NASDAQ, gold, soybeans, and crude is down here. And you can see there's very little liquidity in the ones down here. The liquidity on the S&P 500 is so great that it goes off the page. If you don't already subscribe to Task, Traders Technical Analysis of Stocks and Commodities magazine, it's very valuable. I have over 100 copies of it. I've been saving it for years and years. Now, which symbol has the potential to make the most profit? That's in addition to looking at the liquidity, you want to see where the money is. So which one or ones should we trade? And this is a table of the ES, crude, and gold. And you can see the buy and hold values right here, the ideal profit if you got all the yellow dots, and the PHW, which is 60% of the ideal. And you can see real quick, the ES has the most profit potential, gold is next, and then crude. And you can see the number of trades. So if you double click on the PHW total, you can sort by lowest to highest or highest to lowest. So which one do you think I trade? The one at the most profit. There's only one reason to trade, and that's to make money. If you're trading for any other reason, let's go back to that one. If you're trading for any other reason, like for the excitement or for the challenge or whatever reason you're trading, let me tell you now, there's more excitement in losing money than there is in making money. The pain from a loss hurts more than the excitement from a gain. And then people want to know why I've been trading for 44 years. Why do I sell my indicators and do consulting? And why do I still trade after all this time? I've been asked that many times. Somebody even said to me in a chat one time, why don't you retire? Well, I retired at 30. This is what I do for play. I do it to give back to the industry that has been so kind to me because I love it every day and I still like making money. When I was a young trader, I noticed that I used to take newsletters. Before we had real-time data, we had newsletters. And I had about 12 of them that I subscribed to. And one of them was Larry Williams CTI Publishing. And I saw on the back of the newsletter that he was just down the street from me. So I called him up and I said, may I come over and visit you? And he said, sure, come on. And he showed me how he traded. He showed me his data. He showed me what he was doing. And because of his great generosity, I decided to be generous too. So if you have a profitable series of trades, and I've only got a couple of minutes left, let's not do this one. This is my compounding scheme. We really don't have enough time left. So I'm going to escape out of that and go down to the end and give you my contact information again. And then we'll go from there. Let's see here. Hang on just a second. All right. So here's how you get in touch with me. You can call me on Skype. You can call me on my cell phone. I answer it myself. You can email me. You can go to my website. Well, so much for that. I'll put that back up. Oh, darn it. Hang on. Technical difficulties. There we go. We'll put this back up and leave it. And I know Jeff's got something to say. Jeffrey, over to you.
All right. Got time for a couple questions?
Yes, of course.
Let's see. V wanted to know, what's the name of that magazine you were referring to?
Technical Analysis of Stocks and Commodities. Let's put it up real quick. You see my camera? Yeah.
Yeah, we can.
Technical Analysis of Stocks and Commodities.
Yeah.
And if you go to traders.com, you'll see how to subscribe.
Yeah, traders. Yeah, and they're also a sponsor. So thank you, Stocks and
Oh, are
Commodities. Yeah, for sure.
Nice.
Ricky wants to know, will this work with Forex instruments? Thank you for the question, Ricky.
Any symbol on any time frame. Yes, it works on Forex.
Okay. Let's see. Does this work on stocks like VMC? Was a question Mustafa had.
I don't even know what that one is, but yes, it works on every symbol. I even use it on the VIX, which is not a stock at all.
If you get in touch with us, we'll send you a chart of what it looks like on VMC. www.MetaStock, actually, metastock.com/sales chat. If you want to chat on with us, we'll send you a chart. V here.
And remember that with the trial comes two Zoom meetings with me.
Right, yeah. I like her. How do we get the most information? And she is very good, very understanding, and she has a very good understanding of the DMA. I think that's a compliment. He likes you.
Thank you.
And we do have
I'm going to look at it real quick. VMC, I'm going to put it on my computer. And right now I have it on the daily chart, and the current signal is short.
Okay. Reg said that's a hearty amen to why you trade.
That's nice.
And then Sunny, love your spunk, your brains, and your charity.
Say that again.
Charles says, Sunny, I love your spunk, your brains, and your charity.
That's nice. Thank you.
Mustafa says, good presentation.
Thank you. Thank you.
Not a lot of questions. Oh, Craig says, what hours in the day do you answer a call?
All of them.
Yeah.
If I'm on the phone with someone else, you'll go to voicemail.
If you're on a
I'm
webinar.
in a trade, you'll go to voicemail, but I will call you back.
All right, very good. All right, Sunny, I want to say thanks for joining us on a Saturday. Sorry that we had to make you get up during your normal sleep-in time.
I think I'll go back to sleep now.
Alan says, I like your Appalachian accent.
I don't have any. I used to sound like Dolly Parton.
Oh.
I grew up 16 miles from where Dolly Parton grew up.
Okay.
And I used to sound just like Dolly Parton, and I did my best job of approximating a California accent.
I gotcha. Okay. Cool. Well, I think that's all the questions. I'm going to talk about how to get it. the specials that we're offering, the Zoom calls. I'll let you go back. Are you gonna take a nap?
No, I have to ride Sunny side of the street.
All right, all right. Well, thank you for your time, Sunny. I appreciate it.
All right, Jeff. Thank you so much.
You bet. All right, let's
Have a good weekend.
We'll do, yeah. All right, let me go ahead and do this. I'll make me the presenter. And I'll show my skin. And we'll talk a little, oh, and I'll show my webcam too. But I might want to actually mess with it a little bit. It was bugging me in terms of where it's at. Okay, that's fine. All right, that's enough. So here's just a chart on Spider. But like, Sunny does a really good job of kind of explaining this. The things about the dynamic moving averages that she used to construct the the SunnyBands they're unique. They use this average true range. I like how she kind of talks about like trading or dancing with the market. They're calculated dynamically. You can use them to do bullishness and bearishness. They're designed to dance with the market seamlessly. So they do a really good job. The SunnyBands, of course, are designed to kind of hug the price. Yeah. And then you also get the DMA histogram, a SOAP measurement, which is something that's fairly unique to MetaStock, as far as I understand. I think she also has it in the TradeStation version, but this will allow you to see if you're in a bullish area, a bearish area, or if you're congested. And of course, it's completely built into MetaStock with the templates, the scans. There's 3 explorations. You can look for stuff that's flat. You can look for entry signals. You can look for setups. So the difference, we had a question in the chat earlier, what's the difference between setups and signals? Setups are just kind of what comes before the signal. If you're kind of getting a stock that's kind of looks like it might have a signal soon, it'll show up as a setup first. So you can kind of build a watch list that way if you want, or you can scan for signals. That's the difference really between the two. So you've got the expert advisor. It's going to go in and highlight the areas of congestion. It's going to have the trend ribbon for the state. It's going to give you buy and sell alerts. All of it's built into MetaStock. And Sunny did a really good job of putting this together in terms of the commentary, kind of giving you the dashboard view, kind of giving you some ideas, her trading rules, what she actually uses. All of those are kind of built into the commentary. Rich says, this question might be too late, but do the arrows follow the rules of the 4-page trading plan? I would recommend that you kind of go through the trading plan. We built the arrows around to her specifications, but some of the stuff that's in the trading plan are like, well, you can kind of see it right here. Don't trade anything with money you can't afford to lose. All traders lose money. They don't always tell you about it. Use 2 charts. Those types of things, those trading rules that are kind of listed out there, use 2 charts isn't one that's actually kind of built into the buy and sell arrows. So, definitely you'll want to go through the trading plan. The arrows are a good starting point. Great question, Reg. Appreciate it. Let me go ahead and send that to the chat. Okay. When you sign up for this, you're going to get a one-on-one call with Sunny Harris. That'll include your first call. She's going to talk about what SunnyBands are and how to use them. The second is going to be an application session during live markets. Sunny likes to talk a lot about how she's really good at customer service, and she is. Like, you can call her anytime. She answers. She's very, very much somebody that's very addressable. So, and we also, when we released this, Sunny and I sat down and we did a bit of a boot camp session. Sunny did part of it where she kind of talks about SunnyBands and kind of how to use them and went into a lot of really good detail. And then I just did, hey, if you're new to MetaStock, here's how you can open up a chart. Here's how you can run explorations. Here's how you do the commentary. Here's some other things that you need to know. 2 really good sessions. Obviously, if you've used MetaStock, the MetaStock section won't be as good for you, but the idea here is if you're brand new to SunnyBands, there's a part of there for you. If you're brand new to MetaStock, there's a part. If you're brand new to both, there's 2 parts for you. So there you go. Normally, the SunnyBands has a retail cost for all of the indicators of $5,713. As a conference special, we're going to do $39.97. We're going to back it with a free trial to MetaStock if you need it, a 7-day money-back guarantee, You can do that at metastock.com/conf promo. You can give us a call at 800-882-3040, or you can go to metastock.com/sales chat. So give that a go. Again, 7-day money back guarantee. And during that time period, you're going to have those 2 training sessions with Sunny to kind of go through exactly what she's using it for. So metastock.com/conf promo, 800-882-3040, or metastock.com/sales chat. All of those are good ways to get in touch. So coincidentally, here's the information. V, if you drop me actually, you could just drop her a message. V wants a copy of her presentation. Sunny@moneymentor.com. I'm only giving that to you because she already did. Otherwise, I'd make sure it was okay, or just have you email her at me. But yeah, if you email Sunny, she can get you a copy of the presentation. So very, very coincidentally, I want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. Stocks and Commodities Magazine, you can find out more about them at traders.com. They've sponsored our events at MetaStock for 11, 12 years now, ever since we started them. And I want to say a big thank you for them for supporting the events and all that kind of stuff. So if you want to get a subscription to Stocks and Commodities Magazine, go to www.traders.com. So thank you for the sponsorship and the support. Let me get to a different point in the presentation where it's a little bit out of order for now, just because of the schedule change. And this was kind of the old side too. So let's go back right here. And we're going to do a prize drawing. But I'm going to grab the new side copy. I'm going to grab it. Normally I have all this kind of stuff done, but we did have a bit of a schedule change, so Control V. Okay. All right. Prize time, Mr. Lewis.
I am here.
This is the last prize of the conference. Is that kind of sad?
What's that?
Is that kind of sad that it's the last prize of the conference?
It's always sad, but it you know, if I'm honest, it's a long week for the likes of me and you, or that are here for every moment and running things in the background. But yeah, it was a great conference. I think I mentioned it earlier. Mostly I don't have time to really, or the ability to listen to what everyone's saying. This time I actually took time to try and listen to some of the presenters very closely. And although I know most of them and what they have to say, I was really impressed with the scope of knowledge and genuine ability by all of these people. I'm really astounded by it. Excuse me for saying though, we provide quite a bit of value for nothing to our viewers. I'm impressed with the value that these things offer.
Yeah. Well, good. I've been to so many of these, and I always pick up something new, something I didn't. Yeah. You know what I mean? It's kind of interesting too. That's something pretty incredible for when you've been here for, 30 years doing it. Yeah. How many of these conferences have we done, right?
Yeah.
So we're going to give away a mega prize. We're going to give the MetaStock prize away. So
all right.
What we're going to do, we're going to do 3 months of MetaStock.
Yeah.
The real-time version. I might have mentioned, MetaStock does a few things. Did I mention that it's been rated #1 31 years in a row?
I've heard that.
And also, did I mention scanning? How about market testing?
Oh, amazing.
How about forecaster?
It's all there.
Commentary yet?
Is there anything else you really need?
Yeah,
I don't think so.
So we're going to give away 3 months of that with 3 months of Zenith. Zenith is something that we normally do a bit of a class on. I don't know why I didn't schedule one, but Zenith is actually a product that they spent $1 billion developing and designing. It's got it's got all kinds of different research, broad market fundamentals, all kinds of stuff. If you were to go as a bank and institution and subscribe to Bloomberg, this was a platform that was developed to be a competitor to Bloomberg. It's got 3,000 supporters or 3,000 reporters. I think it's actually 2,000 reporters at 200 different news bureaus that feed data, news, and information. One of the best feeds out there. We're going to give away 3 months of that. It's only for if you're getting it as a customer, It's only about $165. If you get Bloomberg, just to put that in a little bit of perspective, it's $1,800. So we're going to give you 3 months of that. We'll throw in 3 months of Learn MetaStock. Kevin came in yesterday and talked about kind of like all the services that he offers, but that'll do a really good job of helping you get set up and running. We'll throw in the white glove service as well, where you can have 3 months of, well, no, where you can have a call with one of our support reps and they'll help kind of walk you through everything. So it's a big package. It's the MetaStock Mega Prize.
The super mega prize, absolutely.
All I need from you, Mr. Lewis, is a number, and it can be anywhere between 1 and 10,803.
10,803. One moment, please. According to the Google random number generator, that number is, are you ready?
All right.
4368. 4,368.
Okay, this is a Victor A with a Gmail account in the USA.
Congratulations, Victor A. By the way, Jeff, I do notice that Mr. Dalal has joined us, so we should probably take a moment to thank him for altering his schedule today and showing up an hour early.
Yeah,
due to our schedule alteration.
I'm going to say that I'm going to thank him for doing that as soon as I write this down. Because otherwise, like, I'll be like, who won? Always good. Peter, I do really appreciate you coming in a little bit early today. I know you had a tight connection and you actually made it well in time. So actually, we're just getting ready for you. So let me go ahead. Eugenia, welcome. She says, awesome, thank you. Mike says, awesome prize. V says, thanks for an awesome week. So thanks for being here all week, V. One of the things, it's like, it's a bit of a group effort. We have all of these speakers that come in and they spend some time with us. We have all of the attendees that come in and, I don't think the speakers would do it if there's nobody here. You know what I'm saying? So it makes a difference. Thank you for being here. The attendance has been really good this week. And yeah, it's been a great session. So we'll self-congratulate ourselves some more after.
Yeah.
Now, thank you. Thank you, Mr. Lewis. I appreciate the help.
Thank you.
All right. Our next and final speaker is Peter Dalal. Peter Dalal has been a longtime partner of MetaStock, decades. He wrote an add-on that was specifically developed towards trading the Forex markets, which is Forex Traders Advantage. And that was one of our most successful add-ons of all time. Over the last couple of years, he's kind of been putting more, he's created a really, really cool add-on that he's going to kind of talk about today. It's called the Magic Trader add-on. And I just want to say thank you, Peter, for one, changing your schedule, two, making this really cool add-on available for MetaStock. And let's get you started. I know we're starting a little bit late, but you're the last speaker, so you don't have a hard cutoff.
Can you hear me?
Yeah, I can hear you now.
All right. So thank you for having me, and thank to everybody who joined today. We send out the email at the last moment and tell everybody, please come earlier, an hour. So we sent some emails also. So that's the best we can do. All right. And can you see my screen?
Yes, we can, sir.
Okay, perfect. So I have everything set up correctly, I guess.
Yeah, first try too.
All right. Oh, and actually, I don't have any help today, so I'm at my own. I said, let me try.
All right.
Usually
Good.
Somebody else helps me here. So, okay. So anyway, thank you very much. And thank you for your kind word, Jeff, as well as Greg. And we will have a good session. What we're going to do different this time, I'm going to try to give Jeff more time so he could go over with a lot of features at the end. And I'm going to stick with one strategy. And the difference between last time and today, I made some changes more or less related to trading, trading in a way, more setups. And I did some kind of cost case study for cost, actually profit analysis, right? in terms of not dollars, but percentage. So people get an idea, and it perfectly suits to represent current market. So I try to do all current dates, right? Not today's date, but if I get chance, I'm going to show you some of the scanners for uh, 18th. I don't know why it keeps doing it, but let me cancel the scanner. If I could show, I'll do it. But it was on a 15, which is good enough, right? So hold on a second. Let it be whatever dates I picked it up, but it will be interesting to see it. So again, we're gonna do some of the disclaimer and especially AI. And as I mentioned last time, we secretly embedded future highs, that is artificially looking at the future. But because of I was not having protection, which I got it from MetaStock, they wrote the DLL for me, and basically now I'm very conservative in trading. I was a reckless trader before I went to the Wall Street, and I learned over the period of time. So being conservative, we still kept quiet and we still keeping low profile. But I will point it out if I have a time. Magic zone levels, they're dynamic and forecasting for the future. People who are in my alert room, they already know it. So there are so many things, and because of Jeff, right, and lack of availability of data because they're revising a bunch of revisions for the MetaStock, we couldn't get the option data. In a frustration, I went there, wrote artificially without option data, which is a gamma squeeze, which is a major part in institutional trading. Lately, it's becoming popular, but it was most kept secret, and we figured out how to see what is the market maker situations are or what they're doing it. So it is nothing big thing, but it's out of the money calls when people going bullish. So they have to hedge themselves, and I want to know where they are. So those are artificially done. So we don't make too much noises in an industry because that also subject to a lot of headaches for me, and I really don't have time to take phone calls. So but eventually, hopefully, right, Metastock will incorporate, but there will be a time because they are really very busy. But we are ahead of the schedule long time ago without making any noises. So that's the background. So today we're going to talk about different things. It will look same, but it's not the same. I like to change things, right? So the biggest thing here is the basic element, right? And the goals, why you are here. So we're going to talk about briefly, but biggest thing here is permutation and combination. And I'm very conservative. When we talked in our alert room, I told people there are 50, 100 risks, but everybody who talks to me privately, they knew there are thousands and thousands of risk combination. And I'm going to show you right from Google formula how many risk combination do exist, and they cluster themselves. And we are having patents and so many claims, right? And we still filing patents, right? And we are ready to file another one pretty soon because I'm waiting for Dell for some documentation, and they are involved with us, including NVIDIA as well as what do you call Intel, since the birth of Axion chip. So that far the history goes, because what I'm expecting to do calculation, they have to be keeping up with that. So I'm always try to look ahead what I'm going to need. So I want people to pay attention, and history is already written, and if you don't want to believe, it's fine, but they are there. And Metastock is the one because they allow me to do all the symbols and highlights. And when you do that combination, that many risks exist and there are sub risks exist. So part of the problem we have it in the industry is nobody knows, right? And people don't know how to control it and identify it. And thank God to MetaStock, one good feature, That was not my sequentizing, which we also file for patent, but they provide the platform for that, and that is the symbol, how you could go up and down with the symbol. So you could also create ideal spots in trading. So this, some of the people who are new, it's like a super what you call confusing, but in reality this is what it is, and eventually you got to learn it. So some of the things I did not even tell Jeff yet. And now he's also surprised how I really took advantage of the existing platform, which he was telling. I was there when they were spending I think 1.2 billion, if I remember, right? And I was part of all these things when it was constructed, and they did a great job. And MetaStock practically programmed it. I was there. So I have this Magic Trader journey since officially 2006, but we were working while I had other product in what you call sale, and we just release kind of things, right? My nature is like that since I was a kid, looking ahead. And if I tell you this story, you're not going to believe it, but I have a lot of eyewitnesses still alive, and I'll give you one. When I was, I think, in 1970s, around 70s, I was telling my dad that there will be flying cars one day in the industry, and people freak out. And another statement I made in 1974 to a bunch of doctors when I was allowed to look at the operation, right? I went to see it, and they said there got to be a way we could print those things in the future. I said, what are you talking about? I said, 3D. I have witnesses, so it's not a big deal. That's the way my mind works, totally different than normal. So this is very important. So pay attention to that. Don't get scared. We have everything under control. So that's why I want to give you some ideas, because Jeff was nice enough to give me more time now. So I could tell you a little bit here and there. So we're going to do what I could talk about the example, practical examples, how these ingredients works. Ingredients, out of many, we picked up 5 of them, and now I'm going detail. You could pick up 2 or another catalyst and do combination. So that's also called clustering. And you could have, you're going to see the example where you could make few bucks. I cannot guarantee anything because I'm registered, but you will see, right? Worst come to worst, you take some loss and get out, right? But we know how to trade with that. So I'm going to show you a little bit secrets here and there. Then what you call, there is a strategy we come up with, because Jeff always wanted, we want strategy, not everything else. Okay, so we give you what we have from which people for last 4 or 5 years, they've been already knowing what the ingredients mean. So we pick up 2 of them and add the catalyst, and that becomes a strategy. Very simple, right? So we're going to talk about that. Lineup means there are number 1 and number 3, which I'm going to talk to you. And when they line up and we add the catalyst, it becomes a strategy, and there is a trade, right? So then I'm going to teach you today a fabrication of the how to fabricate that. Then we're going to talking about the how to explore these things, how to find them, and a bunch of explorer you need it, right? And when you use them, you could find the trade very easily. So that is going to be very, very useful. And what I did, the steps required. So generally, I don't get into those details because we don't have time to talk in an hour, right? So today I wrote down 5 simple steps. What you need to do this strategy, and that will also boost a couple of people confidence instead of getting confused. So I wrote down exactly what you need, and then you got to do practice, right? And I heard one person from my room. Hopefully there are other people there, and time to time I'm going to ask you, because they are all eyewitnessing. And don't underestimate scalp swing, which we registered the trademark, and that is a part of our success. Scalp swing, which I use every day, and basically we reduce the drawdown to almost 0, and people will tell you, yes, it is true, or very little drawdown. So your entries are perfect. So you make more money, either you trade equities, futures, or options. And I'm not going to speak much about it, but people eyewitnesses, I take my own competition and people eyewitnessing, right? And hopefully people in audience will tell you, but those performance don't mean nothing because we can't guarantee anything. That's me. You got to practice it, right? And this is what I learned on a Wall Street. We do more practice trade on a Wall Street than doing trade, because you don't need to trade more than 5-6 of them, right? And you can handle it practically, right? And meanwhile, what do? You practice while you have a live trade. And Think or Swim allows you to do two types of platform, their own at the same time. Probably you don't know, called Think or Swim. So I give you a little bit hint about it. So later on, I'm going to discuss a little bit about options. If you want to learn last 2-3 of those recordings, Jeff can give it to you. And I went into details, the basics one, but it's very useful. I'm going to show you the slide a little bit here and there if you have time, but you better go and look at those recordings. And I give you the biggest confusion for the new guys are in the money and out of the money, and how to figure it all out for put side and call side, because it's confusing. So study that table, and it's a lot of work has been gone into, and I prepared it. It took me 4 hours to do all this, preparation, but you could have it and use it while you're trading, because anytime you trade option, this is most important table. That's why I want to give it to the people who came in here. All right, now we're going to talk about the disclaimer, and I'm going to keep it short, otherwise we'll be here for another 3 hours. All right, so Jeff will have the newly made sign, what you call disclaimer. For AI, we had to go through, so I will spend a little bit more time there because it's necessary, and this is our intellectual property. We have notified those people, and also there will be a time to straighten out, because they not supposed to take any of our information. And I got news for you. And probably Jeff, I should send you that article. Reuters put it in. There's a big chaos going on between patent office and all this AI platform. So hold your horses before you try to ask questions on that, because you may be indirectly violating IP rights. All right, and we're going on a record today officially, right, that you cannot take any information from Magic Trader and put it over there. I had to go on a record because we consulted our legal team, and we have right to say that because it is intellectual property, and I cannot name it, but I have one witness probably in there, right? And one of the leading bank in the country won't let anybody put anything on that AI platforms. So you never heard of that, all right? We're not trying to give you a hard time. This is what lawyers want it, then you at your own. So Jeff, I'm going to send you latest disclaimer pretty soon. All right, so I missed it. Okay, so basically what this disclaimer telling that everything we're doing is for education purpose only. Do not borrow money and trade, because that's the last thing you want to do it. And don't take unnecessary risk. At this moment, I hardly use margin, very rare. If I can't afford it, I don't want to trade it. So I don't have to worry about margin calls. And it is true that, and it's not yet approved, right? Or approved means we not granted, but I figured out a way, right? There could not be any margin call whatsoever, right? So I cannot go into details, but I designed that back in 2008 or 9. So basically, just think about it. So I had a margin call, and that pissed me off, right? And I said, I'm going to find scientifically something. I will never have a margin call. And then after, I never had one, which is a big statement. All right. So CFTC rule 4.41, I will tell you immaturely because there will be another slide. I'm registered and my company is registered with CFTC, and we took some exemption because I cannot manage money and do this thing at the same time because it's not fair for customer. So we reach out to them, we put on a hold, and I took the exemption, but I may go back, right? And I did manage the money, and I do very well. My clients also do very well, right? But I'm not interested in managing retail money. It's all kind of, institutional money. So I'm happy with that. So I am not going to manage general public money. You got to be QIB or QIP, whatever the qualification, you got to get it. So this way, if I lose money, right, I don't have to worry about it. But with Magic Trader, we have, thank God, a lot of help. So everything is for education purpose only, and it's all hypothetical. Even we've been talking about what regulators. Every slide they made me put this thing. Why? Because even though it's a live trade, you got to consider it as a simulated trade. There is no doubt about it because you cannot duplicate that. So people can tell anything they want, but there is no way somebody can guarantee those consistent results. There is no such thing, and they don't want us to use even consistent name, right? Otherwise, I will get violation. So I'm trying to follow the law. So don't ask me, can we do 100%? We going to what? I said no, absolutely no. And people in my room, I witness my live trades, right? And they will tell you, and I will tell you, I just did a new strategy and I lead by example, right? And I have not lost one single trade yet, right? It's an arbitrage, right? And there you don't have to put one penny. How that sounds. Well, I innovate things, so just try to pay attention. And I sent them the documentation, especially on a mentoring. I made a commitment. As it happens, they're not allowed to trade. I send the screenshot of my broker platform, but all are considered as a stimulated trade. Options are risky, but I love it. But you got to figure out how to defend yourself. So define your risk, and you need to control the risk and take a loss if you have to take a loss. I do. There's nobody can tell. Let me put it there. If you're doing vertical spread, you make money on one side and you lose on the other side. So don't tell me an option always you make money. No, you're doing the net differential. But if you consider as a single leg, then you're losing money on one. So don't get into those discussions that you cannot lose money on option. You do. These are the facts. So that's why it's unusual for people coming for a long time. This thing came in existence because now they want to make sure you read every slide that I told you that. Okay, we'll do that. But you can't fight the city hall. Whatever they want, I do it. Now, this is my company here also telling everything is for education purpose only, even though I show you live chart. I'm not telling anybody to buy or sell anything or hold it. So don't please ask me that because they don't like me to answer those. I'm trying to help people, but people who are on my list on a free for last 25 plus years, I've been doing it, right? And basically, I have a way to send the message, right? What I'm really thinking, and I'm still not violating the law because you learn that lingo, right? What regulators allow you to say, right? That's how I stay on my line, and people are benefiting, right? Let me put it this way: I have all this on a record before crashes happen in writing. I have wake up people, all right, for crashes, but I never, publicly say much. But my people who are in my group who signed this disclaimer, they know it. We have all those evidences. So I don't need to be hero. I am trying to save little guys so they don't get all, start eating them. That you are there for their lunch or dinner, something. So be careful. So intellectual property, every single thing you see is all more or less filed, right? Many things we have been granted the patent and patent claims, right? And we have a lot of trademarks and a lot of service marks. So before you use any of us or any of our intellectual property, just be mindful. I don't fight with people. We give it to the law firm and let them worry about it. Because I can't run business worrying about all these things. Now this is the intellectual property. You can read it, we're going to spend a little bit more time. So anything, right? This is the most important part. So this is all what it says, right? All our like social media, webinars, even this public webinar, right? Everything on this display are our intellectual property, either is copyrighted or we have filed patents or patent pending or whatever. But you have no business to take this information, reverse engineering, and try to capitalize or for your own purpose. We do not allow it for last how many years? From 2004 we started the other product, and even after 2006. And we constantly remind them that this is ours. And then when you try to not obey, then you got to deal with the, legals. All right. So I don't fight with people. Let them fight with the legal team. Right. So intellectual property, we have instructed the people who are around me using Magic Trader, do not, for curiosity, you go and take any part, copy charts or anything, put it on any of the AI, such as Chart GPT and whatever it is, right? We strictly prohibiting everybody publicly. This is the first time we going on a record. All right, so please do not get there. Reach out to us. If laws allows it, we'll do it, but don't try to break the rules we putting in here. So this slide will be there when you get the recording. Read through it and please follow what we are trying. And we will be revising, right? Because it's now we are part of the discussion. Reach out to many of those platforms. So we putting out there, right? So they don't know that we didn't knew that, right? So lawyers will deal it. So hopefully MetaStock also claim their own, right? Because this is serious matter and patent office is not too happy. Not with us, with those platform people. It's free or whatever it is, you're not supposed to take our information, put it out there. We don't put our own information there because of the same reason. All right, so copyright things, right? President is back again, so we'll have fun a little bit, right? So he's the one who put that rule there, Mr. 47. Okay, so everything is stimulated, right? And this is our NFA ID. What happened here? Did I do something here? Right here. This is our NFA ID 352991. I don't know how many people even in Expo talks about their license. According to CFTC, we're supposed to declare that. All right, so anybody wants to check our record, be my guest. So far, on a recorded line, I'm telling you, we have no trouble from regulator because we try to follow the rules. We get audited, right? So, and we're not even supposed to put any testimonial, right? They don't like us to put any testimonials. What some people can talk about themselves, but that doesn't mean there's any guarantee we giving us, all right? So even live trades, people looking at my live trades, but that doesn't mean I could repeat myself or I could guarantee you anything. I can't. All right, scalp swing is our invention, right? And I figured out, I don't have to prove anything because it's been proven in front of many people, right? That it takes less time and it is less time you expose yourself on a horizontal time risk. And it is also, many people will not agree here. And I hope some people are here, they could speak out at one point. And it is true, I didn't tell them to check it. When people speak here, they compare my product with their product, and they will tell you we are supposed on a daily chart 2-3 days ahead of them to get a signal. And it is true that we take less time or maybe same time because there may be a possibility, but our method is more precise because we beat them in a drawdown. All right, so what we're going to talk about it, what is our goal? How to trade ingredients strategies with Magic Trader. There are 5 ingredients, but beside that, there are more ingredients, right? Magic line, which looks like the lines you look used to, but they are not the same lines. They are not designed the same way. It is having different way of design, right? And they've been working since 2006. Very powerful. I trade every day with the. I have no idea how to even trade with the other lines anymore. I thought I have a good memory. No, but it is true. I wrote a formula how to get rid of those lags. So hopefully one day we will release that. When I don't know, right? So it is the science. You got to fix those problems, not keep using which was designed for a commodity business or commodity trading. And a lot of people inherited all this MACD and everything using with the stock. That's not the right thing to do. You got to fix that problem. And I'm not the authority to fix it. I don't use them. Probably I had to learn from Jeff, I guess. All right, how to use simple, simple lineup of few ingredients and catalysts as a trading strategy. That's what we're going to teach you. That's a lineup 13 we're going to teach you. So those comes vertically lined up, right? And use the catalyst. That's the strategy for today. And you're going to see not 3 examples, both sides, many examples. All right. They find the base trading, what you call opportunities in minutes. So when you use the scan, you could find them in a matter of minutes. And I got news for you people who are using scanner. You don't need to scan 5,600, whatever the securities are there at the time of opening of the market. You short them out before that. So now you have few hundred. Or what you do is expensive. Go with the NASDAQ 100, S&P 100, or S&P 500. You don't need those 5,000, especially in this market. Stay conservative because there's a lunatic this market. You're going to get whacked. What used to be swing trading, a couple hours to 2 weeks or 1 week, now it's a couple of hours in a 1 day. The swing is done. And you need extraordinary tools so you could take advantage of zero DTE or whatever they're talking about. We use all, but I'm just trying to get a sense of humor here. Like I don't know anything about it. Zero DTE, right? So option expires same day. You could do it if you have technology. That's why we are having a good time. I'm not going to say much, but we did more than few hundred trades, right? I had 7 losing trade because I do very fast and sometimes you goof, right? And but take full responsibility. But it was eye-opening for people around me that you could do scalping on option trade. And I'm telling you, I'm doing arbitrage, right, with no cost, right? And in a day, I do 20, 30 of them. And I love it because I don't have to lay out any money. In fact, they pay me to do the trading. How that sounds to you? I learned this thing from my first association on a what do you call Wall Street. I got my license and I got sponsored and I did LLC partnership with a company who was the best in a business at that time, right? Who did overnight hedging, and I was just fortunate. So everything I do has to have hedging around it. Otherwise, I feel nervous. So in this market, you have to learn how to do hedging. Otherwise, you will be wiped out. It's crazy. So now I put these two. When we started presenting here, I talk about ocean as well as galaxy. Now, just imagine if you have to be expert about both, or the deepness of ocean and how many types of fishes and how many types of stars and a planet. Magic Trader is like that. So I don't want to mislead you, but I want to be very upfront with you. But it is designed in a way, just like a lineup, you could stick with a couple of things and you can do very well if you know how to do it. So you have to ignore everything else. You keep an eye, but you don't have to worry about it. You stick with what you learn and build up your, your account from 1 or 2 strategy. And it is true. I was very conservative. I was telling, 50 strategy. Now everybody around me knows it is not true in a way. I was very conservative. Now, first time I show them is more than 2,000 strategies we could trade with Magic Trader. And I showed to them. And especially in a mentoring program, if there is anybody there, they could put a text to what do you call chat, and it is true or not. Let them tell you. I don't know who came today. It's hard, right, to believe it is true. Okay, so we're going to go to the basic elements, how the chart looks like. And Jeff is going to do what he has to show. But this is the simplest way you could look at the chart. These are required to make decision, right? And basically, this is called health window. It took me 3.5 years to design it, right? And I had to go through series of pattern changes because we file and we found more, so I can't hold it. I got to give it to them, right? So we refile it, and what you see here, it is very complex matter, right? And Jeff can tell you first 14 months after giving them my formula, because they know how to clean up, right? I'm very conservative, but they have a better way, so you don't use your computer too much, right? And they did a great job. It's working, right? And it's working fabulously, right? So this is, we call heart, what do you call, heart of the Magic Trader, and it is something like health. So I got this idea when I got in trouble, when I had a stroke, right? So, I see these monitors there and everything. So yeah, there got to be a way I could represent the health of any security at any given time. And then my mind started working. How can I do it? So, and I can tell you that I did myself painful experience to make it more perfect than normal, right? So we're not teaching here that, but we're going to talk about that. There is something you could trade with that, and I'll give you one hint. So when it's two lines parallel, and this is the green line, and right, you could enter. It's as simple as that, right? So there is a way you could. I teach people you could enter here also. But in conservative, you don't know anything. Two lines parallel and a green line and a stick here. Go in there, and you see the obviously. And sooner you go is better, because this is a horizontal time risk. It has everything to do with the time. As you go further, it gets you in trouble, right? So like here, trouble means you were in profit, now it's gone, so they're taking profit. So you either get out as soon as there is a PB sign now, right? There's a pullback, so you get out at the pullback sign. So let's go on a left-hand side first, so I could be helpful to you. So these colors are the first breakthrough which we got the pattern, right? I prove that it's not just buying. So buying has 3 different of colors. That's why you're going to see different colors, right? Not on this side, but at least you could see one color. And what do you call, the prices has 3 different components, right? Or 3 different compartments. So it's not just buying. So initially one set of institution comes in, then another set of institution, right? So there are institution, while things are going down, they will buy, and they will start buying. And I was fortunate to be one of them when I was trading together with them, right? So we have a large deep pocket. So it's not here this chart, but later on probably Jeff can show you, right? And if I get chance, I'll show it to you. So while prices are going down, there will be another kind of buying color of the candle, and that time we'll start buying it even though prices are going down, because we know that we have millions of dollars to put it in there, and we want to make the ship turn, right? So how we do that? We can put $50 million order at once, so we got to expect that this is going down. That's a good thing, so we will keep buying and we will turn into this thing. So now I hate to tell you, but this is how institution, our cost bases are low, and we will sell it somewhere here. So we will take it at a cheaper price from people, scare the hell out of them, and we buy from them and we sell them to other traders, and we make a differential. That's the idea. Same way, option buying, same way, right? While and we had a way to identify those moments. And Magic Trader, I have designed a lot of things which shows all this stuff, right? So uh, let me give you an idea. When you learn about this thing, when you have type A perceptor, we call, these are all called perceptors, price perceptors, underneath, and underneath this green magic line, and the red is above it, right? Institutions start buying. And it's been proven over and over again. How? Because I was in touch with a lot of institutions when we put Magic Trader first time on institutional basis, and I will tell you with them. Now I know my software works, so I don't do it. But in my trading room, I go on a, like Chicago Board of Exchange, and all the data we get it on option, because option out of the money and all these things we could see on a tape. And I have copies and copies of all those documentation, even dark pools, right? I have shown them the data. When they're buying, the symbol and color shows up here. How the hell? But we kind of artificially tracking them practically without using traditional data. Don't ask me how, but basically that's what the whole invention about. So basically, I'm not a god, but this you could see here, right? This is the institution type B, and this color, you don't need to worry about who the hell institutions are. In my trainings, I give a table, which kind of institution buying, right? Those things, right? So now I want to be with them. So I don't need to worry about Goldman Sachs buying or Citibank buying. Who cares who's buying, right? And this color tells me the story is a low risk, earlier entry to going to the moon. So this symbol here is another forecasting feature. That doesn't mean it's not here. When you what you call, I could show you evidences, it may be here, but this is institutional product. We give it to them because Jeff was nice to me. All right, and I gave my word. So you can't find the scanner, but at least you could see on a chart, and you could go in there. And long story short, this, when you put a click on this thing, it will tell you future high. That means we're going to the moon. Is there any guarantee? No. I get in trouble if I use that word. But all these years it's been working, what that tells you. And this is part of AI, is forecasting feature. Now, these two lines also have a forecasting feature. And it is true, Jeff is a witness. I didn't ask their permission. I apologize. But I thought it is a good idea when COVID came around and everybody's telling, including admission, oh, 2, 3, 4 months, it will be over. No. This magic line was telling is, it is not stopping. It's going to go, right? Because Reuters gave us the data for all these COVID business. And then we had to take this video down because it's not a good idea. But I was with a confidence telling it is going to be doing 2-3 years the COVID before gets under control complete, and still is not controlled, right? So but at least it got better. So those magic line were telling it is happening. Then I publicly speak. I'm not lying. And Jeff is a witness. Jeff, you could tell them, did we took out that video because of the politics here? And we could get in trouble because people will be scared at that time. Do you remember that? Or did they fall asleep? Who knows? But there are people who were attending that webinar.
Yeah, I'm sorry, Peter, I don't remember that.
You don't remember? You should go to those videos if you did not delete from your database. I spoke about it when COVID started, I think in February 2020 or something like that. Yeah. All right, but that's not the point, right? It is a bad thing to even remember because I was myself a victim twice. So we go through the pain with that virus. But thank God they found something that works right now. Okay, so now this is called catalyst. There are a bunch of types of that. We're going to be focusing on today on this one. Then this is that perceptor I'm talking about, and there are perceptors and advanced perceptors. Advanced means that tells me institutions are buying, right? So they are falling under advanced price perceptor. Here is a B1. So you're going to get what is this all? But this is how institutions make millions and millions of dollar decision, right? Suppose now I give you this one is a future high and it's a here says call plus. Do you have to worry about it? The software figures all out. I don't. It's been programmed. So now you buy a call option. Now which strategy you want to use it? Either you want calendar diagonal or you want a butterfly, that we teach people, right, how to select them, right? But even if you don't know anything, you buy vertical spread was come to us, and we call magic zone lines, right? So they show you where it's going to go next level. So you use that and get out. Or if you are greedy, or if you want to be greedy, you could stay to this second zone line, right? As long as this thing keep on going, right? You could take a ride, because this going means they are parallel. Then you got a problem. They're taking profit, so you got to get out here. So this is a direction line, and this is an entry point for the spike. And MetaStock has this symbol of this spike. Our spikes are custom made, has no comparison with the other ones, and this one shows up halfway, and you could scan that, so it's forming, and you could make decision to enter into. I prefer when at least we pass that stage and it's stabilized, and before it get anchored on this yellow bar at the open, you enter. That's the easiest way. When I say enter at the open, you look at the smaller time frame where similarity does happen, right? And you drill them into, it doesn't take much time. I use 60 minutes to keep flipping, 60 to 45, 45 to 30, and I find one, I stick with that. I have a two commonality, and I will make the entry. It's not necessary I got to wait. Some people want to enter at 1 minute on S&P future. I will agree. Maybe five minutes on a forex. But other than that, I look at 15 minutes. I'm happy if it is lined up like this, and I'm very happy. And I have least amount of the drawdown. Sometimes I go also crazy because I'm taking bigger risk, right? So, and option 20, 30 lots you take, or 10 lots, right? Or 5 lots is a lot of money and a lot of risk to lose it, right? So even though it's working, that doesn't mean nothing. So I will look at that 5 minutes. Less than 5 minute troublemaking for me. I can't digest that because I came from institution side, and we don't use those entry point 1 minute. In S&P future maybe, but 5 minutes was the lowest they will allow me to even go. That's the way it is. All right. So this is called spectrum, different color of stars, different color of fishes. They all here, right? This is like a plain vanilla. So this is the health window. It really helps me to make decision whether this security is weak inside internally or not. And that's what I care, right? So I don't take unnecessary risks. Like for me, it's weakening, right? Or maybe pull back, but I'm not buying until it tests this level, mean risk reversion area of these two lines, not what you may be using. So this is the place I will be looking to get it there. Sometimes I miss the trade, but I'm looking at at least 60-minute counter cycles to this downward. And if I see that it's lining up, I am buying it. So this way I have least amount of challenges to solve going forward. But most likely what I have seen, most likely it tests this area magically. So I like them to test it. I don't mind even they close above the magic line. So I'm ready to go. So I could take more risk. That's the idea. So this is very important. So this lineup, right, today we're going to talk about this vertical line is a direction line, and this is the entry line. It's all green. So when they line up and we have a yellow bar and has a symbol YB4, let me give you some story, right? And it was kind of imagination, right? So I told one of the MetaStock programmer, I have this idea. He says, I'm not too sure. I said, let me try, right? So the idea was, I don't want to look at the 15 minutes, right? There is a yellow bar or whatever it is, but I want to take that information and bring it on a higher time frame. So 15 minutes to 60, daily 240, I want to see that. That means YB4 means 15 minutes has a setup there is shown on a daily chart. And I could do same thing with the 60 minutes showing on a daily, 60 minutes showing on a weekly, and a monthly or quarterly, right? So that was the breakthrough. Just before we released a couple of weeks ago, I had a formula. Whether it will work right in the acceptance of the programmer, I did not know, because without him I can't go too far, because he has to do DLL things, right? So it is a whole different things, right? Because what we doing without DLL and what you do with DLL is two different things, right? Very complex when you go to DLL. So long story short, right? He said, put it on, let's see if it works. It did work, right? And I'll tell you, this was the breakthrough I was looking for years. So I could show smaller time frame what is happening. So this is as good as me entering on a 15 minutes without looking at 15 minutes. So we have those things as a part of this product, right? So probably Jeff can show you where it is, right? So the scanner is already there, right? And now you have this two lineup and this one, you made it. So you scan this and scan this one using two different ones, right? And two scanners, and you're good to go. That's why you got to get rid of all these 5,000 at the opening. No way you have a time to worry about 5,000. So bring it down with the volume, whatever the filter you want to use. Or you're not going to buy Tesla with a $300-400. Come on, give me a break. Buy something which is affordable, $50, right? I don't like to trade smaller stock. Everybody knows I get nervous because they are highly manipulated thing, and there is reason why somebody has a $300 price, like a MSFT $400, right? Netflix, whatever, right? And there is a stock which is $5, right? But it is true that I know the option strategy, and I have seen and shown people everywhere, right, in my alert room as well as mentoring. I could do Tesla option trade using unique option strategy with right some of the strategy with as good as 50 to 90 cents. Oh, we need to spend, and I'm at lowest risk, right? So it requires practice, it requires some knowledge. It's not that simple to put the structure together, and you have to know which strategy you're applying for. So here is a call spread, but you have to decide which strategy you want to use there, right? Whether you want to vertical spread or you want to buy just call, right? But here it says call, simple thing, but you have to select the type of strategy which includes call, right? Going bullish, right? So this is what it is, and this is the magic line. Rule of thumb: anything above red magic line, when the green is below it, it is going to the moon. And this is what we call belly shape. I prefer the belly shape formation, right? I have all the slope and all kind of things, right? Because I have about 19 different experts. But that will confuse people. That's why I don't talk much about. Yes, it is true. If slope is right, what do you call very steep slope, we go into the moon. But it also comes down speedier than you think. So, and the implied volatility goes to the moon. So you need to be very earlier stages. In that case, I teach people while the ship is turning how to get in there. So while people are sleeping, we are already in there. So boom, it's a gap up. And now implied volatility explodes, and I sell it and I go back again with the profit I made. Or I could stay in there, a couple of contracts, I will stay in there. So I become more practical after Magic Trader because I have the tools. All right. So I could do it, but you need to do practice. I giving this knowledge to every kind of trader, institutional trader, is a professional trader, or the guy just started. The guy who started, you don't need to learn all these things, but I got to cater this webinar to everybody. But eventually you're going to get trained, right? And you will do what we're doing it. All right, this is the most important stuff. I hold it for how many years, Jeff? From 2006 to recently, last 2-3 webinars, I started showing that. We knew it. Now let me give you an idea. This is the foundation of Magic Trader. There are 51 option symbols in a symbol file in the expert. You're going to get it with this Magic Trader Elite. And in option expert, if you see and count it, is about 51 symbols, and there are standard 11 highlights with the different colors of the candles. These are catalysts are there, so there are 11 of them. So rule of thumb, when you want to know how many combination of 51 symbols and 11 highlights do exist, I can't even damn pronounce. This is about 17, 18 figures. This one I could do is a 47 trillion, right? It's 11 digits. These are the combinations. So you take one of them, then you do 1 and maybe 8. So, and there are 51 types against 1. So you keep adding, it will, or I didn't do this. Those combinations are 47 trillion. That means each combination is a risk, bad or good, or it has a hierarchy, right? It has a different sensitivity. So which are the good and which are the best risk? So thank God to MetaStock. I was so fortunate when I figured out I could do sequencing. So I could prioritize these things. So please do not mess around when you get this product or going, otherwise you will not see the same success we have it. Because that's really, I don't want you to fool around. You could do whatever you want, then you will have to call MetaStock to reset it, and it's a painful, right? So please do not do that. It's years of sacrifice to get to the right priorities, right? And we even patent that, so nobody can claim, right? So it's a lot of things I'm revealing. I kept quiet for all these years because people will not believe it. Now I have eyewitnesses on a daily basis. So now I could say that because they have seen it and they have seen it's working and they have seen it's like mind-boggling. Not because I designed it. The credit should go to my daughter too. She worked day and night, right, to help me. That's why parents make big difference in children's life. And I'm proud of my children. All right, so these are the catalysts. So what I put a mark here, not this, not this. So today we lining up with this one. That doesn't mean you cannot line up with this. You cannot line up with this, but you could see by common sense, we all have it. He has no plus here. So this is better than this guy. And this guy has no 2 pluses. So this guy is much better. And you could see the bull size. It's the smallest bull, a little bit bigger, and this is like a champion, right? So now you could see, you could use that. It is one of the combination here. And, you know, in examination, right, they were freaking out. Even I had 2 years of inspection from regulators because the law here is anybody who wants to put a platform out there, you have to have them give a chance to review. 2 years it took them to understand these things. I heard from what he got from their smart team looking at Magic Trader every day. I'm telling you honestly, I had to go through this thing so they can stop me, you know, giving to the general public. Otherwise, they could stop you. Everybody's supposed to do that. Who does that? It's not my business. All right. So now what I did it, the bull side, there are different colors, right? So these are all different catalysts or the symbols. So this is that advanced price perceptor. And this is what I was telling you, this color. We call in a MetaStock dark yellow, but it looks like a green. So this color name came from MetaStock color system. All right. So this is the dark yellow. So basically, when you see that and there is an institution, you better don't be short at least. Otherwise, they will make you lose money. That doesn't mean it's guaranteed, but come on, this is the lowest risk at that time. And institutions are so keen to put millions of dollars there. How I know? Because I witness everything. I was just lucky. Now, this is their forecasting symbol and has a lowest risk here. 1 means lowest on a scale of 1 to 5. And It's telling buy call and it's a plus. You can't get better than this. This is the lowest thing. I close my eyes and I buy it. But of course, my entry, I will look at it 60 minutes and I will drill it down to 5 minutes if I don't find satisfactory answer. But most likely multiple smaller time frame will line up. So I don't have drawdowns. That's the key. And this is type B. So they have different colors. This is the first time we scientifically knock it down when real exchange takes place. So they were bearish to bullish and they neutralize every single trade. That's a neutralization, right? Sometimes still bears keep control, though this is that one, but there is a neutralization. Same thing happens on a bear side. So we have one symbol going up, right? And one symbol going down. So both are same, but even though what you call it is going down here, it is telling me special C be going to the moon, right? So I buy it at that time. And people in my room have eyewitness it. So this is your success story if you want to use Magic Trader. I do not like to trade without these things because that's my secret, right? And there's a method to the madness to learn. But if you don't have this thing and you have this one, what are you waiting for? You make them as a artificial catalyst and go in there because you have a spike and direction line clear. So there is nothing wrong with that. I prefer this one if I have to, right? But if there is an institution, I'm going there. Same thing opposite here. Look, this is my favorite, right? And I want to tell you, this will be on horizontal time risk, very small time window. But when it is consolidating, it's still down, it is going to take 10, 11 days and it will churn it down. So whatever the option strategy you're using, you got to be mindful, right? Because you're going to have a time decay and your option will option will lose the value, right? So there are strategies. If it is the case, I go and I do credit spreads here because I know it's going to go down. It's churning. So I'm looking for in a credit spread time decay, right? That's my best bet. So basically there are 200 basic strategies on an option trade, right? And on one of the webinar, look at that. I made a statement and I showed to them how, right? It's a single wide, double wide, or whatever. Think or swim platform, you could count it. And out of those, you got to be very careful what you select, right? Because you may not see it, but the outcome will tell you that you selected, you made money, but you have selected kind of inferior kind of strategy. So people who are trading options, right? And I'm one of them. I'm very careful which strategy I use. And I'm still learning, okay? So now the ingredients. So your mother is cooking good pasta. How the secret is there? So she taking ingredients, right? So I took the normal kitchen example. I did it last webinar. So basil is one of the ingredients. Then second is tomato. Then a bunch of spices we consider as one ingredient. And then the pasta, rigatoni or whatever, right? So you could change these things. You could change this and make a different combination. But at the end of the day, why the pasta looking so great? Because you adding 1, 2, 3, 4 those ingredients, right? And then you say, "Oh, mom, pasta is great," but the secret is here. So Magic Trader output, right? Whether you made money or not depends upon the ingredients you're using. And with Magic Trader, I should have added another one like a catalyst, maybe the next time. So it looks great. Probably somebody likes sweet, so we put some grapes there. It looks great. Or we put, cashews or put almond, make it more better in a taste or whatever you like. We make them as a catalyst. So this will be 4 ingredients plus another one. So I'm just make it more, laughable. So mother makes good pasta. Not everybody's pasta is so great. I hang around with Italians, so I learned that one at least. Which pastas are the best? We did a partnership, right? And every week we go twice. There is a place in my neighborhood called Prima Pasta, right? And they make the best pasta, so we go there, right? And I learn how to distinguish between one pasta to another one. Now I'm not allowed to even eat because I got in trouble, health-wise, because eating those pasta, I got in trouble, big trouble. So you could see here, we're going to talk about bullish, how to fabricate it, and we're going to use this catalyst strategies. So how are we going to fabricate? So let's go there. I'm going to speed up a little bit now, so we could also do good. So I write down the rules, so steps. So anybody who has it, you will have this thing now. I never did this thing before, giving in a sales presentation, right? The steps. So to the point, what do you need to do it? First of all, you need a direction line, which is number one, which is that vertical line on the top, health window. Then entry spec, number 3, right? And you could find from the Explorer. Which Explorer you could find it? These two, because we are bullish and fine gradients. So you could find them, and as I told you, cut it down, number of scanning security. You don't need 5,000. It's crazy. At the open, no. The reason why at the open, later on in the boring market, sometimes in the afternoon, you could do whatever you want, but you want to enter, you got to make money. All right, and I got to tell you something with our method. Yeah, I understand we should not be going into the trade for another 45 minutes. Not true. You have no idea how to exploit it. On a pullback, I'm looking at the counter cycles to get in there, right? Because implied volatility, right, is low. We are bullish. So I take low cost option pickup from those scalp swing method. And what I do, I make some money in the scalping and then use that money to defend myself to go swing for an hour, 2 hours. And people knows how I do things. I show them very easily in my room. This is what I'm doing it. If they want to do it, it's fine, right? So basically, I avoid all the drawdowns that way. And I got a cheaper option. So it is true, we should not be, that's what we were taught on Institute. Wait at least 15 minutes, half an hour, but you will be surprised. I'm doing hunting, I make money. By the time even it comes back, I'm already in the trade and I made exit and then I go back again, right? So I like to have my risk reduced 20, 30 points, like a option differential 0.2, 0.5. So I collect the $50 or $30 before even I try to swing. That's why it was given the name scalp swing. So I exploit my technology to reduce the drawdown or eliminate altogether, enter at a low implied volatility. Once a turquoise bar suppose is happening, it's going to explode at that time. So the option premium goes crazy. So I want to sell it to them. And then we slow down, I go back again. You'll be surprised, even though price went up, when option steam comes down, premium goes down 20, 30, 40 cents. So let's do the math. That's a $50. So I could use that $50 to go long again. And I have a least amount of the losing trade. That's what you should be doing. And we teach you all this thing, that Jeff will tell you how to get that recording. It's called swing, right? Jeff always help people there. And the second thing what we need to do, find YB4, right? Bullish catalyst from this scanner. So this comes with that. Suppose you don't like 15 minutes, right? As I told you, you will be having YB3. You could use that, but for my purpose, 15 minutes is a very comfortable level for me. So now on a daily chart, I'm scanning for this one. Multiple time frame from a smaller, I'm scanning and I'm finding that on a daily chart, which is a breakthrough, right? Generally, you got to scan 50 minutes. No, this 50 minutes belongs to daily chart. So you put daily on a Explorer and this will show up using that one and symbol will be there. So that is the breakthrough. How I did it, I don't know, but we can tell you that, but this is very good feature, right? And you add those things up, lining up, and you're in business. And then use scalp swing method to reduce or zero drawdown. Unheard of that. Jeff, if anybody puts their message there, please read to them, because I have no idea who's putting from my room. I only heard one lady voice there, right? And she could tell you that zero drawdown is true or not. She's been there more than 3-4 years.
Well,
Right.
we have Ari said he remembered that. So his memory is a little better than mine, which is terrible. But I'll let you know if we get any more questions or comments.
All right. Okay. They could put it on while we're teaching here. Now, what I did it, these are the symbols when to get the hell out of this, right? Take profit. So PB is one of the symbol, is in a green, right? So I didn't paint it, but red spike, red ribbon, BUNE, BE. So we were bullish. Now it's getting neutralized, and then BE, run. Take your profit and run. Then you have a put symbols, get out. Minus 0.40, it will happen. You get out, right? Because these are the forecaster. So this is a controversy using because of the risk, right? They're going to carry it like minus 4.5, 4.6. Take your profit and run if you are, or you could enter at that time, right? So basically there is a method to use it in order to enter and exit or ready for the next phase. And these are the symbols I take my profits. So these are the 5 steps you need to trade this. And if you don't know anything about Magic Trader, follow these steps and practice it. This is what I'm doing it. Jeff, it was a good idea. I put it down this step. I think you and Kelly one time we want to have steps. Remember that?
Yeah, I do remember that.
So now we got it. All right, so they could use that step, and I did it on both sides. So they could use this thing for trading. So now what I did a little bit coloring. So here I put a green around it. And so these are the 2 ingredients out of 5 we're going to be using. I'll give you a little bit course here, quick course. So this is for vertical direction line. That means we're going bullish. The second one, as I said, the lines should be parallel, right? It should be about 0 and a health window. You're good to go, right? And I prefer initial stage because I take different routes because I could do advanced strategy. I don't need 4 and 1 all the time because there are ways with teaching. You could enter earlier because you eliminated this and you enter very conservatively. Once you practice, then you adapt other things. But for new guys, don't deviate. So it's a parallel. You make less money, but you are safe. Nothing is 100% safe, safer than assuming. All right. And if it is above 0, then we are going long. Then, as we talked about the spike, which is a dotted line triangle, it's a number 3. So we adding 1 and number 3, and you could see it is being highlighted compared to this guy's. This guy has a plain body here. He is a thick line, and I put an arrow here so you can't miss that. So we're going to be using these ingredients and that ingredient going long. And what is this? Horizontal time risk. Also, this is part of the pattern claims, right? So I found out all the risks are not applicable on a time value, all right? And especially on a if you trade option, this becomes very useful, right? So what happens? Time decay happens, and there are what we discover the types of the risk going long, and when you put the time value, right, there are separate number of risks acting uniquely, and you need to know that. So this ribbon looks same like every because that's a basic standard MetaStock what do you call feature, right? But this ribbon is not near to any of those ribbon you used to. So don't try to judge and trade according to other things because other fellow will have a better or whatever the type of message is there. But we designed this to incorporate every risk which has time sensitivity. So this makes it unique. All right, so now you pay attention to that. But right now we are using this one, and we still have a bunch of trades to show you. So now what I did is very simple. So we take these and these, and then what you call select these 2, and then we put it on top of each other. That's how you see on a chart, and equal to this. So this become a lineup for you. So very simple way, everybody can understand. If you went to even 5th grade, you could understand that, right? So we took these two items of these 5 selections and then put it on top of each other just in a chart, and then we made a lineup. So this is lining up exactly like on a chart I showed you before. And then you could select this as a cluster and adding the next slide right here. So we have the same thing repeated here. So you don't have to scratch your head what it is, the same exact thing, but we added the catalyst here. So this is color is catalyst. This is one of my favorite thing, right? And there are bunch of types of those things. Stick with what I'm trying to suggest you here, so your risk is low, right? As I told you, they have here is a 2 plus plus, then it becomes 1 plus, and then there is 1 has nothing there. So for today's purpose, we are selecting only this. So your chances of getting in trouble are less. All right, you could still get in trouble if you make wrong selection, but at least this will eliminate your head scratching. Oh, what Peter said, only this big bull you got to look at and yellow YB4, and you are in a right train. So now I put it together here. So now this becomes a cluster for lineup. So this is the lineup. This is what we are trying to select practically in order to do good trade. So if you don't learn anything, you look for this on a chart. Yellow bar with the 4, call plus, right? And this one, and you're good to go. So you could trade. You don't need to buy calls. If you are an equity guy, you don't know anything about options, close your eyes, but you could still select buying that security, whatever it is. You don't need to trade options. I trade because it's a less money layout, and if I lose money, I lose only what I paid for it, right? And I don't become a collector of those stocks. It's coming back kind of things. And that lesson I learned from damn AOL, right? What I know today, I wish I knew at that time, because all the money managers, believe me, it's an orchestrated game, most of them, right? You listen to them, you go out of business. Not everybody's bad, but you better learn by yourself. I'm telling you honestly, that is the best freedom you ever will have. And this platform, and I got to tell you something, I gave a hard time to Jeff, and he waited for me, right? Every software has a little bit here and there problem. They fix all this thing, and I will tell you, I love it. The 19, right? 19. What is it? 19.12 that you gave it to me? The latest one?
Yeah, 19.1, I think, or maybe 19.2. But yeah, I love it too. It's a great.
Let me be honest with you, Jeff. This is the best thing I ever got it. It is perfect.
I'm glad you like it.
I do like it. You know how picky I am, right? Otherwise, I'm not using it.
Yeah, for sure.
And it made my life so easier. And this feature for what do you call? It comes right the watermark. It helps me a lot. I still put it for because my traders are used to, right? They will not have this chart until they buy this 19.12 from you. But people who has it, spend some money, upgrade it. I'm telling you, I'm not trying to sell. Most of you may not be even using Magic. I'm telling you, this is the best thing you ever see. And it's so stable. I could not believe Jeff is so stable. There is no hang up, nothing.
I knew you'd like it. I knew you'd like it. It's my favorite upgrade for sure.
If I don't like it, I speak up. I don't sugarcoat anybody, right? It is a really good product, and I'm not trying to sell 19, right? Because I don't do selling, but I have to give the credit where it's due. And this feature, right, distinguishes, because if you have 18, you cannot do this thing, right? And please give it a try, right? And this made my life easier even in presentation. Yeah. It is so, yeah. Hey?
Dude, how many? I don't ever get the question, what are you looking at anymore with the watermarks? Like, what's
no, the charts are so good, right? And basically the stability, I love it. And what I like this feature, when you put that cross mark, which I could not do all these years and wasting so much time, right? You show them, you have like a square thing on a left hand side, and then when you put it on one time frame, it shows in a multiple chart where the level is. You know how good it is that?
Yeah, yeah, we call that multiple, our global cursor is what we call it.
Yeah, cursor,
But
yeah.
It's great.
Their trading life will be so easier while you're trading live. I want to know what it looks like on a monthly chart at that time. Where was it? It does automatically everywhere. It's so good. It's unbelievable. Another thing I like, now I could take any chart and float it in my 8 monitor setup. And it saves me so much aggravation, you won't believe. You know, now you let us use those separately, right? I could take 2 charts out of 4 charts and put it somewhere else, and I could see separately on another monitor. Here, I was stuck in one confirm area, right? Within that MetaStock frame, and I can't even move them. That was the best feature I could tell you I use every day, including today. Look, it was not that easy. I got to take it out, this thing, and it is part of that. And suppose I want to take out this one, I could float that too. So basically, this is a good feature. I really like it. So that's what I like it. I use every day, Jeff. I use every day. So thank God you got smart people there. All right, so let's go. So that was, let me give people a rundown. Okay, so whatever we talked about it, how to line up, this is the actual trade, right? XLY, right? And it's very easy. Ignore every single thing you know. 1, 3, right? And yellow bar and big bull, YB4 plus 2. Look here. And later on, I'm going to show you the table. I did some homework, what that means. So I put down, theoretical, everything theoretical. When you enter, I don't know. So at the open, I buy at the open, right? And I exploit it. I will buy 1 lot before if there is a drawdown, right? So I wait from the cycle. Open means around that time, you got to see if it goes down, you look at the smaller counter cycles and enter at that time. So you got to time it using scalp swing method, right? And basically, so I want to have 0 drawdown. I want them to pay for my swing trade, and that's what I do. So I have no risk or little risk. So make believe here that open price we went 119.85. I did not follow the spike to get out. Look, everything is horizontal. It can keep on going. But when the screenshot on 8, right? It was this high was that. So we taking hypothetical, giving benefit, right? 216 minus whatever it is. So it is in a table. I will do the calculation there. I already wrote up Excel formula, so it can calculate every single thing for me automatically, right? So I could give you a couple of more tables like this. So I made it simple for you. You watch that. So all these things, the performance record is over there, right? So basically you could see you don't need to be scientist to figure it out. Right here, right, is a +3. This is generic symbol apply for every kind of future high. There are 5, 6 types of, so you don't need to worry about it. Here you put it, it will tell you future high. That means we're going to the moon. And this is institution, advanced price perceptor. So I add more security or more option contracts, right? Even though we are all to the moon because institutions are there. This is because I know what we were doing on an institutional desk, right? And basically I invented these things to identify those risks, even though it is far, right, on a on a green, right? I still will do intraday at least, and when it pulls back, I'm out. That's my nature. I don't take one chance, right? I will go back again. I don't care about I have to pay taxes or whatever. Get out. I could always go back. But in a security, you could do the same thing or take out half or whatever you want, right? Or you could take 80% out, or because it's too far from the base here. Base means from this point to that point. It's risky, right? Because we are too far. So mean risk Suppose you take this price right here and mean level here, we are far. So it's risky. So it's going to take some profit. Not necessarily it will come here, but offload all this extra risk. So this way, at least you have money in your pocket. That's what I would do. So I'm teaching you here and there what I would be exiting, even though there is no symbol. And everybody in my room knows I take my money and run before even it blinks on any place. Because I've been there, I've been hurt, I've been waiting for things to go back. Those days gone, many years back. I'm not interested in. There is another security. This all came from scanning business. AFRM, the dates are here. So when you get Magic Trader, you could mimic this thing practically. Go and scan on 11.5 and see it was there or not. So it will line up for you. You go to find ingredients, it line up, and then use the what do you call the other explorer, and they will be there, right? And you could reverse engineer too. You explore that, but please learn the right way, because I don't have time, because I got to help traders, I got to help people, phone calls, whatever. So I scan this one and I look at that in a chart, which one is lined up, I go there. That's the end of the story. So I shortcut it, but learn it the right way, because everybody will tell you without looking at the chart, I don't pull trigger blindly, because market is crazy. I don't trust market. Look what happened in last few days. It's crazy. Now another one, AMR, right? These are different dates. So look at this. Everybody's telling. So you could get out here also, but looking at the smaller time frame, little pullback, and I decided to go higher. It tells you it's going to go higher. It did intraday, and then if you want to stay there, then you get out here. Doesn't matter to me. This is for illustration that it does go up after this setup. That's what you need to do. I'll give you another hint, but Jeff was nice enough to give me more time. Let me give you an idea, and let me tell you what is the theme behind it. So when you have a double spike and lineup, that itself is a strategy. Why? Because all the selling is done. You're going to learn in a training. This is like a dual functionality. It can go higher or lower. That means, right, we know that it is trying to go higher, but there is not enough conviction and the lack of what you call black candle. But what I looked at, there was yellow bar before. So this is consolidating, right? So before they take off, this is what we call a sandwich pattern. All right. And in there, 6, 7 candles altogether could be there, is still healthy. So sometimes I keep accumulating here, knowing the fact, right? But I at least wait for one of these so I could get it. So I may be entering here instead of yellow bar in anticipation, right? Because the yellow bar was there, but these are advanced strategy. You could get hurt and you're going to blame me. So don't do it. But people who are having Magic Trader, you know that I've been teaching you sandwich strategy. So in sandwich, this is the top of the braid, right? Wheat or whatever the braid is, right? So that's why it's a different shape, right? But in between it's a 1, 2, 3, 4. So 4 days, right, is consolidating, and now they have a shield around that with this yellow bar. So at that time, I'm aggressive on this one, and I'll be getting out because I'm aggressive. I'll have 3, 4, 5 lots on option contract, right? Lately, I don't want to buy any security and get hurt, and it's stupid to me to spend $240,000 for 100 shares. I'm not doing it. Right? I have better avenues, right? So my return on the capital is much higher, and I'm taking only option risk. And on option also, I bring it down to cost very low with some strategies, right? And there are so many good strategies. You got to learn how to put it. And it is also true as a practical knowledge. Suppose you do butterfly, that doesn't mean this you're paying for three legs. Just open it up and think or swim is 6 to 8 legs, right? Because sometimes you will see they give you back ratio in there, besides call and put and make it 6 to 8 of them. Now you got to pay. So like one contract will cost you $20, $30 in commission, highway robbery. So you got to be mindful. Oh, somebody told me play butterfly, but how much is costing you on both sides? Do the math. But some, in my group, people get so tied up into, oh, Peter discussed iron condor, but how much commission you paying? Is it worth it? But what a magic trader tells you it is showing these symbols. Why would you like to have iron condor? I don't get it. So you do bullput credit spread here, right, out of the money, or delta 18 or whatever, right, or 20 delta. You still have to do spread, right? But try to be mindful, because somebody taught you on a YouTube practical knowledge, right? In this case, I would do it. I don't need to pay for iron condor. I would be doing credit spread or bullput spread or whatever. I will do bullput credit spread, so I don't have to money from my pocket. I get the money. But that doesn't mean you got to jump into this idea. It's for education purpose only. So as I told you, there are 200 different strategy on option. I could pick and choose or combined, which I do. I do love to do that. All right, I give you another one. Look how many examples. So you study this recording and then take your whatever the chart you want to use it, or call Jeff, right? And Jeff will give you a good deal, right? I don't know what he's going to give you today, right? I didn't have time to. He sent me this slide. I didn't reply because I'll be honest with you. Yesterday I started with flu. I'm sweating right now, but that's the life, right? And I got multiple problems, but that's the life. I don't cry my problems. I keep on going. So now again, twist, right? Or TWST. Same thing. So you don't have to go back and what was Peter teaching? This is in front of you. So you can't miss that, right? Look at this here. Trade after trade. Now here PB I use all the time. I'm out, right? I don't care. It opens again. I go back again. So like here, now it's showing that we're going to go to the, even though it had negative, right? Open and close. So close is lower than I will buy it. This is the best time. My option premium is less, and I know this telling me I'm going to go to the moon and 2 horizontal line. So I don't have to worry about MACD, Fibonacci, and all. We have magic zone lines, so I know where it's going to go, right? So I'm not telling they are bad, but I save so much time worrying about those things. I just want to make money with less trouble, right? And this cross happen, right? This is not that standard lines you using here. This is, and I want to tell you, monthly, daily, weekly. If somebody wants to really be smart, every time frame we have a different magic lines. Why? If it was the same lines you using for years, I proved myself. In reality, me being an engineer, there is a difference in trading. If you using the same damn lines, same formula on every single time frame, this is not the way it should be. So these are designed for that time frame. So I just want to let you know. So I create a template and I don't have to worry about it. So you could see here where we're going. Here it tells you we're going to go to the moon. Here it's telling you're going to go to the moon. Did it went? Yes, it did. But I will tell you, if market had a bad news, nothing will work. Temporary it will distort it. That's why you don't buy 1 or 2 days option. Otherwise you get out, take a loss. There's nothing wrong taking loss. Recently I got in trouble. Something happened with IWM. And I told everybody I will try to, I reduced the loss from I think $200 all the way to I think 80 or not 40 or $80. Different symbol, because the whole thing, some news came in, right, and everything dropped. So you're going to get victimized. That's why you got to do risk management. Not coming back, you have to know how to fix it. Not adding more loss. You were in one strategy, butterfly, so you convert into condor or whatever. So you need that timing, right? So always when you do spread, you're selling something, so you could make money on one side or another side, right? So you get rid of the one which you're making money, or you roll over to the another strategy which will work for that circumstances for a day or two, and then it will fix itself. And if it does not, then get out with the least amount is lost. That's what I had to do it. I tried, but it is true that in 2-3 days I reduced my losses from $200 to $80 in one case, and another was $40. And I showed to everybody, but there is nothing to defend. Market change, so you got to be changing. You were right, you were in profit, but all of a sudden it dropped. And usually intraday news, something happened with somebody. I think it was part of the problem was SMCI, because the auditing firm quit. Something like that had happened. Everybody who was in a trade a day before they got whacked. SMCI, I was not in that trade, but all the collateral damage, everybody got it. Uncertainty. Okay, so what I did, all those trades, this is your Bible. What happened? So you don't have to go and do mathematics. I did for you. I'll explain to you. So this is the bullish, right? XLY. This is the day we enter. This was the open price. This was the exit price, right? Which was the high of the day, make believe. And you could reduce this in half, but this is the maximum you could make it, right? And then I could argue that when it went down, I went in a lower cost. So it offset it out. So don't argue with me, please. Right? And this is for education, just illustration. So net gain was $96.42 on 260 total. Just do the math. It's unreal, right? The difference between this guy and that guy, 96 in 4 days. What are you kidding, Peter? Per day, $24.11. It's like on a steroid, this XLY, right? And look at the gain per day percentage. When I started teaching, I was very conservative. You could do 1% a day, right? Then I started telling them 5%, then many skeptics, it can't be. Listen, it is crazy, right? And this is not even option. Option will be much bigger than that. Just think about it. I don't want to intimidate. Per day, 20%? What are you, nuts, Peter? You're lying. Chart don't lie. I didn't put option. Oh, I don't know the strategy. This is a plain, simple math. Do the math. In 4 days, right? This much money per day, percentage. I did every single thing. Here is a 6% per day. Here is a 5.87%. Here is a 3.9%. Even though we make 0.5% is better than those banks who are robbing you on a daylight. Right? That's what they're doing it. What are you kidding? I don't want to tell you. I just fired the money manager because sometimes I'm so occupied. So I do traditional relationship. I just fired the guy because he don't listen. Right? And long story short, right? He don't listen means this guy is out of control, right? So, but before that, right, I will tell you, I did married put and I told him to do collar. So the put option premium is paid by that. His idea, yeah, dividend paying stock is one thing. Yeah, we offsetting that, but still there is a 5% chance I could lose 5%. So I offset with the collar, right, out of the money, and I sell the calls, right, against my equity. And he don't want to do it because it's an extra work. I said, I'm paying you. No, then I got to do for all my client. And I'm putting up with that for 3 years, right? Pain. And finally, I had to make that decision, right? So sometimes those money manager can put your future at the risk, and there are plenty of them. He was good. He was really good. He become bad. That's what happens. So they go whack job. So now you could see here average. You were staying on average 4 days. So some scientist here will say, oh, how much is the average I got to stay in a trade? Here we go. Those that become swing. But I got not included. Suppose I was trading options or scalping. I collect all this money on a cycles instead of waiting for whole 4 days because my hands start itching. I know where I'm going. So on a pullback, I'll get in and get out while I have my other position already in the place. So I keep reducing my cost. So my net gain instead of $96 could be $106. And I have done on a regular basis. So scalp swing and magic trader, all the features, I exploit it to add more gain. So this way I could say in a business next day, suppose there is a market crash and I lost $500 that day. Somebody paid for it already for my capital preservation. So I'm giving you practical way of doing it. I'm not a traditional guy. I've been through a pain or a hole or like a big raptor of pain, right? And when you go on an institution side, even on a prep trading, you don't last more than 3 days. They fire you because you're no good, because they're giving you money to trade. I did partnership, but hey, it's a business. You could get fired too. I'm telling you honestly, this story goes back to later on. I heard they were betting on me on a lunchtime that Peter is going to get fired. They just arbitrarily think that Peter is stupid, right? And they bet, that I'll buy lunch for everybody kind of thing. And that's expensive lunch on a Wall Street, right? And they even have a laughter when the guy lasts for 1 day and manager comes with a security guard and pull them out. Don't come back tomorrow. We'll send you all your belongings. Not a single minute they keep you there. The guy with a black suit comes in, you X out. I have seen those days too. They were counting on me too, getting fired. They don't care. It's brutal. And you become like that too, tough guy. Because you've been also trained that way. You have to be tough with money. There's no such thing free ride on a Wall Street. It's a tough game. Somehow I have resiliencies, so I survived. I'm not a winner, right? I'm not a super duper trader. I survived in those whole thing. Some places are brutal, very brutal. The language and everything. They throw damn chairs at you. How about that? They pissed. And then then the security guard rescued them. You know how many times they punch the tables? Go and they're upset. They lost $500,000. They're going to punch the damn wall and get hurt too. Don't think that there is a sophistication. People they go crazy when they lose money, and the firm don't want those elements, so they get rid of them. It's bad news. So I lived through those things. Thank God I survived. So they were having a lottery on me. I will fail. My nature is like that. I retaliate, and Jeff will tell you, right? I fight it back, regardless what happens. Not in a bad way. Tell the truth. People will eventually know who you are. That's why we love MetaStock all these years. We argue, there's nothing like that, but they are good people. Very honesty is there. I have no worry about my formula getting leaked out. They're good people. They got very good staff there. They try to help you as much as they can. Now we're going in an opposite direction, everybody. So because CFTC want us to balance it, all right? Even when I had a SEC license, we have to balance it. So at least one example. So we got plenty. So everything you learn, we're twisting it now to opposite direction. So let's go there. So these are the rules. Follow these rules. I don't think we need to do it. We'll talk on a chart, but these are the steps you got to do it, right? So read it when you get this thing. So we could use the time, and I could give some time to Jeff to speed up. So same thing we did it. Be selecting number 1, selecting number 3, and I have the arrow, so you can't miss it. So we're going to marry with this ingredient and that ingredient. However, I will explain to you, this is the direction line. This is the difference between the previous one for bullish. In a bearish, all the lines, horizontal 2 lines, are below 0, and the value of this line, right, is a blue line there. It is -1, and the purple line is -4. So they are below zero line. Then the spike, we already know that's the entry point, number 3. And I started that when you have two spikes side by side and a line up on the top, you better believe that is a strong move. So you stay in a trade, because what happens, current market condition is so lousy, take your money and run. 1 or 2 or 3 days is too much in a market. So you get out or first or second, third, I can't wait until I get out. Maybe at the open I will get out. Sometimes I will wait and I will get out, or most of the contracts I'm out, right? Or I don't like to trade stocks in this market. I used to. I don't want to get stuck. Then you'll be stuck even on a Meta, or what you call Meta or Netflix for 1, 2 months, 3 months until some paid analyst talks good about it. You know what that means. Now this is, we did not talk that. This is the pure health. Suppose you don't know what to do with all these health lines, right? So this is the juice of all in a health line. So as long as this is there, you in a less risky area. So you add these and that, and in this case, what do you call indigo bear, you could still do good. So this is also you could use, right, and mix match it, right. Next time when I see what I will do with the 4 ingredients, right, and their combinations. That will be a fun on a permutation and combinations. And I don't want to say if Jeff is nice, we have done some homework, right, and we are working on it. That's the only thing I could tell you. So you don't have to worry about it. Not now. It's not in my hand, but we always ahead of schedules, right? We got to plan ahead. So here, number 1 and 3 we selected, we put it in here in this box, and then what we did, we lined them up, right? So it looks like this. So this is bearish line up. So this is the part of the strategy. All right. So it's so simple to identify. You don't learn anything, learn this one, you're good to go. You will get some trades. Every day there are a few of them. Right? And you select whatever you feel comfortable out of that. Here, what we did previously, what we added is a catalyst, right? Catalyst here is this guy, indigo candle, right? And this combination is here. So this becomes lineup 13 strategy. And this was a long due. And Jeff told me a long time ago, I think, Peter, but we never have enough time to do everything. And that's why Jeff putting me at the end. Otherwise, I won't be giving you a lot of things here. I did not knew until now, but I took a chance. Okay, now this is in the bullish market. The funny thing, if it goes down, it goes like a turtle. It's so funny. Here is a trading days 22 and make less money because market is bullish, right? So you need to understand, if market is bullish, don't try to be hero going short, right? But you could do short, and I want to tell you, as long as you follow this thing. But I could go in and out like here, right? And turquoise bar came in, I could get out and then go back. It failed here, and I could go in there because it failed here, or I could go in here and then take a ride again. So I could go in and out and make more money than what are you going to eyewitness on a table. But in a bullish days, what are you doing, right? You know how you could sell advance and decline. MetaStock has some kind of indicator, right? I use think or swim because I'm trading options at that time. Now I could do because I could float the chart, right? That's a good advantage. I have it now. Certain things I couldn't do it because I can take that chart out of the box and put it somewhere else, and I could look at it whenever I want to look at it. So advanced decline line, right? Or simple thing, right? How many stock went up at any given time? How many went down? And throughout, except Russell. Okay, Russell is like a gambling, right? Those companies who are going to go out of business or bankruptcy or they don't make money, most of there are belong to Russell 2000. So I always tell, if you want to go casino, right, and futures are up, it's up to you. But I am very careful about trading those cheap crap stock, right? Because I could get hurt. Not in this market. However, I trade IWM. that represent 2000. So my satisfaction comes from IWM. And if you really see what I had it, right, I always look for it. Look, I did not plan to show you, but my chart were looking what? IWM. I want to know what happened. So I keep it on, right? Oh, by the way, this is the gamma squeeze. I didn't plan to show you. Don't ask MetaStock because this is private. It happened to be there. And we're not giving this as a part of the deal. And we put in a disclaimer that if you see it, if it's not in your version, right? We don't owe any obligation. Read what you're getting when you get the product, right? And Jeff will go over with you how many indicators, and if it is not part of that, you're not getting it, right? We cover 19 different versions, right? And every version has a different story, right? So we come up with the new version probably next year, right? To make it simple, that will not have even this one. So you got to get used to it. Whole industry work that way now. Everything you pay by like a Chinese menu. Hopefully one of the days MetaStock will have a Chinese menu billing system. That's my dream. Then you could get a lot of product at cheap prices. And what you add, then you add $10 per month for this, $50 for this. That's how it should be. Otherwise, Chinese stores are doing much business than most of the restaurants. Why? Because they give you that option. But I don't tell people how to run their business. I don't care how they run their business. So here, so we enter here short. We bought IB4. There is a big bear here. Look, the bear is big here. So we shorted, or we bought put option, put plus plus, right? And look here. And you don't have much drawdowns, right? When it goes, it goes. And here you are already in profit or break even. So what? You should get the hell out of that. Where I told you where to get out here and enter and short here. Oh, Peter, it shows that this is a counter cycle. At that time, look at the 60. It's turning back. Go ahead and buy put because there will be put option like this over there. So you got to do some work or do a layout which has a monthly, weekly, daily. Don't put. I tell my people, you could use whatever you want, but while we do analysis, don't put 1 minute on my charts or a template. I don't have patience for that. Institution, don't worry about 1 minute. You're taking millions of dollar position and now you worry about 1 minute chart. Look at the bigger picture and go from left to right. 60 minutes, maybe 30 minutes or 15. That's the most I want to look at that. Eventually, to manage the trade, you could use whatever you want to do because you want to maximize your profit, right? Because if you go by 1 minute and 5 minutes, those cycles will die and you will die with them because bigger cycle going opposite. So you want to take a ride, do the scalping if you want to, but you can't buy a bunch of things with that scalping because you could be wrong and you could get hurt. If your bigger time frames are in your favor, multiple of them, weekly, daily, monthly, be my guest, do whatever you want. This is what I learned being there. I will be yelled at if I use those things. I don't know now, but we're not supposed to worry about those things. We look at the bigger picture, what the bigger picture looks like. When I enter, minimum, I got to spend $10 million every day. How do you feel about it if you are wrong? 5 million going long and 5 million going short. And I got to keep it overnight and get rid of them before 10 o'clock. How do you feel? Every day I'm in attention to find those according to their kind of rules. So you go under whole day looking for them. And by the time quarter to 4 comes in, whole thing changes. That's even funny. So you did the whole day. So what we came up with a system. We got to keep looking, and you short it out at the end of the day. And next day I got to get out. That's a swing, overnight swing. But the firm I did partnership, they were pretty smart. And I did not knew much about hedging. But in a business, we do things, right? So it helped me a lot. So now this is the another one, APLS. Look at this, how many days it went on. 22 days, keep on going down. Same thing you could do. Did I change it? Hold on a second. No, I got to change it. Hold on. This is another Adobe. So it scans, there is no bias. It is a famous, if there is a setup. In this case, I want to teach you. I don't know. Jeff told me Kelly's going to teach you something, but whatever. So we have our own gap trading strategy, and I use gap up, gap down, right? And I short it out. So basically, we're not telling our strategy is better than anybody, but I use my own thing. Look, and you're not getting this. MetaStock has a lot of tools. You could use that. But my problem is the time. Look here. What it says here. What is the name here? Did I do something here? I did something stupid. Hold on a second. The name disappeared. I don't know what I did, but one of them is a gap up strategy. It doesn't matter, but I use my own thing to save my time, right? Because we have the tools developed. That doesn't mean you have to call MetaStock. I just want to be honest. That's one of my disclaimer, right? We show you so you could see the possibilities there for you to get advanced in the future with us. And we are very transparent in my alert room. I give them all this stuff, right? They don't need my indicator or explorer. I give them results right here. Look, how many are there? Right here. Right here. Right. So I have scanning results, right? Separate. Look. MetaStock has a good thing. I could go back and get the reports right here. So there is a difference here, gap up and gaps up. So percentage up. So I use this thing. ATR is a standard feature of MetaStock. So we use that too, right? Because I want to know how far it's going to go. And we know the levels, zone levels. So I want to double check, right? Because ATR is depends upon 14 days, 9 days, or 5 days. I don't know what you're using, so I don't want to talk about it. I use 14, right? And it is also true when depends upon the market, right? It's going nowhere, then you got to go with the smaller one because I want to have more accuracy. So at that time, I'll pick up 5 or 9. So I'm just giving you out there. That doesn't mean you have to adapt it. And it is a part of MetaStock. Use it. I didn't created that, but it's a good tool. And if you see it here, so sounds like some kind of bands. Magic Trader has their own bands. One of these days, MetaStock will offer you that. But you don't need that. But it happened to be there when I screenshot because this is what I use, right? Use means lately to teach in a alert room or my private mentoring, right? So because many of them are technical trader for years, so they don't digest something. So oh, there is a compression here. Okay, that is going to break out, whatever. So it gives you heads up. So we went up. Things like that. I don't need it because I more or less depends upon my magic zone lines, right? So that's what I'm targeting, right? I don't use Fibonacci for how many years now? To be honest with you, I don't know even how to use it anymore. I don't need it. I'm fine. We got the pattern on that. That does forecasting for the future. It automatically adjusts dynamically way before things are going to happen, forecasting and whatever, right? Breakouts, breakdown. Why want to use things which is in the past? That doesn't mean Fibonacci is bad. I never said that. But I have a better tools I could use it, which gives me forecasting feature. It dynamically changes, depends upon current market condition, and it forecasts the future. So I know where it's going to go more accurately. Fibonacci just give you static. These are the difference. But if it wasn't Fibonacci, my life was a technical trader. I was teaching, and Jeff and I and everybody used to travel all over the country for weeks after weeks. So everybody has to remember where they came from. So I become more lazy, develop the tools. I don't have to do too much technical analysis. That is the reason why I created this thing. And I was frustrated by this institution taking people's advantage. Let me be honest, it's a dirty, more than dirty there. They could destroy any company they want. Trust me when I'm telling you. All the SEC, but you can't stop human to do wrong behavior. If they get caught, SEC find them and they get fired, and that's the end of the story. They pay the fine. But damage is done to this so many good companies. And I never participated, but I see what they're doing. Just I was so mad. You want people's life get destroyed. And who are those people, little guys who wants to make a few bucks to pay the bills? It's very bad. Those people should go to jail first, just with the bad people in our administrations. That doesn't mean everybody's bad. There are good Congress, both sides. There are good people. There's no doubt about it. But all the evils, right? The evils are everywhere. Make sure that. And your broker is another too. I never see anybody likes their broker. Maybe platform, yes. But they don't like their brokers. This is the fact. They don't need to feel bad. Do a better job. All right. So here, gap down, right? So we enter at the open. But as I told you, you avoid the drawdown or going against you using scalp swing. So you get the entry somewhere here. And I have done over and over again. So in a theoretical purpose, I put it open here. So it make it simple, right? So make believe that I enter here. I let go this, whatever this scalp income is, right? And as a plain field, but I want to make sure when I enter, I have no drawdown because I use scalp swing and collect the money here. But I know where I'm going. So what it told me, even though it's gap down, retracement for intraday, that is it. And I hit the resistance. So my zone lines will tell me. So this is where it is. So I will take a shot there to buy put. So I get less money to lay out on an option premium. I get what you call better entry, no drawdown or zero drawdown, or maybe little drawdown, right? Sometimes you don't get fill. So also I learn broker's game. So you got to give them something better. So once you, I'll give you some idea. Even though it went down and bid and ask prices, they going overboard, so they buying on the ask prices, that's your turning point. But you got to babysit it. And sometimes I don't have time to babysit. I will repeat again for the new guys. You could look at the bid and ask prices. They were bidding at what do you call ask what do you call bid prices, lower prices to get the option. But what I learned is when it's dropping, you don't buy it. When it goes up, that means everybody's buying, right? So at that time, you buy the option for the put. So this may, you will be giving less money from your pocket. And probably one day I'll teach you in a real time. Real time is example. I'll screenshot some of them. Hopefully, Jeff is going to be generous to invite me. I like to do things not a stereo kind of presentation, especially on a public setup. Natural, be natural. Instead of stereo kind of same freaking slides. Do some changes. Sorry, excuse me what I said. You got to redact that. But this is what my frustrations are. So I get bored myself. So I took more examples to show it to you. So that's a good thing. So you could learn better. That's the whole intention. I did for 3 years before the release, teach everybody for free. 3 years. How many people doing that? No charge. And I've been doing for years. There's nothing new. I'm not doing them favor, but this is what they need, right? To understand what is out there. So they make logical decision. And if they don't want to do it, right? Let me be honest with you. Once you lose money, you will come to that conclusion. Damn thing, I got to buy 10 different software to do what Magic Trader does it. Then they will wake up and do it. We have people, and Jeff will tell you, very faithful. They will never buy anything. They're paying year after year. Unless sometimes they have family issue, they can pay a couple of payment because they have to pay mortgage or whatever is happening, or they're buying a house, right? So because they need money, right? So they take out from trading account to buy a house. What else we want to tell you? Then we understand that, but those people are still here. So, and we are in a long run here, not to sell something which will not work, but we cannot guarantee it's going to work. You got to put your time. There's no free ride, or this is not a get rich scheme ever. You got to understand this. This technology does not exist. We kept it secret all these years. People are using, but we don't go on a YouTube and every day pound people. Eventually, we will have to do it to increase the sales. But I've been patient, long patient, because I need a couple of products to be out there. I could give alternates to people so everybody can afford it. Magic Trader is not cheap. Believe me or not, it's worth it. That's why those people don't leave us. All right, so 11 trading days. So what is happening when market is bullish? There are opportunity, but the output is less. So I don't want to tie up my capital that way. But if your hands are itching, you want to test it, you could test it and get practice at that time, right? But eventually, when these symbols start coming in -5, -6, you better run, because eventually you're going to get beat up. But if they don't close above this, and look at the fire hose connection, is drawing down. So even though it's a -5, there will be retaliation from the bears. So at that time, you got to look at, right, traditionally, because, oh, if it breaks this level, we have magic zone lines, right? And that's how SMCI, I have a proof, right? There is a whole AI thing going on, right? And there are professors involved, right? Or MIT and this IT, whatever, or Walton School of whatever, right? I know them. And I took a little bit on a record. They're telling people SMCI is going to reverse at 33. I says, is it not? Because my Magic Trader orange line is telling around $23.20. So I'm not buying your story. They put it out there. Everybody got beat up and it went there. How I know? Because of Magic Trader. And I told them it's going to test that, or up to $20 it can go and reverse temporarily. This was one of these situations. And the line was right underneath that. A couple pips of, not pips, couple of points away, but I was not buying that. I don't want to say they have their own band, right? Bollinger Band. I'm not knocking them down, and they do interpretation. It's not Bollinger Band issue. How they do interpretation, it has always done. No. SMCI, unless some other accounting, creditable accounting firm don't take that assignment, this will be the situation, no matter what somebody says. And if you want to really see, and I'm very vocal about it, right? They have a good relations with NVIDIA. And see what happened 2 years ago. There was a big controversy. Read those reports and they will tell you the results now from SMCI. And you figure out what is upcoming. And a prominent accounting firm is not that stupid. One of the fastest moving thing went to $800 and they quit. Just think about it. They give invitation to regulators from that point. They distancing themselves. I'm not accusing any. This is a common sense approach. Everybody reads every post out there. To put 1 + 1 = 5 in this case. And you make your own judgment. I'm not telling, but this is where I think. I have a right to think. What went on 2 years ago? Why there was a controversy? Just think about it. So I don't buy those kind of stock. I don't care. All right, it's cheap. There's nothing cheap. I would rather pay more money, $300, and buy the options and don't worry about the cost, right? We traded when things were $1,000 before the split. There are strategies, use those. You don't need to buy forever. There was a price, $96. NVIDIA, you should buy at that time, or even 100 and some dollars. Now it's too late. You got to think it through. I'm not advising somebody. I am practical what I'm going to do. So I'm not buying real stock because of that reason. You could do whatever you want. And there will be turbulences in market. It is all about gamma. Don't forget that. If you want to really learn it, see how many puts and calls are happening and how it's changing on day-to-day basis, right? On SPX, right? On all these heavy-duty stuff on an index-related things. So NASDAQ, what do you call, composite index, and look at those things. You will see what is going on. Put and call ratio, right, is very important on a day-to-day basis. So that's where you sensing. And forget about volume on an option. Look at open interest and follow that. That's where you get the clues. Everybody talk about unusual options and whatever, right? But the key here is observing those, right, unusual activities and where the concentration is and where is the current price. And that will tell you why this strike price has 20,000 what do you call open interest. And you have to learn where is the balance on a put and call side. And that's how you select option strategies. If there is an imbalance, there is a different kind of strategy you got to use, not just buy puts and calls and a spread. It doesn't work that way. So it is very important you observe open interest and where is the concentration. What are those strike price and compare to what do you call your expected move. It has to make sense. You can't just arbitrarily select or option price strike prices. Otherwise, you're going to get, and be mindful about the spread between the strike price. If there is a big spread, you buy $10 strike price difference, you're going to get whacked. But it is also true, certain option or what you call strategy, you need that spread in order to maximize your profit. But there is a time and a place to pick up the things, not one fits all. It doesn't work that way. All right, so here we did the same thing with all these things. You could take this thing slide. I put enough time here, so you could, when you looking at the table, you could go back to your chart, whatever it is, and see what happened. And here you see the output is very low and it's taking more time to make money. So who wants to do short in a bull market? This is the classic example. It's taking long to make money, right? They're dragging and dragging. They're waiting for something, right? Sometimes the classic examples is they were beaten down. They think they're going to, so what they will do, they drift it down. And then when the option, or not option, the news are supposed to come week before, 10 days before, they will wake up from dead and you will see turquoise bar, a yellow bar, repeat of that. And then news comes out and you see, boom, gap up. So that is the best strategy to learn. We call it the ship turning, right? They've been sold out, right? I don't care about what RSI looks like. Our symbols are good enough, and we have not used those things, right? We have our own thing, right? So basically, symbols in a magic trader will tell you ship is going to turn, right? And especially, I'm going to give you a hint. Look for 5 days before the news comes out, and they will lining up little at a time, shifting little up, and then when news comes out, it goes to the moon. And you bought options looking at those symbols. You got to learn, not just blindly make judgment, right? And you paid so much less, and in a same day, what do you call day, the news came out. Hopefully, it's a good one, or you got to use different strategy at that time, right? So you could use one strategy, right? You do butterfly or whatever because they're going to pull back, right? I'm not telling you should got to do your homework, right? And if you are so sure, right, it's trending and pull back, then you could go and look into calendar diagonal, so you could start making money on that one. When it pulls back, right, you make money. Then you go back again and sell the puts again, or sell the calls again, whatever you want to do, which side you are, and then you will keep collecting more money than traditional stuff. I'm giving you superficial idea. You got to fine tune it and apply to the security you trading it. So I'm giving you option, real some kind of what do you call ideas. So you could fine tune it, because we're not talking about particular security here. In general, this is what I do whole day long. Now what I did is I put all these things which belongs to here, and I did this one because if you don't want to use yellow bar and you see advanced price perceptor and you want to see option symbol, the option explorer is there. And if you don't get the option symbol, you want to still do regular equity trading, you could use this advanced price perceptor, and they have a symbol like A1, B1, C1, D1, things like that, or F1, all capital. That means institutions are loading up. And these are all tested in, we started in 2006 with a company called Baiynd, my first real time jumping into, try to help the money manager, because everybody was losing money. A couple of months, I think few months, 5-6 months before the crash. And I was requested by somebody in a different industry, can you help my son? I said, all right, bring him over. I sat with him 15 days, right? Tell him what to do, because he didn't know anything. And we were not having this sophistication at that time. And he was, I think, only one turn around the portfolio negative to positive. A few months later, whole Baiynd collapse. That gave me so much confidence. And then I started talking to a lot of institutions. I could help you. There is something we file for patent, portfolio correction. So that become part of portfolio correction. So Magic Trader is very deep, very, very deep. Don't get intimidated. I wish you could learn everything, become advanced trader. And we're teaching people how to do it. So we don't do things traditional way. What I learned, and I was fortunate to eyewitness the biggest order flow coming from every institution. I don't want to go into how we were having that on passing through all our floor. That is a big thing on Wall Street. Not everybody's fortunate about those. So all the games people playing, we hear it, they're playing it, we witness it, and I'm a businessman. I pay very deep attention to those things. And I put a lot of things in invention form, because there is no, they have spent so much time to come to that conclusion back in days. I said, you don't need all this. I will figure it out better than your results, and I don't need to talk to you anymore. It's not in a bad way, because they're busy. Sometimes they call you, they do call, but hours later it's too late. Okay, what I did, this is the one which I showed to you. So this is the lineup. So I don't need to do two different things, same results, right? So eventually MetaStock and we, once they finish the core development, hopefully we could give you all these things. I'm not guaranteeing anything. Right now, there is no way. We got to have MetaStock. Look how happy I am. And Jeff will tell you how many years I've been looking for a lot of things, right? One by one, they're doing it. It costs millions of dollars. As a businessman, I understand. We want to do perfect, and I argue with them. I want perfection. So we all look good and we have better product than all these people fly by night. MetaStock will be still there for another 30, 40 years. And it is better. They don't rush it. Everything they're doing, right? They are not God. I want to tell you, everybody who's listening, they are not God. Don't expect everything at once. But if you see it, they're doing better job than when they were owned by other companies. It is true. They're putting all their profit back into the business, which is a good sign. I got more development out of their office than I used to have with the company who spin them up. I don't want to put their name there, right? Because now they have freedom. And they have their own priority. They could do it. So you got to understand in a business where they're coming from. So don't expect, oh, the other guy is giving this and that. They're giving you something which works. All right. So I'm not their salesman, neither I will ever be. But it is the honest truth because I deal with them. How many years, Jeff? I started first product in 1990, first time. And then in 2003, right, when we made a deal, right, at that time with the Reuters, then Thomson, I'm not using anything else. Just think about it. I don't need all the fancy super, their thing works. May not be super duper flashy, right? Web based. You don't know their demons yet. We're not going to knock anybody down. That's not how MetaStock do business. They don't talk about bad about anybody. Never. Very hard. That's not in their culture. It has been there since I know Jeff and everybody. He could tell you that's not their culture. They're doing what is right and what they could handle it. And that's a good sign. So try to understand. I get pissed off because I want to have them do everything yesterday. But it costs money. And they do so thoroughly. Revisions will be there, but look what they did now. It's been in work, if I remember, since 2013. This is great achievement. And they're doing, if you don't know the real world, they're growing organically, not a flashy way. They will not have their office tomorrow. They're going to stay. They've been there 40 some years. They're going to be staying another 40 years. If I'm alive, I will witness it. So please try to understand this thing. Okay, so what I did, so this is the combination of both indicator. You won't have it. Eventually we'll give it to you, no promise, right? But I just want to see the possibilities. I picked a couple of them from that. It's not 100% because I filter many things out, right? Filter means I don't want to waste my time. So anything below this level volume, I don't want to even waste my time analyzing. But these are the results. Look, and these are very short term. And I use, where is the arrow? Those are the one I take a screenshot, right, and put it here. So you get a more confidence. So this is the setup for bullish lineup 13. This is a green side. This is a catalyst. So we still following the big bull, right? And look what happened here. So what I did it, right? I didn't make the table for this thing. I gave the idea at the last moment. Today I did it early in the morning. I had 103 temperature, right? But I said I got to give it to you guys. So what I did, there were some of them previously given, but I put this differential so you get an idea. So 0.75 per day, so 75 cents per day it moved up. On a Wall Street, if it moves 50 cents, we are very happy. You can't stop it because we're putting 10,000, 50,000 shares at a time. Look at the 50 cents, it's too much. We get out at 50 cents profit and close the position because it's too big a risk. I bought 75 cents. So can we get out of that 50 cents, even 25 cents? You should be happy. 1.9% per day. And I'm not done yet. We just stayed there, right? And look at this. Even we get 0.5% a day is a lot of money. And this is not an option. I'm using traditional equity side, right? And look at here, 1.07%. Even we made 0.5%, I'll be happy. This is based on the investment here at the open price. So I took the open price. So you could be skeptic, but I'm telling you where to check my mathematics. And it's all hypothetical anyway, so don't complain, please. Now, as regulator wants us to show both sides, okay, unless we tell them we're going to show you only bullish and next time we show you bearish. So I took the opportunity to balance it out completely, right? So BTI, look here, this is the rate. So we're going to use this one in a calculation of percentage and whatever, right? So here was the entry, and then I got out here, right? There is a thing I teach people, and look at here. And then when you look at the counter cycle, they were already showing that we're going long. And I want to give you an idea when it tails it here, right? Look at the counter cycles and make a judgment and drill it down, and you will see that it's going to go up because you will have multiple confirmation going long, right? Even though it is a, not a bull flag, it's a bear flag. Even though it's going up, it's a bear flag. And that credit should go to the lady, I don't want to tell name, Jeff knows her. She invented that, and everybody still cannot talk even difference between bull flag and bear flag. And I was at a Carlin Equities, right, when I learned for prop trading, and she was giving all this information called, there was a technology called beat. So we could see her trade, we could listen to her, but what do you call it, was in a preliminary stage of net development, means on the internet. So that was the base keep, and I hear her every day calling out for bull flag and bear flag. So I become smarter, and she's a good trader even today. I think Jeff knows the last few were SKI, right? So I don't want to call out the name because then people harass her. But she's a smart cookie. I'm telling you, I have seen her trading. There's no comparison. She's a very smart girl. All right, so you got to appreciate other traders who are very smart, smarter than you do. All right, so in this case, this calculation based on this open price and look at the profit and per day and percentage, so get an idea that there is a possibility, even though bad or good market, we could make at least 1/4% a day. It's a lot of money. Your bank don't give you that interest. Do the math. And we are not done yet. You could get out here and it did not close above this thing. Do go back again. It will increase the number of days, right? But the number of days in this case, 1, 2, 3, 4. So in the 4 days, right? This is the outcome. So I think, yep, I'm almost there. So I will tell a little bit about me, but I would like to tell more about my daughter. And this girl, in her young age, she get involved because I had a stroke, right? And I was training her way before that, and it came very handy and handle every business I did. And we still have multiple businesses. And she got married. Now she works for a publicly traded company, and look at the things she learned, and she is very good about it. And this publicly traded company, instead of investigating her 3-4 months and stay in a line and we'll call you, she got the phone same day and told her to start tomorrow. That tells you the story. They could not believe she has such a deep knowledge of all these things. And this is nothing what I wrote, just to tell you that she knows something at least, and she's still licensed, right? And I have the same licenses. At one point I had a series 63 and 7, right? And I have to disclose because I have many healthcare licenses. I started in 1998. I normally don't talk, has nothing to do with that, but it is also giving me a lot of help trading those stocks, right? So I'm handling a lot of things with my health condition, and I cut it down so many businesses, not because businesses were not doing good, I can't handle it. They got married, 2 of them, and now I cannot handle, right? And I have people, but family help is much better because certain confidential things I cannot have other people disclose, especially the accounting side, And I really don't know how much money I have it. I don't care. And because I had 2 life sentences of living here. I survived 2 times, right? And I'm not done yet. I got too many problems. But if I'm not there, they will carry on. So don't worry about it. And there will be nobody given this technology other than MetaStock. I'm talking openly because I don't trust people. I fight with MetaStock, argue with them. At the end of the day, If it wasn't for Jeff and Kelly, I won't be here. I'm serious. I don't want to go into those things, right? They stood up for me. They fight for me. So I am very loyal and I'm loyalist. I don't forget those things. I could argue at the end of the day, these people are good people, and my mind, I don't change. Some people may not like for whatever reasons, eventually or purposely, but that doesn't make real people their mind change, right? And I'm not changing my mind. And Jeff, is it true or not that I stick with you guys all these years? Please tell these people.
It's true, Peter. It's hard to find the mic.
All right, so we're going to end this option. All right, one thing I will tell you, take my number, WhatsApp message, but you got to register on a site because I'm regulated. I will get in trouble. So you got to agree those disclaimer on a site. Then we'll give you every day on a weekdays, and sometimes I do weekend too, market analysis, which seems to be a lot of professional appreciating because I give them the clues what is going to happen, right? In a way that I still follow the law, right? But this has been going on for more than 25 years. So please go reach out to them. We will give you the Magic Trader site, which is here. You got to register there, otherwise I won't be in a position to help you. And please put your legal name because we do KYC and we are required by law. Otherwise I get violation. So your legal name, first name and last name. A lot of people came from this webinar, Jeff. Unfortunately, I did not give them the access because they don't want to give me their legal name. All right. And they give fictitious name, and I don't want to take chance with regulators.
Oh yeah,
Jeff has more freedom than I do.
Yeah. No, we have to get people's addresses and names for exchange reasons.
Right. I'm happy you are also required to do it, right? Because it's the safety of everybody else. And MetaStock don't sell your database like that without your permission. They don't give people your name. They put me into that spot. On my side, they know only people we ever share information is MetaStock, and you have to agree. Otherwise, MetaStock cannot help you. Which is true. And that's why we want you to go there, right? If you want to go there, because MetaStock will know that you register, so they could reach out to you. Because some people really don't call them, right? Which is not nice. All right, so these are the strategy. I'm just giving you. You could have it screenshot in the recording. So these are not the only one. These are the one I would be using for this strategy. But that doesn't mean you cannot use other strategies. You got to weigh it out, which is applicable. And these are the minimum knowledge you have to have it on your broker platform. Please learn about these things, delta, how it works with the calls and puts. Otherwise, you just listening to whatever the groups you are in, leading the blinds. And we have eyewitness. I told them don't do that, and they ignore Magic Trader training, and there goes, and because everybody's buying calls, right? And Magic Trader is telling he's going to go down. Oh, what they're telling he's going to go to the moon. Yeah. The trader lost money. Not because of Magic Trader, because listening to other people and ignore all Magic Trader, even though they were paying. So Magic Trader is not a blindsided some kind of thing. Please try to understand, follow one system. You could use any product. I'm not stopping you, but don't mix one to another one. Then you blame MetaStock, their salesman, and then they have to give you another. But problem is you. I'm not accusing anybody. I went through all this thing, growing pains. It's easy to blame these, product people, but problem is you. I don't have time, but I want to tell you real time, and I will end it. Jeff, you don't know. I will tell you privately this guy name. He used our first product, FXTA. He was doing great, right? So he went to somewhere because he already knew those, the lines everybody using and all the indicator. I warn him, please do not mix my software with the other one. He promised me, right? And he's very emotional, and he happened to be Indian guy. Do you know he don't listen? In one day he lost $250,000. Can you believe that?
I can believe it. Yeah.
In one day he put 5 standard lot, and he ignored all FXTA and follow those lines because his brother said. I said, who's making decision? Your brother. He blamed it on brother. I said, you promised me you're not going to mix it up. Oh, my brother told me do that. And now he's working as a software engineer somewhere even today. Took away all his dream to be a trader. Please don't do that. I do care for little guys. Please don't do that. Stick with one product. If it doesn't work out, try another one. Not jumping from one to another one. It takes about 6 to 8 months to feel comfortable with any product. If you call MetaStock, oh, I don't like this guy because it's a lot of work. No, he didn't put the time. Listen, I don't want to say on a recorded line, but people around me can say whatever they want to do it, right? I don't have much losing trade. And it is there. I admit, I don't hide anything, right? I show them, I give them my screenshots of the platform as it happening, right? And I don't lose much money. I did more than 1,000 trade on an option scalping. My loss was less than $100. That tells you something. I had a 7 losing trade. How that happened? Because of magic trader. There's nothing magic I know about it. But that doesn't mean the next day I'm going to do that. You got to expect next day I'm going to lose money. So 1,000 trade, I could lose money in a 10th trade and stop trading because my mental got shaken up. How I could guarantee anybody anything? So those things are academic. Those trades are all kind of hypothetical. That doesn't mean you're going to do that. But I took live trade challenges in front of people, right? And I will give you 2 of them. I did, I think, within short period of time. We went all in a trading competition, and broker keeps the record, not me, right? We agreed everybody 100 trades in 1 month, which is everybody can do, right, on a forex side. And the broker keeps the record, not us. They give you the analytical how you did. So I went earlier because I traded. I don't have to wait for 1 month. Jeff, it is true, right? I finished in 20 days, right? Use my time. I did 140 trades. Every single trade was positive, but that doesn't mean nothing. So after a couple months later, I said, let me kick my own head. So I said, listen, I don't care whether you want to come in a competition or not. I'm going to do in front of you. Same results again. I did 140 trades, all positive. It was all kind of scalping, not a swing, but it takes a lot from you, and I'm abusing my own scalp swing method, right? And I am very happy I invented these things. You could do it, but even do 50% of that and be happy. And that doesn't mean you're going to do overnight those things. And I'm not a smart trader. I'm just kind of lousy trader. I've been through a lot. I lost a lot of money. I take full responsibility because I hired those money managers. And I took control of myself. Take a control of you. Don't depend upon any of those guys. I'm serious. They will abuse you. Not all of them, but hopefully you get a right guy. And I wound up firing everybody one by one because I don't trust them anymore. And I have technology. I don't want to hear about, oh, wait for 200, pull back. If it breaks it, then damage is done to your account. Get the hell out of that. And re-enter. I'm not telling moving average is wrong or what. You don't need to wait for, oh, it bought 50. Now we're going to wait until 200. I don't want to hear it. I thought, take a damn loss. They don't want to hear it because now they got to work more. Oh, I'm doing for every client. I don't care what you do for other clients. That is wrong, right? It's more than 5% losses. You want to wait for 20% of my losses? Why don't you do in your account? That's how I talk to them. You are fired. Once I knew this business, I fired so many of them. Most of them, they don't know what they're doing. We don't talk bad. This is the reality. I got fed up. That's why I invented things for me. There was no intention to give it to general public. Look at the time span, how we made a deal maybe a few years ago. They knew it. Kelly and Jeff spent time, whatever was happening. And they have to have also time. So all these things, you got to understand how they're running their business instead of, shiny object syndrome. Stay there, whatever the product you like it. I'm not telling you should like everything, but you have to give yourself times 8 months, 9 months, right? Then you will start seeing some results. And this is not easy business. Everybody will tell you, oh, you could make so much money. I'm not the guy. I'm totally opposite. On your own earnings, so you could do like we all gradually are getting better, right? That's called organic growth, right? And I want you to understand, like MetaStock is more than 40 years in business. You want to take a pride that I'm using this product for 30, 40 years, and I have, financial independent. One thing I will tell you, I don't have that problem since 2008. And I had a lot of problems before because of my health, right? And I never got myself back into that. The biggest gift you could do, and I'm telling anybody in the world, borrow less money and don't buy anything if you can afford it, but be financial independent. This is the biggest, we all have it at one point. That is the biggest gift you're going to give to your family. And my health condition got so bad, I worry if I die tomorrow, my wife will be having hard times. She will be on the street because, you're in a trade and now nobody's handling it. You lost 20, I don't want to talk about millions. You lost $200,000. She had no idea. So you're going to give pain to your family because of your risk taking. So if you lose money you did not borrow, you could leave it, but now you got to pay them money because you borrowed to trade. That's the last thing you want to do. And regulators don't teach us like that. They tell, it says in a law, don't trade things you cannot afford to lose. So why are you doing it? And this lady, Jeff, you don't know the story. What bothered me the most, not what she listened to those garbage people who will give her the advice, right? That money was supposed to go in her rent. I freak out, literally freak out. I said, what are you, nuts? I fight with her like my own money. I said, I'm teaching you, otherwise don't come home tomorrow in my room. And I suspended her a couple of days. I did. I said, I don't need people to be around who really don't have discipline. You gambling, rent money in one of the security, spend $1,500 there. Come on, give me a break. You never do those things. So hopefully you learn some real time, I can't tell you who it was because that's not nice, and but a lot of people knows what happened. And that trader openly in our room, right, under confidentiality, admits that today to give new people the example that I didn't listen to Peter, didn't follow a risk management rule, and I blew up my rent money and put her 6 months behind psychologically. Don't do those things. I could give you a lecture about risk management and all kind of this is the real management. And everybody does that, unfortunately, because they don't know any better. Everybody paint rosy picture in the industry. But this is the reality. And I was a risk taker. Everybody on a Wall Street used to know that Peter made a big boo-boo. I had so much courage. I will not hesitate What about 5 million, 10 million? I will take that kind of risk in a real time. One wrong move can wipe you out. That's the best thing I could tell you. And I was wrong. I was wrong. When I start prop trading, in front of my wife also used to trade with me, they throw me out. They said, we don't want you to be here anymore because you don't have discipline. We don't need you to be here. How do you feel about it? They throw you out in front of your wife. And he said, if you want to come back, you only going to do paper trading, and then we will tell you. 3 months later, I said, now you could trade. Then I asked him how many shares, minimum, which was 100. So they made me go through 100 shares at a time and did not let me trade more than 100 shares. How do you feel about it? My own money, they will not let me trade because the manager says, you have no idea about the discipline. You don't belong here. You're a bad news, Peter. I don't want people to listen that they could do the same thing. Throw me out. Can you believe that? You will think, oh, you insulted in front of. I understood that. That was wrong, admitted, and put your tail behind between two legs and listen to the professional. And my life changed. I become most risk-oriented guy. I don't want to take unnecessary risk. My life changed because of that. Same thing with my doctor. She threw me out too because I don't have time to go to gym. And I cannot thank her enough. She saved my life. And my wife was there too. So second time it happened. So I take a chance, right? No more chances. Got to go to doctor. I check everything out. All right, Jeff, it's all yours. And hopefully I took time, but I wanted to say a few things to people. And this is the table, is a part of this. So Jeff, you could start situating. So it will be recorded. So this is that table. It took me three, four hours to do it. And this will teach you, self-teaching you in the money and out of the money, because you're going to do this thing every trade. So I thought that I give it back to all the traders without any kind of string attached.
Okay. All right.
All right, Jeff, really appreciate you gave me some time, and hopefully it can be helpful to people so they don't blow up their account. And again, I have to tell you, Scott, Kelly, and yourself very much thank you, because you're always there for me. We argue, but you know, it is for good argument. I push people, right, to beyond their limit to do.
All right. Yeah, we did have one quick question for you, Brad, Peter. If you're looking at charts on the daily basis, Brad wanted to know if you wait till the end of the bar. So
okay. No, I don't wait for the end of the bar. So when you start seeing at the open yellow bar, right? And I will give you a clue. A day before, there will be some yellow bar or sign is already happening on a 60-minute. So at the end of the day, if you want to look at it, look at the 60-minute, and those stocks are going to go up next day 90 times 100, unless some news came out and knock everybody down, right? But I don't trade at the end of the day, right? I don't wait for end of the day. However, I make decision to stay in a trade at the end of the day. Some strategy, right? I wait until the end of the day, right, on a liquid stock, because the games on institutions, heavy game. Suppose in the morning I open interest, say like 2,000, and all of a sudden it become 4,000. I will not know until the end of the day. So now I will buy additional or take another position. And good thing here at that time, also I learn, because I use volume to filter it out, those new stocks will be showing up at that time because they meet that high volume criteria. You got my point? Suppose I put, it has to be 2 million shares. In the morning, it's not going to do 2 million shares because on average, it does only 1 million. However, I picked up that in the last 30 minutes to 1 hour, those yellow bar there, and those are the best for instant gratification next day. And I get out the next day in the first hour, and I make more money in a percentage. But you need to do your homework, Jeff.
Okay.
So
all right.
the clue, I'm giving you a clue. If you see on a smaller time frame during the daytime, bunch of yellow bar, turquoise bar, right? Those are the signs you're going to wind up with a 60-minute or 120 or 240 on at the end of the day. And it is also true, sometimes there are more confirmation after 1 o'clock than in the morning.
Okay, perfect. Thank you, Peter.
No, you could ask any question you want any given time, because I get.
Oh, oops, sorry.
Hey, sure.
All right, cool. That was the question that we had. Craig said, I like your charts. I'm going to talk a little bit more about how to get them. But before I do that, I want to say thank you for coming in and spending some time with us on a Saturday.
Listen, you told me, for you and Kelly, I will go out of my way, right? And it was tough because I had a already scheduled thing, right? And you guys also jump it through the roof for me. I seen you guys, right? So there's nothing big thing I did.
Okay. Well, thank you, Peter. Appreciate it.
Thanks to you and your staff and everybody who stayed longer here. Hopefully I contribute some knowledge.
Okay. Thank you. Okay. Craig says, I like the charts. I wanted to just tie in and talk a little bit about how to get the offer. And I wanted to kind of just show a couple things here real quick in terms of how this is all put together. So right here, this is the chart. One of the things that I have talked about liking all week is the commentaries. And I think Peter did a really good job of putting together the Magic Trader commentary. He spent a lot of time talking about the ingredients and kind of how those get together and how those are put together. I love kind of when these dashboard views kind of come into play where you can kind of see where everything is kind of in place. And the commentary does a really, really good job of kind of breaking that out and putting it together for you. Craig also asked in the chart, how big is the basket of symbols that you can start with? And really, I think that's one of the things that MetaStock does a really good job is, if I want to go in and find the stocks that kind of have an opportunity, I can go ahead and run a scan for that. And I know everybody's kind of familiar with scanning. We've talked about it for a while, but if I come in here and we go to the scanner, I can scan for all kinds of things with the Magic Trader. There's tons of scans. I have a listing of how much is actually available in the scanner. But if I just want to find stocks that kind of have a match for the 5 ingredients, I simply select this right here, and then I can select any instrument that you want. And I love the coverage that's available with London Stock Exchange Group. For example, like if you're watching this in India and you want to use Magic Trader in India, we have the Indian stocks. We have the European stocks. We have Middle Eastern. The data coverage that they have covers almost 300 different exchanges. It includes Forex, futures, whatever it is, and that'll so you can scan basically whatever you want. I've got a list that's already selected in here. We do have lists of optionable stocks. We do have lists of all the ETFs. I've already selected the Dow Jones, the S&P 500, and the NASDAQ 100. I'll just go ahead and start that as an exploration. And I just basically think, and it'll just go through and kind of tell me the ones that have a recommendation. So very, very well designed add-on. Peter did a really good job with it, and very well integrated into what I think are the powerful tools of MetaStock. So let me go ahead and kind of just get rid of some of the extra questions here. I want to talk about a few of the things that are part, we had kind of mentioned a little bit about the educational room, the Magic Trader educational room. Here's just kind of a small list of what gets talked about in that room. And this is it's called the Consulting Educational Alert Room. They meet a few times a week. It includes messages through WhatsApp through Peter. And I'm certainly not going to read this whole list, but you can kind of get an idea. Oh, I forgot to turn my camera on. You can kind of get an idea of what gets talked about. One of the things that Peter said that I think is kind of important to kind of just mention is the people that kind of start to go to this room are really, really loyal to it. They absolutely love it. The feedback that we get out of this room is great. So this is the educational room. These are kind of the things that are talked about by it or in it. And normally that's a room that's about $299 per month. We have a special I'm going to talk to you about. There's also a Facebook group that you can go to, and there's a big extended glossary that you can get on magictrader.com. So to talk a little bit about the indicators that are included, or the expert, or the sorry, it's been a really long week. I'm surprised I can still speak at this time. But to talk about kind of how big this add-on is, there's 58 indicators, 47 explorations, 2 expert advisors, a bunch of templates. And when I started to use Magic Trader, the product was finished. What I actually sat down and did was read the manual. And that's primarily how I learned. And I'll tell you, it's extensive in terms of kind of breaking things down and boiling them down for them. It was really, really well put together. So I showed you the commentary window. You get all the highlights, the catalysts, all that kind of stuff. And that's the normal cost for Magic Trader is $199 per month. So I also want to talk a little bit about the fundamentals of Magic Trader. This was a 4-part training series that Peter put together after we released Magic Trader. And in it, he kind of goes through and kind of, you can see the training modules. It was a 4-module thing. These modules were extremely extensive, and you can kind of see what he talked about and that kind of stuff. But he really went into a lot of details about how to use that. And this will be included in the package that we kind of talk about. The normal retail price for it is $9.99. So if you kind of put those together, the Magic Trader Elite, that would be $199. For 3 months, it'd be $597. The Option Trader Equity Alert Package, or the Alert Room, would be $299, so about $897. The 20 hours of fundamental recordings would be $999. So the value here is about $24.93. And what we want to do is kind of give you a really good incentive to get started. And so what we're going to do is we're going to give you 3 months of Magic Trader, 3 months of the Alert Room, 3 months of the fundamental training. And instead of being $24.93, we're going to go ahead and do that at $9.97. Now, this is an offer you need to contact us for. The way that it's kind of put together, you want to give us a call or go online and talk to us on Sales Chat. So you can give us a call at 800-882-3040. You can go to metastock.com/saleschat. And either way, you can do that. This offer is available for a week. So it's available for a week starting 11/16. So anyway, get in touch with us, metastock.com/saleschat, 800-882-3040. And you can go ahead and get this there. Dakari says, and Dakari is one of those people that have been in the room for a while and just has been and absolutely loves rooms. But he says, this is not even the surface of all the things that he covers in depth during the room. So let me go ahead and put that to the chat. Dakari, thank you for being a MetaStock user for so long. So there you go. A couple of things I'm just going to leave this up for a second because I'm just going to talk. Peter talked about how much he loved 19. I knew he would. I just love 19 too. And I really appreciate all the work Peter's done over the years. But if you haven't gotten 19, or if you haven't picked up a copy of 19, if you haven't upgraded yet, I mean, he just talked about a few things and we didn't even mention him. But when we talk about everything that went into 19, it takes us an hour and a half to talk about everything that went into 19, but really functional stuff. You know, it's so funny that he kind of mentions the global cursor, and I remember us talking about that as a feature that should be designed and exactly how much. Just to kind of give you an idea, generally the time it took us to go from 18, which included a brand new charting engine, to 19 was about two and a half years, and the whole focus was to make a brand new container with better workflows. And so we've talked a lot about what's included in 19, but it's a massive upgrade. If you haven't picked up 19, you should. Give us a call, 800-882-3040, metastock.com/saleschat. We've got conference promotions around that as well. So this is great. Give it a go. Again, the feedback that we get from the users of this, they love that room, and the retention is really good. Go give it a shot. metastock.com/saleschat or 800-882-3040. So did you answer some questions? I thought I saw a question pop in. Okay, no. Okay, very good. All right. I do want to kind of go through and mention all of the sponsors again real quick, and then we'll wrap up. It's been a long week. It's been great. I've really appreciated all of you being here with me for a week. That was fun. I do want to say, if you haven't got your income generator report, go to tradethirsty.com/free. You can do that right now. I'll wait. Anyway, we do appreciate Trade Thirsty for being such a long-term partner of ours. If you haven't yet, join our new forum, our new community site. You can learn about the markets. You can live market chat with people. It's a community of traders helping traders. You can join at tradersforum.com. Want to say thank you to Stocks and Commodities Magazine. You can go to www.traders.com. Stocks and Commodities. Oh wait, this is the wrong graphic, but I have it memorized. Stocks and Commodities, we really appreciate. They've sponsored all of our events since we started them 10, 11 years ago, 12 years ago, actually. And it's a great magazine. I mean, you just sat through a bunch of webinars and sessions and lessons, and you know how important it is to get educated about the market. It's really nice to get a magazine delivered to you every month that kind of has different articles and different techniques and different thoughts. So www.traders.com. Of course, I don't have the sites here. AAII, thank you again, AAII.com. Great, well-respected company, huge reputation. It started the nonprofit in 1978, AAII.com. And of course, CMT, the CMT Association, is another well-respected, huge organization, another nonprofit, and can really help if you're looking to have assets under management and all that kind of stuff. So a few things as we wrap up the day, if you want to take advantage of any of the specials that we've talked about through the day or through the week, go to metastock.com/conf promo. Go to metastock.com/sales chat. Give us a call, 800-882-3040. I want to say thank you to the sponsors. I want to thank you, all the speakers and friends and the people that have come in here to talk. I want to say thank you to all of you guys that are using MetaStock already. We really appreciate it. And all of you that came. You know, it's a big, long event. There's a lot of really good information. I feel like I learn a bunch every time I do this, and I've done them quite a bit now. So I hope it was a good event for you. I hope you enjoyed it. I hope you, but I really appreciate your being here for it. And so with all that being said.
Jeff, before you go.
Yes, sir.
I want to put out a great thank you to you for all the hours you put in leading up to this event and all this week. I don't think people really understand how hard it is to do this for 40 plus hours all week long. And I really think you did a great job. And also really quick, just to let you know, the survey from today said that 40% of everyone that attended today has seen all 6 days.
Wow, yeah.
Which is dedication, and thank you so much for that. Having said that, I will let you close, my friend.
Greg, do you want to come back tomorrow for a bonus day?
I'm in. Let's do it. Bonus.
I appreciate that, Greg. Thanks. Thank you again. Stay healthy. Stay well. We'll see you at the next one. Bye, guys.